Good morning, Ace. It is March 27th. We're going to be streaming stocks, options, futures, the stock market crash, among other things, some technical analysis. Look at whatever floats down the river today. BBBY, GME, these banks rebounding. LC, sub up, like up, comment down. Happy money sticks around. I get set up here. Share the stream on Twitter and on Discord. Got a little morning yaz. Hope you guys had a good weekend. Morning, Tasty. Great weekend. Good to hear. Bursting at the seams. I love all the bot phrases. Bursting at the seams. Alright, I shared that and I retweeted the stream. Thanks guys for your support. So there was some bank propping news over the weekend. We're getting some pre-market runs from some of them. SI is one. I think First Republic has the biggest, maybe gap up 30%. So we'll see. Mohammed, good morning. Good morning, Barnstormer. Good morning, John Parker. You guys had a good weekend. Right. GME got a little gap up this morning. I don't think there was any news, but I think that was up like 1.5% at some point. Credit Suisse and UBS are among the banks under scrutiny into whether financial professionals helped Russian oligarchs evade sanctions. The statement you never said in 2020. Deposits at U.S. commercial banks fell $98 billion between March 8th and March 15th. But they rose $67 billion at the 25 largest banks. The difference between monthly mortgage payments and rents hasn't been this big since 2006, around the peak of the housing bubble that led to the great financial crisis. Ferrari CEO says self-driving car is not for Ferrari. Treasury yields climb. 2-year move nears 20 basis points. That gas dropped down. Freaking that gas. Morning, Weeby. Morning, Will. I'm Gillied. Thank you, Ace, for your gifted sub. Man, it's early and you're starting out strong. It's pre-market. It's pre-market, Ace. You're already dropping them. Thank you, sir. I'm all gillied up. That's a free membership. You gotta click on it. Do it. Do it. Morning, Donero. No, there's no investor meeting today. Nope. Today is the record date for shareholders. Record date for shareholders. Or a potential to vote on a reverse split. Gifting sub. Trying to get it, you gotta maybe link your account with the Google account. Not sure why someone wouldn't support a reverse split. I had my questions at first, I guess, but it seems like the right play. I am concerned. Concerned with nat gas. It seems to have felt demand destruction more than oil at this point for some reason. So I'm hoping there's a rally before we fully get a collapse. I mean, this thing's at low lows. I gotta look at another way to look at the chart. Just look at UNG, but is there another way to look at oil or natural gas prices? Because according to UNG, this is the lowest it's ever been. But I don't think that's true. And of course, futures only give me so much time. GME's up a quarter. We've got about 5 minutes to open. Market's got a pretty big gap up here, up over 0.5%. Bank bailout weekend. Twitter's offering new equity grants to staff that will start to vest after 6 months. EBA chef warns about supposed to be chief, maybe warns about very big risk in financial system. BOE Governor Andrew Bailey has said the global banking system is more robust and better capitalized than it was in 2008, making a repeat of the financial crisis 15 years ago unlikely. China's rebound from COVID offers triple benefits for U.S. businesses despite chilly relations between the two countries. Triple benefits. Traders are pricing recession with the yield curve with its steepest monthly increase since October 2008. Chart for all you charties. Invite here. If you guys haven't joined our Discord, it's free to join. You're welcome. I'm gonna do an all caps and demanding demanding verbiage to get you to join. I mean, reservations is typically reverse split is a bad sign for a stock. Mechanically, it shouldn't matter or shouldn't necessarily change a stock, but it usually is the signs of going down. And I wasn't sure. I think, what was I thinking? All the other thoughts. I think that was the main thing. It's the thought that counts. Ace, did you figure out if you still get charged if no one claims it? I didn't sell Silvergate. No, I told you. I was telling you you're an idiot. I didn't tell you you're an idiot. I said, I'm gonna hold this thing. It held up strong into Friday. Remember I told you, I mean, you may be wasted, I don't know. I told you it's gonna gap up. Like, no way this thing's gapping up. Not really, I mean, it's a little gap up, but rejected yesterday's high, so we'll see if it breaks that. I haven't closed out. I bought here. I was chasing a bit, but I thought I'm early enough on the chase that it might just keep going. I think it was like here that I bought, and then I rebought some more, averaged in on this VWAP bounce. So it was close to my cost basis at close. I don't think I'm gonna add any more though. I'm good for now. That guy seems to have dissipated. Oh! Yeah, I don't know what's going on with that gas. I'm kind of sucky though. Ah, we suck again. 1 minute or so to market open. Get on a computer then, Gilead. Happy morning, MT. Yeah, they should give it out, that's true. Yeah, actually, what the heck? I thought it does automatically give those out. I think it would if people had gifting enabled. Yeah, no, you cut small losses on it. Makes sense, I guess. It was broke through VWAP, so you can see the reservation holding it, especially over a weekend. Holding over weekends right now seems super risky. No, because I've seen it before, and when gifted subs, it automatically gives them out to people. I'm wondering if they have to have, we don't have anybody in there who has gifting enabled or something. It should, maybe it's something I have to do? I'm not sure. I don't think so. Alright, market is open. GME is red. Let's see. Some levels here on SPY, even though I'm not able to trade it. Thank you, Nat Gas. Do a high. Thanks, Donaro. Donaro just adding up that queue. Thank you for that gifted sub, sir. I think we've got 2 in the hopper now if anybody wants free memberships. Yeah, maybe it just needs to come from someone else. Alright, GME's coming down a little bit. SPY's pretty much flat so far. BBBY's flat, it's up 1% or so. Like everything's taking a little while to wake up here. Silvergate's opening up 12.5%. MGAM up 5. Yang, this is the bear ETF, the China bear ETF, 3 times leveraged. Chinese stocks going down. How's Owl's Baba play? Consolidating. Bad. You just sold. He got it. He got Don's. Just
the ego on you.
Thank you again, Don. Thanks, Ace. case, I guess you're gonna just have to be more enticing with your gifted subs for people to take it, or gifted memberships. Okay, I wanted to actually get some maybe GME leaps at open. I'm thinking this run get an earnings continuation, and we're still waiting on that on their 10K, which I feel like it could very well be bearish news, or at least cause a sell-off in the stock price, but maybe it'll be something that causes it to rip. Be down 1% there. BBY came down, break even. The price action on BBY on Friday was good. It didn't quite hold up that well, but the fact that it closed higher than the close the day before and pre-market was pretty strong. We'll see. See if we start holding some higher levels here. Try by 300 memberships. Report or block? Carnival beat on their earnings. Interesting. We're listening to some Carnival stuff on DD. GME's down 1.6 there. Logged into this account. See here. Buy holding up. Yeah, we might even get some T+2 action on GME. I'm just gonna stick with January's for now. January's at the money. Like that. One of my concerns, of course, with it is if SPY just starts to crash, takes GME with it, it could be a long time before another big move up. But honestly, SPY looks bullish. This inverted head and shoulders, bullish MACD. I think we're going to keep rallying for whatever reason. So that's good for GME. Yeah, put an order out there for another leap on GME. SPY's moving up here. BBY is coming down 0.4. Silvergate's come down a little bit. See if you can hold some pre-market levels at all. Roku's up 6.3. Waiting for AMC to do its usual pop. Spire's up 6.3. AMC's at 4.5. The usual is usual until it's unusual. She's buying. Buy's moving up here. Pre-market high was 398.92. Have to get some higher levels than that. Kind of still in this ascending channel here too, huh? Jimmy's coming down 2.5%. Interesting. It's a pretty big sell-off actually on Jimmy relative to the market. Showed kind of a double bottom here Thursday and Friday on that 22 area. Kind of a ways down from here. Maybe it'll retest it. Not sure it'll make it that far down though. If it breaks that, probably, I mean, we're just going to start filling that gap more, I suppose. Friday, the pump on Friday was kind of interesting. Super League's up 6. BBY's down 1.8. It's at that level. What is this? Is 80 level again. Happens fast. Holy smokes. Happens fast. Some calls. What's up, Wizard King? Good morning. Guten Morgen. A little bit of a bounce. Super League 6%. Tesla's up 3. Jeez, almost back to 200. Huh. Bank of America's up 3.4. The MSGM's down 8. Loop Media's down 8. Gen 1's down 6. Box D's down 5. Burrs is down 5. SPY's still in this range. 0.5%. Crime. Give me 2.5. BBY right at that 80-ish level, 80 cents. I did open, there's a bounce on BBBY. I did open up some one strike puts on Bed Bath. Opened up 20 of those as cash secured puts, short puts. And then my 1.5 cash secured puts, I actually like it assigned, so I do have more shares now. I couldn't get a good rollover. It was like wasn't even worth it. Had to go out multiple weeks and same strike, and it was just such small credit. Yeah, Box D, I know. Yeah, we were watching it. It's never look at the news. Don said they bankruptcy. Oh, SPY just broke through that level to the downside. It's breaking down here a bit. Bankruptcy news, and it rallied, and then bankruptcy news also dropped it. So it's definitely volatile. SPY are up 10.25. BBY shares 81 cost average. All right. You selling covered calls on it? Or just holding. A is 8%. Thing's got a nice looking chart. Silvergate's giving back some. Only up 4% now. I like this. Of course, if it goes bankrupt, it's going to go down. But as far as the chart's concerned, we got that engulfing candle on Friday. Ton of volume. And just a lot of upside, I guess. Coming from 200 and something down to $1 in a short amount of time. Actually, not too short. I guess this thing's been selling off for a while. That's interesting. I wasn't even thinking about the time frame on that. So 2021 was the high. This is kind of where it was in that like 55 range before that the bank started defaulting, I think. It was kind of at its low already. It's in your Roth. There you go. I've got some in my Roth also. GME at 2.3. Kala's going up. It's almost 11%. Phase 9.5. Roku's up 5. Carnival reports highest volume of bookings for any quarter. Holy smokes, what? It's not a great reaction from that news yet. FRC is up 24%. Holding pretty good from its pre-market rally. Buy with a green candle there. Look at what's going on. Dallas Fed Manufacturing Index is at 1030, and then some bond auctions at 11:30, and then Jefferson speaks. First Citizen not planning to restructure securities book now. Buy with a green candle. GME following suit, down 1.5. BBBY is holding that 80-cent level so far. They had a wick up to back up to 82 cents. There's almost an equally as big green candle on the SPY now. HPCO up 10%. Wheels up. No. Getty's up 4%. Workhorse 2.5, Mullen 2.5, Dutch Bros 2.5. Jeez, Rad just keeps getting cheaper and cheaper. MicroStrategy has bought 6,455 bitcoins for 150 million, with an average of 23,000 per bitcoin. Traders are betting on a hawkish Fed as May hike odds revert to 50%. Interesting. Euro at session high versus dollar, last up 0.23% to $1.07. Yes, they have tons of debt. Absolutely. It's actually kind of crazy. They've weathered COVID. They're still fighting. Evatol's little green there. Is that what I saw? Mm-hmm. Evatol 3.5. Yeah, this chart looks like it's getting some momentum to the upside. Might be a good long on EVTL here. I put a stop loss on my SI. I don't have to look at it so much. Thinking maybe if it breaks, probably if it breaks this level, it's $1.60, I'll close it out. Stop limit on quote. Is that what it's called on E-Trade? Went done on futures and it looks different. Okay. I think I've got a stop limit on there. Kala, 15% and climbing. Rallying there, 17% on Kala. 17.5. Yeah, Evatel's it's looking not bad. Kind of rejected that 50, but yeah, we've got our MACD, we've got our over our 9 moving average. Let's see. It doesn't usually do this kind of longer sustained rally. You know, we've had the crossovers, it's been very quick and then short-lived, so something a little new. Unless if you're looking like back here, which repeating back here, that'd be a big move coming. So even here, it was just very quick. There was no signs of it starting to rally. SPY moving up here, high of the day. Testing that pre-market high. 398.92. EVTL up 4.5. Phase up 8%. Kala get halted? Oh, things just volatile. Big red candle on Kala. Thanks guys for your likes. Appreciate it. Hope you had a good weekend. At the last week in March here at 22 likes. Well done. Well done. GME also up a little bit. Still down 1.3%. BBBY still holding above that 80 cents. Silver gets 6.5.
Education Day at TD Ameritrade.
Thank you, Oliver. It's good to be here.
As we've been going through this bank panic, we've seen the market really pivot hard. Seems like around expectations, we get interest rate cuts later on in the year, but a little pushback from that from the Fed chair. So what are we to do right now? What stands out to you on your models and your strategy that looks like an opportunity?
Well, Oliver, I think last time I was on, we talked about the fact that we've been adding to technology in the fourth quarter, and we added somewhat to consumer discretionary as well.
That's right.
In other words, raising the risk of our portfolio, knowing that we're going into probably a recession later this year, but certainly an economic slowdown. You really want to be focused on the companies that can deliver earnings during those periods. And so that's experienced management teams. Silicon Valley Bank, if it taught us nothing else, was that bad management can cause irreparable damage, and that's exactly what happened. So we want to own the companies that can navigate, that have a history of being able to deliver in slowing economic environments. And then we've also
BBBY flushed through that 80 cents.
and reinforced our
Down 2.5 now.
And the metals and miners. That
On Friday, we did hit a low of 77 cents, which was also a new multi. No, it wasn't. 76. There it is.
Nancy, when we look at
higher lows,
the stocks that'll do well in a
higher
slowdown,
lows.
I'm wondering how last year fits
Oh, and
into
we still
that analysis.
Never gotten back to that 75 cents at pre-market there. We got this low, this
last
low.
Year we had inflation. Inflation
another higher low
ultimately
here.
is what's slowing down the economy, it seems like, as the Fed's got a hike. So Are the companies that did well last year have they not demonstrated themselves as slowdown resilient, or was that too specific of an inflation trade
The
last year?
Tradings has said that the takeover credit
No,
squeeze
I
by
think you're right. I
UBS
think
prevents
some
a
of the
full-fledged
energy
banking
sectors
crisis with
that
significant
you would,
consequences
expect
for
to do well
Switzerland's
defensively,
public
utilities and REITs have rolled over pretty materially,
finances.
and the consumer
Elon Musk has
staples
said that
group
he
has
saw a
held
path
up
to
pretty
a
well.
250
But
billion
those stocks, if you look at
billion
just
valuation of
any
Twitter.
valuation metric, we look at relative dividend yield, and they're in our sell ranges. If you look at PE ratios, these stocks are trading at lofty valuations. So we have been taking money from that group. We were overweight consumer staples. We're now just slightly
Silvergate moving
underweight
up.
the sector, and we're
Big
going
green
to continue
candle
to
up
trim those in order
18%.
to add back
Getting
some
back to its
additional risk in
pre-market
the areas
highs,
that we
maybe.
think are important, things like materials,
Just over
technology,
$1.
and industrials, which have done quite well this year.
Got it. And as far
SPY
as the
rejecting
energy
a new
goes, as
high,
you mentioned,
literally right
you're
on
more
that
interested in
pre-market high.
stuff that's going to help kind of
Right at that
develop a
level.
sustainable move away from
just in a tight range there.
the fossil fuel world.
See if Silvergate can
Yes,
break
but
this.
but we are overweight energy. So our clean
Break
energy
the high from
infrastructure
Friday.
strategy is actually hedged with old energy
Oh, wow,
company.
interesting.
And then in
$2, $2.50 maybe next,
equity
around
income
right around
strategy,
there. We got
we
259
are
as a
overweight the sector as
potential
well. So I mean,
resistance.
if you just look at a name like EOG Resources, Oliver, not only do they yield
Got some
at
good volume on Silvergate there,
3.1%
too.
yield,
The
they're
volume on
paying
Friday was
special
crazy.
dividends, to the tune in the last year
141
of
million.
$6, I think, and 80
Free
cents.
float on this is 27
per share.
million.
So those special dividends
And what did you say,
contribute
Don? It's like
significantly to
pretty much
total
all
return.
held by
And
insiders,
we
that say
think
on here?
energy gets one
Think
more
so.
rally, and then we'll be trimming back. And we were trimming, by the way, in the fourth quarter. We've
Short
been
interest
adding
is
back
over
in the first quarter.
100%.
What does that framework for an energy comeback look like to you? Is that like a relief that maybe we're not going to, the economy's not going to hit the wall quite as fast as
Silvergate,
we were
almost
thinking the last
20%
couple
up.
of weeks? Market really punished classical energy in particular in that moment. So if we get a little relief there, does that kind of bring the old energy trade back for a little bit?
I think it does.
Bay's
I
up
think
13%.
what really matters is that there's not enough supply, and so
That brings
if
back
that
energy?
continues, and that's, by the way, the same thing with
Please
the
bring it
metals that
back.
are
Smile, the
driving
red
planetary
candle.
decarbonization.
Pretty big red
We're not
candle.
allowing new mines to come and play.
And engulfing
into
on the
play.
5 minutes, so
a lot
think
of
we're
this
coming
is supply
down,
driven. There's a little bit
starting
of
our
the China
trajectory
reopening that I
down.
think will provide a kicker, and then seasonality as people get in their cars and head to the beach. So. We like the group because they're so
Wonder how
cheap
that-
and they're just
how
keeping
Silvergate
us
and
at
stuff
high
moves
levels of income.
versus the SPY.
And those levels of income are growing, which is the best hedge against inflation. I mean, we moved our clients back into bonds last summer, but that's coupon and it doesn't grow. Dividends grow.
Like that. Right now, it seems like some depositors at banks are maybe rethinking the appeal of the coupon, but that's a separate conversation. Nancy, in your outlook right now, we've got a couple parts of the framework. What about the kind of risks, or where do you think at this point maybe there is potential for surprise? Obviously, this bank thing caught a lot of people off guard. Does that make you think about larger, deeper recession as kind of being the pure fear, a bank-specific blowup? Is there anything that is kind of the wild card in your outlook?
Yeah, I think that's right. Or an exogenous geopolitical risk, right? I mean, I don't hear anyone talking about Iran, which is quite concerning, how close they are to a nuclear weapon and the tension in our relationship with them. So I set that aside and say, look, I mean, sentiment is bearish. It's as bearish as it's ever been from the retail investor. Institutions are on the sidelines in terms of their allocations to equities. So I think that's a positive risk. And then the other risk that we all know about is that earnings are going to be negative in the first quarter. And I think the market has already discounted that. If that's worse, or if, things ratchet up with China or in the Middle East, then I think, you add to your defense holdings. And by defense, I mean defense companies that make bombs and other things of war. So we are, I think the biggest concern too in the coming months is there's going to be a lack of positive data. So we might continue to rally into March. April is a seasonally good month historically. May is where we might enter into some trouble. And by the way, seasonality can change on a dime, so it could be April as well. I think we get one more sell-off and then we take off, but I don't think we test the October lows.
Got it. Okay. So the geopolitical as the potential outlier. a surprise. Nancy, thanks for taking us through it. Really good stuff.
Thanks, Oliver. Good to be with you.
Absolutely appreciate that. I got Tom in studio. He's got a tech trade and he's got an energy trade for us. Let's start with Adobe, Tom, as we're kind of looking at some of the company specifics here after its earnings. It's got a nice little 2-week bounce going on.
Yeah, but if you've looked at what tech's done so far this year, NASDAQ's up, what, 17% so far this year. So it's outperforming, maybe getting a little bit ahead of itself, but it seems like that area that a lot of investors are putting their money into, maybe they don't have that exposure to any potential credit crisis or banking sector downturn here. So with Adobe, stock's up about 12% so far this year, so it's had a decent run. It hasn't maybe caught up with some of the other big cap tech names. So I looked at a strategy here that takes advantage of maybe some bullish sentiment, but at the same time giving yourself a little bit of a cushion to the downside using the option market, because this is a high-priced stock, above $375 a share. So I looked at selling an out-of-the-money put vertical here to take that neutral to bullish stance. Went out to the April series, so 25 days till expiration. Selling the 370 strike put, and then buying the 360 strike put because I want to stay risk-defined in this this trade. If you sell that $10 wide neutral to bullish call put vertical, collect 320 credit. That's what you can make on this. So that means you've got risk of almost $700 per spread, but you also have that cushion to the downside of that break even, which is 366.80 to the downside. It's about 60% probability that that break even will be out of the money at expiration, which is what you want on this type of trade. So it's more of a conservative approach here, taking advantage of implied volatility levels while still giving yourself a cushion to the downside, even if you have that bullish stance.
Okay, got it. So selling some downside.
Yeah.
Downside spread.
Downside spread.
Okay.
Vertical
so
spread.
A bullish outlook.
Yeah.
Stable to bullish. Now, as far as energy goes, Nancy's got a pretty interesting strategy that kind of uses some of the old school energy to hedge the new school. EOG is one that generally kind of in that new school, but trading near almost 52-week lows. Why does this one stand out to you?
Well, because it has pulled back. Remember, crude oil got down to about $64 a barrel last week. It's bounced about $6 here, back above $70 a barrel. That'll help. Nancy mentioned the 3.1% dividend yield on this one and the special dividends that they've been paying due to the fact that they're pretty cash flow positive at this point. So they're rewarding shareholders. So I looked at a strategy in here. You mentioned the pullback that we've seen. It's just off the 7-month lows that we hit just a couple weeks ago. It did hit an all-time high of 148, so down significantly from those highs. So I looked at a covered call strategy where I get to take advantage of that dividend yield of 3.1%, and then I get to sell an out-of-the-money call to the upside to offset some of the risks on this stock buy, basically. You're buying for every 100 shares of stock you buy in EOG, you sell one. And in this example, I used the April 110 strike call just out of the money to the upside. You pay roughly about a debit of 103.80. It might be a little bit lower now. Stock has pulled back from the session highs. But if you pay 103.80, there's your break even also. So you're buying the shares at a discount because you're selling that upside call. And then as you get closer to April expiration in 3.5 weeks, you'll be able to buy that call back, roll it to another weekly or monthly series, collecting credits on that while still holding the shares, which allows you to collect that dividend and any special dividends that they announce. But if you expect maybe some of these energy names like EOG to rebound over the next month, this might be the strategy. It's longer dated as you can continue to roll that short call, but this might be the way to play it if you want to capture some yield.
Got it. Okay. And EOG, one of those that's faded pretty hard in the old school. Misspoke there at Campa Energy. Thanks, Tom. All right, we're in hour 2. When we come back, we'll get a little Tesla update, keeping an eye on strength in the market generally today that is still concentrated in the Russell, but the NASDAQ had a nice little wake up there since the bell rang. Got Apple positive. Tesla's up 3% though. Let's talk about the numbers.
Let's walk through how to
Morning, big hugs. Sorry, guys, getting a little sidetracked here. Silvergate's ripping up 30%. Woo! Morning, Jan. Bed Bath did fall through that support, but looks like it bounced back up. Now it's using that 80 cents as a resistance temporarily. SPY had a big wick down there. GME moved down also. It's down 3.6 now, so we'll see if it bounces on that level again. A ways to go there, but yeah, SI is pretty risky still for sure. But good indicator showing a reversal of sorts. And then any little news catalyst like we got over the weekend of some banks getting bailed out and whatnot. And you've got a good catalyst for some short squeeze in here. Even on Friday, it would trade 141 million. The float's only 27 million. So it broke that pre-market high, broke Friday's high. I see 25.90 as the next resistance on it.
This morning, and banks are doing quite well, but we've got a big rally in Tesla that is helping some of the tech and growth themes. We'll talk about some of their numbers here in a moment with Kevin Grain. We're going to get an update on the energy and crude trade in the commodity world with Ben. Then we're going to talk some ETFs with a focus on gold, as the precious metal is down this morning, but just below a 3-year high. Gold's been a big time winner here. All right, let's bring in Ben. Joining me, a host of futures, back for an update here. Since we spoke, the Russell faded a little bit. NASDAQ caught up a little bit. Generally, we're just higher here this morning.
Yeah, higher.
Evital 7%.
Right? I mean, for the most part, holding on to the gains that we saw Friday, a big move up, and so kind of a lackluster session to begin.
Anyways,
trading
this looks pretty nice.
I think all things said,
this might turn to
kind of
something
reflection of what we talked about earlier in the show, Oliver. A market that's waiting for more information, but also a market that's managed to shrug off some of the concerns, some of the uncertainty, and is focused on the positive.
Okay, so we're grinding here. We're going to talk some Tesla in the NASDAQ and some of the growth company strength there. Let's talk some commodities. As I mentioned, gold's down. That's another one we're going to get hit later on. Let's talk energy at the moment here. Bouncing crude, bouncing RBOB, generally across the board with the exception of natty gas.
Yeah, a couple things to focus on here, Oliver. In terms of the banks, it seems like the crisis we discussed earlier in the show, crisis versus panic ultimately, and trying to define that. That might be fixed, or at least in terms of the short term. The headlines suggesting that. We're seeing a reflection of that in the indices. But, inflation isn't. And we talked about what could tip the scales earlier in the show. I mentioned the 10-year to 4.3% and beyond if we were to see that regained. I think if we were to continue to see crude oil and RBOB inch higher, that would also tip the scales one way or the other. Again, kind of in terms of what I was talking about earlier, a market that's waiting for more information. You've got the NASDAQ, which is the only one of the four majors holding above the 50-day moving average. The Russell, the only one of the four majors holding below the 200. So I think, again, a reflection of that sort of market participants waiting for more information. And crude at 70, a similar situation. You can see the high conviction trade to the downside that we saw, a breakout, but limited follow through, and just kind of hovering around 70 right now. So again, this feeds directly into the inflation narrative, and this is also kind of reminiscent of a market, similar fashion, one that's kind of like I like to think of it as a pot.
I just don't range from those two candles this morning. Rejected the new high. Didn't make a new low.
I say that, Oliver. Last week was the busiest week in crude oil trading
at Bath now.
At the CME
over
since
that 80
March
cents.
6th. So they saw trading volume across all CME crude oil products at almost 8.8 million. That was up 1.76. Now, they talk about this obviously being driven by the uncertainty in the global banking system. But
Base,
the one thing that stood out
14%.
to me, crude weekly options reached a single
SI
day
kind
volume
of
record,
bounced on that
20,182.
2 level or so as
They
support,
record,
which is what you
individual
want to see.
participation trading WTI weeklies
2-1
per
level.
month in 2023. And the reason I say all of this is take a look at volatility. The WTI monthly options, so the implied volatility suggesting 51% on March 17th. Keep in mind, that's been range bound, 33 to around 36% for the previous month. So this all suggesting here that we could see some further upside momentum feeding into those inflation concerns. Ultimately, that would be a headwind for stocks, I think. But also the reason I say this, Oliver, is look at RBOB. It's the green line here. You can see crude broke down, right? There was a lot of uncertainty in terms of geopolitics was weighing on it. We had a fair amount of uncertainty in terms of the banks, the impact that's going to have, a higher rate environment for longer, what that means in terms of growth. But look at how RBOB hung in there pretty well. I was talking about how over the weekend I was driving around. I mean, prices at the pump haven't really come off that much. They were record highs up around $5, Oliver, last summer, but we're still hanging out around $4.50. So, I mean, point being here, this is something to keep an eye on, because while the banking situation may have been temporarily resolved,
28% on
tip the scales
Silvergate
one way or the
there.
other. If we get that inflation
high.
fear coming back into play,
It is still early though, so you're
create
just
a major
probably getting
headwind for
some
stocks, and it could bring that
day
TMX
traders and stuff
back to that
jumping in on it.
4.3% level, the area that we talked about
Increasing the
earlier in the show.
volatility.
RBOB looking a lot more stable than crude itself.
Absolutely.
I think speaks to kind of
So I
the
want to see
nature
kind of the
the
same
inflationary pressures
same
that
things we saw on
remain,
Friday, where it
gas
holds
at
up
the
certain
pump,
levels
et
after
cetera,
certain
whereas crude
times
kind
of
of
day.
is this tradable instrument that people
Show strength
generally
in the-
use
in
more
the
of
rally
like a global
continuing.
health proxy in some ways. We're worried about global health.
Volume
we
I
get
think
that
picked up though.
breakdown,
Look at these
but maybe
5-minute
that was just
candles.
a short-term
6.9
technical
million,
event, whereas RBOB
4.5,
says crude's likely
5,
more come back into that
3.
range above
That's
70
crazy.
bucks.
It also makes me think about the breakdown that we saw in terms of crude oil, RBOB, and
Sure,
diesel.
they've been pretty well linked.
They were. Diesel,
So-
if you remember, earlier
Yeah, look
this
at
year,
that
late
volume
last
already.
year, was not participating to the downside to the same
the
extent.
first
Again,
hour,
kind of feeding into
hasn't
the
even been an
inflation
hour,
area,
and already
different
got
little
31
pockets
million.
and corners and kind of,
Wow.
areas of the economy, but definitely has been wiped out.
Maybe
That's
just
for
draw
sure.
some new
All right, I
levels.
like it. Okay, a little bit of a difference here where gas is trading and where crude oil is. Thanks, Ben, for the look at the chart. Let's talk moving beyond the crude oil gas trade with a little Tesla update from our man Kevin Grain.
Tesla.
So let's discuss this rally here this morning. Kevin, Tesla up 3%. Story behind it?
3.5 down on
You're actually
GME.
seeing Barclays being a little bit positive when it comes to the numbers that we will see on Sunday. We should see them on Sunday. So every month,
Tesla
Tesla
gap up
provides
and
their production numbers, and usually it's on the 2nd of every month here. And what we are
like
actually looking at when
30%.
it comes to Barclays, they do believe that they will have a
I wanna even
modest
sell some
beat
calls in
when
this,
it comes
maybe.
to deliveries in Q1, and they will have production. They do believe production is
Maybe
still
it's
going to outpace deliveries at the
freaking
moment. But they do
beautiful.
believe that the Q1 deliveries are going to come in at 425,000 units. The street's estimates right now is at 420,000
Yeah, is this a short
units,
week?
and they do believe that at
No,
the
no,
end of the
no,
day, we may see a little
April.
bit
It's
weakening
next
demand
week.
because of the delivery numbers in themselves, but they do believe that the production numbers will
Evatol
show some
grinding
form of
up,
strength, and
man.
they could possibly add to additional cuts for Tesla when it comes to prices. They do believe that Tesla does have the ability
let's
to
just keep
weather the
off
storm here if they were able to cut prices again, really trying to undercut their competition. So they keep their overweight rating on the stock, and they actually have
My
their
name is
price
Zelda.
target
I
of
come from Zelda.
$275. So that's why we're
Shop at
seeing a little
Walmart.
bit of a move to the upside here, as well as tech overall really trying to perform today and rebound.
All right. So
How will you
pretty
know real
positive,
sentiment?
tone out,
You
maybe
don't.
giving Tesla a little
SI
extra
ripping
juice.
36%
But yeah,
now.
flip positive and
237.
Netflix still on its
What's
big,
up, Dennis?
bounce. So there are some of its mega cat peers
Roku
moving in the right
9%,
direction.
EVTL 8.5.
275, certainly not the loftiest
See
price
what happens
target
at
we've ever seen,
25.90
but
on
it's,
SI
would
here.
still mark a big rally, so it never hurts to have bulls kind of reiterate their case here. And timing-wise, looking for like the next big update from them. Do we expect something?
just be patient
soon?
on selling
What's our
covered calls,
timeline
this
here
thing.
for trying to assess,
Doesn't
if
look
the
like
analyst
it's
is right or not?
slowing down yet.
It should be this Sunday on the 2nd of April, they should be able to provide their production numbers. I haven't seen a
You didn't put that $5 grand to GME at least, right?
Outside of the 2nd of every month. So we are expecting it to be on Sunday. And that's when we're going to get those delivery numbers. Obviously, we'll see that impacted on the equity markets the next day here. But we'll probably get a couple of other analysts trying to provide their own price targets when it comes to the stock. And we are approaching a really key resistance level here. The $220 level is going to be a significant area of resistance here, Oliver. There's a lot of options activity both on the call side and put side that are interested in that level. So I would suspect that a lot of traders are trying to target that for either potentially an entry point, you know, a little bit of a breakout type of trade, or an exiting type of trade in order to try to buy back at a lower price here. So that's kind of the action that we've been seeing, not only here in Tesla, but some of the other automakers.
Silvergate 40% there.
Activity in the options paper, as we did
some
see
day trading
pretty
going on here.
sell off over the last 2 weeks.
Okay, Tesla hanging on close to $200 right now. Thanks, Kevin Green, for the look here. April 2nd.
Good to see all this volume staying in it too. This is
let's do some trading and
more than Friday's volume at this hour. All the volume came in on it though from that 10:30 to 11:30. So.
Yeah, I'm keeping an eye on
But
tech.
today
and we
maybe
had
it's
a
all
nice
coming in at 10:30.
breakout of this flag pattern to the upside. If you look at technology, it's leading the way once again. We're 20% off the top and we're 20% off the bottom, but it has been the leader in the last couple of weeks and months. And let's look at the big boys. Microsoft, Apple, doing very, very well.
Solid start here
GME
this
almost
week.
4% down.
You think this market needs to get some more
That's good, at least,
confirmation
then you're
that
fine.
it's past the bank situation, or it's a short week? Is that 4 days?
BBBY.
Is that a holiday shortened week there?
A little above that 80-cent level actually.
4,000. Just keep an eye on
Okay.
4,000 in the S&P. And we had
Guys,
another positive
always
week last week.
fired
So
up.
that's 2 positive weeks. So let's remember, we're significantly above where the bank crisis, I guess if you want to call it a crisis,
I'm going with panic.
it was for a couple of banks. Yeah, I would say a panic where that started. But let's look at where the VIX is. Realize the VIX is unchanged in the last 52 weeks. We're down
VIX
at the
is broken,
20 level.
manipulated.
I mean, you got to look at the price. I know we always talk about emotion and concerns. And my friend Ben, I'll get back to tech. I have to address my friend Ben. Crude prices being low are not both bad and good for stocks. And I think that's the way he's positioning. And
new high there,
I look
I
at that as
think.
very much a positive. The Fed's got,
Yep,
got
new
the
high,
results they wanted. They got crude oil down, and
41%.
it's remained down on the mat, and that's the #1 inflation driver. We haven't seen any bump in that just yet.
Sure. Well, he's looking if the thing rips back. You know, if WTS starts surging, catches up to our bob a little bit. But I guess you'd argue we got some breathing room.
We got a lot of room, and even at 100, let's remember where we were from 2011
Might
to
start scaling into
2015.
some covered calls in this
Crude
thing,
oil was
actually.
above 100, and the stock market went absolutely positively straight up.
Probably
so it's about
2.5
perspective.
strike, I guess.
All right, let's get back to tech.
Let's talk about it.
The NDX has been stuck between 11,000 and 13,000 for 6 months now. We're right at that 13,000. A breakout of that sends tech back to 15,000. So I like the setup. The stock that I'm looking at here is Juniper's trading around 33. It's seen some leverage buying, and it's been
Dude,
kind of
that's
stuck
crazy,
in
that
a
premium.
range here between 25 and 35. And then here in the last few
I don't want
months,
to just
between
wait. Just do
30
one at a time.
and
We're going to do
35,
5
the
at a
breakout
time.
range sends it to about 40.
But I think I'll just do one at a time.
So 33 right now, trying to get to
Do
a multi-month high.
13 of them?
You're buying some in-the-money calls, letting this thing run.
That's the deal. So I'm looking at the 30 calls. 30 is also the 200-day moving average. So I'm looking at the July 30 calls are trading for about 4. So they're $3 in the money. They got they have about 4 months of time for development. And if we get to that 40 level, this option's going to gain 100%.
I'm moving up here.
I also want to mention something about this stock. It made its lows on October 13th.
You're getting a little bounce
that was
with
the same low in the S&P. And that's when we saw bullish
BBBY still
divergence in
holding
both.
up that
Meaning we saw
80
new lows, but not new highs in implied volatility. And
These
it's been straight up
18.5%.
since. So
Evital's still going. This thing could wake up.
And I love the risk reward in this setup.
Okay.
It moves slow, but
Buying the
it
30 strike, looking
gaps.
for Juniper to keep it going. And I guess if we get through that
9.4%,
$34 level,
so
the 38 high seems like it's kind of close. It's not too
looking
far
nice
away.
on EBTL.
Right. Yeah, that's what I'm looking for. So again, it's about risk reward. It's harder to identify good risk-reward situations after the market has made a major run.
First red candle we're seeing on SI in the
has been leading the way.
I don't know,
We
5,
talked
10,
about
15,
I think
20,
Cisco,
25, 30,
Intel,
35 minutes.
You know, a lot of these stocks are starting to nudge towards
A little
the
consolidation
multi-month
up here,
top.
maybe.
And I don't know what the catalyst is, and it doesn't really matter what the catalyst is, but whatever causes an upside breakout is going to benefit everybody.
Okay. Looking for breakout, looking for highs in
Wonder
Juniper.
why this line is actually
All
here,
right, to
not
Alan
higher.
Uckman. Appreciate it, sir. Thanks for the macro.
Eyes moving down here, new
thoughts
low
as
on the
well.
day. Just
Chief
flush
market
with that
strategist,
support.
bullseyeoption.com. Looking for some upside in a networking play that has been trying to push to multi-month levels here. When we come back, let's talk about an asset that's trading at multi-year highs. We'll discuss gold.
Oh,
with an
and it's
ETF
waking back
Pro.
up.
Taking a look at a few
Nothing to
ways to
see
trade
here.
the asset as it's been on the run here.
I'm not sure if there's particularly good news. All the banks are getting kind of a pump because there was some more basically bailout news. So like BY broke through that 80-cent support. There might have been something on here that I was reading. Let's see. Okay, again, the prepayment of 205 million in secured loan. That could be part of the catalyst. MicroStrategy pays off Silvergate loan. Ah, so MicroStrategy, huh? What's their ticker again? I always forget. MSTR, that's right. On Happy Money Book? Nice. Never even heard of it. Ins is up 4%. Even told a little pullback. SI holding strong here. Like to see it hold some levels at like 12 by 12 o'clock or so. Doing one covered call at a time on it. 101 calls BBY. Nice. What date? I actually bought some calls in BBY last week. I used the premium from the cash secured puts to buy calls. It felt smart because it kept going up, but we'll see if that still feels smart in a couple days. I just bouncing. Oh, you left your earbuds at home. You have to borrow colleagues or something. Win 10K. Mid-April. If that's enough time. April monthlies. Guess that's what I got too. Yeah, I got the same thing. So that's why I hope it's enough time. GME new low, down 4.4%. BBBY below the 80 cents. April 21st. So not the. Wait, those are those the monthlies? Oh yeah, those are the monthlies. Yeah, that's what I got too. Monthlies. Silvergate, little red candle, double doji, some consolidation. Good to see. Want to see it hold some of those these highs. How much will I make? You might not make anything. You know how a call contract works? It's a contract to buy shares at the strike price. So if it goes to $1, that contract doesn't have any worth if it goes there on the expiration date. Because why would someone want to pay for a contract to buy a stock at the price it's at? Unless it's in the future. Today, if it goes today, it'll go up a little bit. Yeah, maybe 30%, 40%, depends on how fast it goes up. The way option pricing works is kind of fluid and dynamic. It's not like buying shares where it goes up and this is what it's worth. So depends on velocity, depends on a lot of stuff. But the IV is really high on the options, so you know, there's not a whole lot left on them.
Alternatives?
Yeah, I mean, as a firm, Franklin Templeton has spent a lot of times investing in the alternative space, and we think between digital assets, crypto, real estate, debt, et cetera, there's a real important a role for that within an investor's portfolio. And as we're thinking through, at least from my lens on the ETF team, is always constantly thinking which of those can we provide investors within the ETF vehicle. And so, we did responsible gold. We have a style premium fund that has some long short holdings, and we're constantly at the whiteboard trying to think what other one of those diversifying asset classes we could fit in.
The long short, tell me about that. Tell me about what's most popular. Do you see one of these as catching the most flows right now?
GME kind of flushing here a little bit.
So from a flows perspective, we've had a lot of interest into our rules-based index strategy. So not exactly alternatives, but just having more conversations about index construction beyond market cap. So now we're talking
my January contract.
Low vol, high dividend. We're talking
kind of okay
rules-based where there's a focus on
quality.
Dividend.
It's all doing pretty good up here. I like it.
Give me that low cost, low tracking, but do it with the tilt
BBBY
towards
flushed.
as an example.
It's now down 3.5% or so.
So that's been from a flow perspective,
daily low.
Our biggest asset gatherers. But yeah, for the investors who want to have that a 5%, 10% into alternatives from their portfolio.
They borrow a lot this morning.
Yeah, that long short fund is
borrow fee on GME is down to 18%.
Got it. Okay, David, thanks for taking us through it.
Yeah, like $500,000
for us to consider. Appreciate the walkthrough.
Of course.
That's what I borrow.
Absolutely, David Mann, head of ETF Capital Markets. FGLD,
data.
responsibly sourced gold fund. Bars backing the fund.
And this float, that's not even a whole lot anymore.
Highs right now. A lot of pressure on the precious metal. David joins us from Franklin Templeton Investments.
GME down almost 5%. Wow.
Assets. Chartmasters standing by for an interesting batch of companies. We're going to take a look at Corning Glass, Wingstop, and United Rentals. Quite a diverse mix
Wingstop's a good
of
money
charts
maker, I
here
think.
this morning, as we're going to pour over a few of the notes out from sell-side analysts, and also watching the market try to hold on to gains, but shaved some off since the open.
But let's just say it's
Up
crime.
on
So
Bitcoin down
much,
about
so much more
2%
simple.
right now.
Why try and complicate it? Ooh, a little riff in there. About to make a new low on the day. Thanks for your likes, guys. I appreciate it. We're at 27. There we go. Turca, is it rallying? GME hit 2270. Never mind. APDN up 7.5. Chart might have some hope. Phase 12.8 still consolidating above VWAP. HPCO kind of with a little breakout there. SPY new low on the day. We've got a bearish MACD on the 5-minute, red under the 9. It's filling this gap. It's doing it. Okay, the current share price to the shareholders. Whatever it was acquired for, that's where it went up to and traded at. I think he paid over the share price it was trading at. So it rallied up, but it was volatile up and down. Definitely still profitable. Sure enough. SI consolidating nice up here again. See if it bounces on VWAP. So far it's holding a level above VWAP though. Bullish on monetizing like YouTube, 100%, yeah. Silvergate wick down there to VWAP. Holding so far.
Of course, generally one of the more kind of reliable supply
just past
chain
10:30, so
for Apple.
Yep, and I'm glad you mentioned Glass.
Day trader
and
volume.
that name there for those
Got
maybe unfamiliar
30
with this one.
minutes to an hour.
Technologies,
Still pretty high volume.
It's primarily what they're focused on making. But analysts at Deutsche Bank, Matthew Nicknam is actually the analyst that made an update here. And what we got is an upgrade to buy from hold, Oliver, with a price target raised from 35 to 38. So sort of a subtle adjustment of that price target. But as you see, it's not necessarily the most volatile of names. It does obviously ebb and flow. But
didn't sell any covered calls yet on the side.
Upgrade to buy, playing a nearly 20%
I think
total
we'll start getting
return.
some filled
That's
though.
the key word, total return.
Obviously, that's going to factor in things that are shareholder-friendly activities from the company as well. Looking at this company, this analyst believes that quarter one results are likely to mark the bottom for both Corning's revenues and non-GAAP earnings. So seeing things turning the corner on that front, as well as improvements in forward periods for via positive inflections in key segments, including display and optical, which make up 55% of the company's sales. So that's what we're primarily thinking about. This company is primarily how they make their money as well.
No labs.
To say it lightly, just basically things they're turning the corner.
All right, turning the Corning.
Yep, up 10%.
Okay. Rick Ducat, that was bad. Let's talk about the chart here. The first thing that
Just
stands
a week
out to
below
me is
VWAP.
when Alex says ebb and flow, it's
Roku
a lot
holding
of
up
flow,
above it,
basically,
above
within
VWAP,
like a 4-point range on this thing.
Yeah, and there was some pretty important price action that happened recently.
BBTL still up 5.3%. SPY moving
downward
down.
Candle here. It took us through all three of our moving
Got a
averages
line
that we
for
follow.
support
Our yellow
here.
21-day, orange 63-day, purple 252-day exponential moving averages. It also took us below our volume profile point of control, which is the area of heaviest trading. So that was some significant technical damage here that was happening with that particular
Next level down
candle
after
here.
that.
On Friday, things were also not looking too great. We bounced off the lower end of this channel. We were trading near the lower end of this range that we've been in, this downward sloping channel here. But today it's looking like a kind of a reversal of fortunes here. We were looking a little bit better earlier today. We were above that yellow 21-day EMA. We're slipping a bit now. RSI was near that 50 midline there, looking like it was about to cross into the bullish side of the spectrum here.
Yeah.
So, kind of, it'll be interesting to see where we can wind up today. Heading into the close, if we can retake
GME
that
down almost
EMA,
5%.
that would really be important for the bulls here.
SPY at the low of the day.
In terms of support and resistance, the 63-day EMA comes in around 34. So if we can fight our way back through the 21-day, that would be the next point to watch, that orange line. To the downside, the 3150 level looked interesting to me, because that was around the point where we bottomed out back here. That was looking like it was a lot more in reach before the market opened here, but that would be a significant drop-off if we were to hit that point there.
Okay. This is one that it has been kind of drifting downward, but to your point, finding a little support here.
Broke through that level I had. Still filling this gap. Looks like that's probably going to get filled. Down to 395.75.
36 or so over the past year. I will say, though, that is kind of a good thing,
2.18%.
generally speaking, because even though it's
S&P.
down, it hasn't been a big decliner. I think that the chart's been pretty well established, so folks kind of know levels at which they're going to have good odds to get a bounce. It kind of seems like we're getting close to one of those right now. All right, so I can kind of guess where the analysis is coming from.
Where it looks like it's bouncing back from that short report.
Let's talk industrials.
4%.
We discussed the cut to
Kathy Wood bought the dip on this.
With Jeff. This one on URI is kind of similar tone.
Yeah, and this one has, at least from the analyst at Baird, they're the analyst issuing this downgrade in the company to underperform from neutral price target cut, significant from 425 down to 300. Oliver, to me, applies a little bit more macro thinking to this
SI is holding above VWAP for now.
Quite an interesting report.
Which is also right at that support from yesterday, Friday's highs.
Equipment makers. It sees a slowdown in 2024 in the U.S. non-residential construction. That was already on the horizon. It was already a part of their view, now being just increasingly likely. They talk about this being because of the regional bank turmoil and their sizable participation in commercial construction lending. So that is one thing. We talk about credit tightening and those lending standards potentially going up. This is potentially one of those fallouts, at least according to Baird. In rental, Baird says equipment supply will increase as demand.
We didn't get any news over the weekend from Bed Bath or GME.
Pricing power impacts for a company like United Rental, which of course
GME has until
rentals and specialty. And they expect, as a result
third
of all
for their
this,
10K?
multiple compression. So
that's what we heard.
They see it to being going into the low end of its valuation range over the last years, as sentiment around this space is deteriorating rapidly.
Wow, a pretty negative note. Pretty rough stuff. And the chart has reflected some of this, I think, in the short term. You're still happy with this on the year and in the past year, Rick, but it's losing quite a bit of it pretty quickly.
Yeah, rough note, but a rough chart, too, even before we had the note here.
What's wrong with United Rentals?
Pretty good up until about 3 weeks ago, and we hit these these yearly highs near the 482 level. Since then, we broke through this upward sloping trend line that we saw here, that light yellow line. And then we transitioned into a very steep downward sloping trend
we don't
line
know.
here,
they haven't set a date yet
line here.
for
Since
the
then,
vote.
It's taken us below our two shorter
Today's the only date they gave, and
averages,
this
our
today was the recall day.
exponential
Not
moving
recall, but
averages,
record
both
date.
of which are noticeably
So,
trending down now here.
they're recording all
that's not a good
shareholders that
sign for the
are
overall
holding
trend
shares
for
today.
the bulls to be looking at here.
Or we're holding
So
shares
more recently, though, we're
Thursday,
getting a little
'cause
bit
it
of
takes 2 days
relief,
to
kind of
settle.
moving sideways beyond that sharp, steep
yeah, if you
line.
bought
And
it,
remember, the steeper the
basically,
trend line, the less sustainable
yeah,
it is.
recording
So
that,
it can only go
and
down for so
then
long
they will
before
have,
there has to be some
the
kind
information to
of
send
give back
out.
there.
RSI plunged.
Yeah, it did, and we were in the
Proxy vote,
oversold area as well. There,
if they
we
decide
kind of
to
made our way back out, but
do
we're
that.
still quite low. Still definitely
But still no
tilted toward
date
the
for
bearish
a
side of
vote.
the
Still
spectrum here.
no
360
date for a split
to
or
the
anything like that.
downside. This green dashed line was about
come
where
today,
we
though.
had
They
the
could-
top
they
of
could
a
email
range
out.
over here. That seems like that could be a place worth noting to the
possible.
downside. Just below that,
Jimmy
then
with
we've
the
got our
green
purple
candle.
252-day EMA
Yum.
coming in at around 354.
What-
to the
what
upside,
advertisement
403. This red dashed line, kind of the high we made in
that?
this little range that we established recently. Beyond that, we've got the confluence of our two shorter-term moving averages near 409.
Are they
They're
waiting this
coming in
long?
right on top of each
Who
other,
be
so that
waiting
could
this
be
long
another
for
place
what?
to watch.
Okay. Really interesting chart. Does seem like it just quickly moved down to this 360. And given how important that level was, there's some hope here that maybe this thing stabilizes. Fact, it's only down 0.75% after such a negative note Alex just took us through. Then I think there is some credibility maybe to the technical support.
Maybe. It's already gotten kind of beaten up pretty bad, too, before the note even came out there. But the 360 level did look like we saw a bit of consolidation right there. It's also, we got a pretty big volume node just below it, too. So that lines up pretty well with our 252-day EMA. So there could be definitely some support in the horizon here.
Longer term, you've still got the higher lows as well, and the higher high technically. So, I mean, there's some hope here, it seems like, for intermediate longer-term bulls.
Yeah, you got to wait and see if it gets a bounce. I mean, that's the only thing. I mean, support is not a guarantee.
Okay. 360 needs to hold. 360 breaks on your eye, stock's in a little bit of trouble. That would be making then lower lows, and suddenly the whole kind of analysis changes a little bit. But this morning it's hanging in there. Okay, interesting. The last one, actually, I think is the most surprising here. A bearish note on Wingstop, which is like, don't mess with Wingstop, man. The stock has been killing it. So what are they saying? What's the issue?
Yeah, this is an interesting one. First off, I'd like to say the best part about Wingstop in the sense is it's pretty self-explanatory as to what they do. They don't have any hidden brands. You know what you're getting with Wingstop.
You stop, you get wings.
Yeah, you're operating in the restaurant space under the Wingstop brand. Downgraded to underperform from hold at Jefferies. Andy Barish is the analyst over there. Price target unchanged at 160. And this is really one that I think is interesting because it's essentially a valuation call. I'll go through some of the points here. First off, they talk about the stock's valuation reflecting an overly optimistic view of near-term same-store sales momentum. They talk about the street estimates being fair, but that the upside appears to be limited, including the second half of 2023, where the setup around decelerating trends also adds risk to the multiple. And effectively, you sum it all up, what does that mean when you see a chart that's gone up and to the right? Well, it means that the risk-reward could be skewed now to the downside if you're starting to see some of those general trends and feelings about the company turn sour.
So this is definitely more a note of like, hey, this thing needs to take a breather here. Nothing's really bad. It's just gone ahead of itself.
I would say so, but I mean, they do it to underperform from hold. I think they started from that spot as, hey, to see where this thing goes. Now it's more of, given its recent run higher, given what everyone feels about it, where's the positive surprise here, Oliver? That's the question. So really what sends stocks higher is that they're outperforming expectations. If there's not really any room for outperformance, what's to send it higher? That leaves only room for underperformance,
well, this guy stands
and even just in line.
I don't know. I mean, the chart kind of looks like Darden Restaurants also doing well. 160, the price target?
160.
160. Okay. All right. So that's kind of a bearish note then. $23 lower from here. It doesn't look like the biggest
profitable.
move, though, Rick. You've got 160 here in the blue.
Yeah, only about 12%.
Don't move a whole lot of money, but
it would
pretty
take
good
us
for a
through
little
some,
chain
technical
restaurant, I'd
support,
say.
though. It would be a bit of a,
Cap's
a journey
$5.5
to get
billion
there
on
here.
that. Wow.
I thought the chart, looked pretty decent from a bullish perspective here. We've got an upside
got some
breakout
finger?
from earnings here that we had
Finger
from
motion.
this rising wedge type pattern. More recently, that was kind of a preview
2.8,
of
yeah.
the price action that happened
Yeah,
more
we were watching
recently
that
within
one
the past couple of weeks, breaking above
Last
that
week a
upper
bit.
trend line.
Yeah, the chart
there.
looks nice.
So you've
Got
got kind of a mixed picture now here
the
because
crossover
on
here on
one
the
hand,
MACD, green over
we
the
did
9.
not make our new
Volume
intraday
picking up
highs
with
here,
all that.
but on the other hand, we made new closing highs. I think that's
this
more
RSI
important here. The
divergence.
closing stuff is more important than the intraday stuff. Also,
Oh, yeah.
tops can be less orderly
Ain't
than the
bad.
lows here. Like when something gets too low, people are like, okay, there's value here. We're willing to step
the
in and
Nikkei and
buy
then a
during
rip.
a high when things are kind of going out of control. It's
Don't
much
like
less
this engulfing candle on the daily,
easy to get
the
a
downside,
feel
but-
on what's happening with the price action.
Sure.
So
Price action
looking
shows
at
it's
RSI here,
not
I
really
suppose you could make
phasing
the
it.
argument that we were seeing a little bit of
Silvergate breaking the VWAP.
a stagnation
No,
here in the
still
highs of the
consolidating over
RSI
it.
here, but we are still
Very
making
easy.
some upside
Well, starting to
progress
move
here.
down below
Look
it.
to see if we can crack into
Considering
that overbought
selling
area
if we break
as well
the
as break
VWAP.
above that 193 mark. 193,
kinda like the
194 was
hold,
about where we
though.
saw the highs there. To the downside, this area looked interesting because it was the confluence of our 21-day EMA with our upper trend line. The 176 mark could be an interesting place to find some support there.
Okay. The RSI, I like this one on this chart because it really tells us that this is kind of a steady as she goes stock, climbing higher. A little
That
bit
is
of
an
a reaction
RSI
to
divergence on
this,
the hourly,
bearish note
unfortunately, but
with the company down about 80 bips. Right
hourly
now,
doesn't
but
hold a
for
whole
the
lot of
most
weight
part,
with
the chart still intact.
RSI
Seems pretty good,
divergences.
and not like blistering hot. So the technical analysis here pushes back a little bit on the way the analyst was characterizing how fast moving the stock was, especially when I compare it to Darden Restaurants, which we just looked at as well, real strong. There's nothing here that says it's like red hot. It's just kind of cruising higher, and especially compared to its peers, nothing too abnormal.
SPY
Thanks,
flushing
Rick, for
down
charts.
here.
Thanks, Alex, for the rundown of the
New
notes.
low on the day.
When we come back, let's get a developing story on a Chinese stock from Jenny. Then get our panel in here and talk about a little bit of a fade.
I might just sell covered calls on Silvergate. Yeah, I might just sell like pretty aggressive covered calls even. GME with a little bounce. Without the SPY's help. Evitol given lots of time for an entry. Almost 40% of shares in iShares US real estate ETF are sold short, the highest proportion since June. IYR? Biden administration expected to make final offer to Mexico negotiators, hoping to break energy dispute stalemate. Biden administration to request USMCA dispute panel if Mexico rejects final offer. I don't even know what's going on there. SPY with a green candle now. GME rallying up a bit here, back to VWAP. BBBY just sitting at the lows. Silvergate hanging out just above VWAP. Working from home has created a boom in weekday golfing. Loans to Silicon Valley Bank officers, directors, and principal shareholders, as well as other insiders, more than tripled to $219 million in the final months of SVB. That's a record amount of loans issued to insiders going back at least 2 decades. Very interesting. Opening the credit spigot. Silicon Valley Bank increased lending to insiders ahead of its collapse. It's a genius plan. GME moved back up to BWAP, BBBY, little 5-minute green candle potentially. Silvergate, hold on. Hold the line. Rent hikes for U.S. single-family homes eased for a 9th straight month in January, pushing the annual rate to the lowest since spring of 2021. Zero shares in BBY. Yeah, GME did show some nice bouncing there, even before the SPY. Oh, Silvergate. You can do it. Alright, next rip I'm gonna sell some calls. Don't like that RSI divergence. That's kind of but it is kind of bull flagging and maybe doing it again. They don't have to cover shorts. They just showed that they borrowed them. But we'll probably see a pop today anyways on BBBY, as we do almost every day. Talk to AMLO. Alright, thanks. Appreciate it. Tell him he needs to shut off all nat gas operations. Maybe blow up a couple plants too. That'd be terrific. Yeah, I'm still in BY. I'm waiting to average in, if I do average in at all, until it shows its reversal sign, and that might be with 100% gap up, so it's kind of what I'm willing to take though at this point. Thanks for your gifted membership, Ace. I appreciate it. Do it, do it. Human ShopRite, got it. Snagged it. Green Gang, rise up. Say no to Grays. Thank you, Ace, man. Legend. So Silvergate's moving up on VWAP. That looks nice. Yeah, so if BY's bottoming, then you could start scaling in.
The ego on you.
And it might be. It looks like it is maybe the last 6 trading days or so. Looks like it's starting to actually form a bottom. No reversal signs yet, but at least kind of not dropping and just bottoming. One of us, one of us. SPY's moving up a bit. Didn't fully fill that gap yet, but now it's breaking a little resistance to the upside. I guess it makes sense that BBY would hold above the 75 cents because the price threshold, or no, actually the price threshold was $1, but they got rid of that. The 75 cent number is where the holder of the warrant starts to lose money, I think. So makes sense it holds above that, for their case at least. So this might be the best deal you're gonna get, is around the 75 cent, 80 cent range. You know, that might be a hard floor, basically.
Almost a year. I mean, think about it, Oliver. We're a year into this cycle now, and not only have we gotten 475 or 450 basis points of hikes from the Fed, we got a little bit of quantitative tightening, before last month. But I think the other effect that we're seeing now is the credit tightening from the banks. That's that second leg, right? We talk about there's a lag in how long it takes for the tightening and the monetary policy to make its way through the cycle. The second leg is starting now. And that's where the banks are going to start maybe holding on to some of those assets. They're going to be a little bit more discerning on the loans that they make.
To sell one covered call.
On the other hand, you're also going to have consumers, and you're going to have the demand side kind of come in a little bit too. I mean, think about it, Oliver.
Might just move up the strikes and do one at a time as we move up.
And you're looking at a 2-year yield that
keep them all around 2.5.
The volatility explode in the last couple weeks. You have no idea what you're going to be pricing some of those expenditures at. So you're taking out loans. You're going to say, maybe I'll wait a little bit on this one.
Now.
The same thing you're starting to see right now with durable goods. Those are coming in.
$30 in premium.
That second half, that lag is starting to kick in right now. And that could be that recessionary leg.
When you talk about
the
short-term yield, it brings me back to our conversation with Mike Purvis this morning. And the idea that the folks that are in some of these banks that had problems are now kind of rethinking
just
where they want to put their money and why just stick it to earn nothing when you can, get in 3 months more than you can in 10 years right now. That's the whole kind of gist of the inverted curve. Do you think that's one of the takeaways from this situation, Nick, as a risk manager too? Do people realize that, hey, there's too much risk and nothing for it? When I just have it parked, cash?
Cash secured puts.
Yeah,
greener.
Real awareness.
We got SI up top now.
Event, right? I think if you hadn't heard about this,
2-strike
banks having
April
issues with liquidity
contracts.
You probably
annualized return is 625%, which is insane.
To your
next one up there is the other bank, FRC.
You kind of start looking at it, and everybody digs a little deeper and says, "Hey,
both these are about 15% out of the money."
It's not. I can earn
that's what money
versus,
means.
0.1%.
AMC is the next one up there. AMC is IB. It's like BBBY. It never comes down.
In some of these instruments, CDs and things like that. So there is a real.
There's another bank, PACW, Zim, the shipping
The
company. That's pretty high. Interesting.
So that shape of the curve and the speed
that covers
of
earnings or something. I don't know why that IB would be so high.
But don't forget
Mara,
that every company, every sector, when you most need to raise capital,
those might be good cash good puts plays if you like those for the long term.
The debt rating agencies and all of this is out there, but this is
all happened
or the banks,
the firms up here.
From a historical perspective, I think there's been more money
moving
and
banks,
into things like money markets out of some of these banks more quickly than we've ever really seen in history. So you go back to the financial crisis, it happened, but the technology is so different now. Things are happening so quickly. I think it's really it's a really great real time and I think longer term kind of tabletop discussion in liquidity and risk management, because it's just happening differently as it always does than it did in the past. And I think moving money out so quickly is a challenge. And when firms need to raise capital, it's the hardest to do it. And I think you're going to continue to see conversations about other institutions that are a little less stable. The Fed's doing everything they can right now, but the tools don't necessarily fit the times as well as they did in 08. And I think that still has to shake out. And the shape of the curve, to your point, doesn't
continue to climb
make
back
it
up
easy
to
right
BBY.
now for that to
BBY
evolve.
small green candles.
I will say that when banks rally on days like today and rates go higher, as bonds sell off, it does seem like, Joe, we are kind of riding the ship in some ways, where we see the cyclical stocks and the banks move higher and bonds go down. At least there's some kind of silver lining in that being a more traditional relationship.
So two things I would look at this week for that, Oliver. Remember, it is the end of the quarter. You're going to see some rebalancing. I mean, the tech outperformance is kind of staggering. I think it's when you look at the difference between what the Nasdaq did versus the S&P, a 10-year spread. Basically, the last time we saw returns like that, where you had the outperformance. The second thing I would look at is also there's starting to really be a decline in the breadth in this overall market. You've really seen the big caps, the mega caps kind of outpunch their weight, if you will. They've led the rally. They might be taking a little bit of breather. So you might start to see some of those names. It's become a crowded trade. you might start to see some of those names kind of roll into some of the underperformers as we head into the next quarter.
I think we'll probably see new highs on it today.
Thanks for the heads up, Joe.
GME coming down a little bit. Below VWAP.
That's it for MTL. Trading 360 with Nicole Petalides is up next. I'm Oliver Rennie.
Nicole Petalides. How to say her name. ECB Centeno. We have tools for whatever it takes. Action for banks. We are ready to counter any threat to transmission. GME and SPY come down a little bit there. Silvergate's still holding up. Bed Bath's still down 3%. ECB's Centeno. We have tools for whatever it takes. Action for banks. Got it. Got it. Got the tools for the banks. Indeed has said that recently has seen more employers dial back their recruiting efforts with job postings on the site. Oh, that's the name of a company, Indeed, I guess. Which have fallen by 11% since the start of 2023. Over 40% of professionals have used ChatGPT at work. Centeno says size of rate hike increment will depend on data, but clear we need to preserve stability. Tech jobs are still paying $120 an hour despite mass layoffs. Highs moving down here, getting back to the lows. Up 0.18% still though. An interesting chart. Average credit card debt per generation. Silent? They were called the silent generation? Silent generation. Oh man. 5,600 in credit card debt. Baby boomer 7,400. Gen X 8,200. Millennial 5,800. Gen Z 2,700. I thought the credit card debt was like all-time highs right now. Change in debt is plus 5%. Wouldn't it be the other way? I'm confused by that chart. $11 just hit. Silvergate, little red candle here, still above VWAP. Phase moving back up from a big move down. There's some volatility in that one. Vital holding up 5.25. 9 energy. Binance and CZ sued by CFTC over regulatory violations. Square still up 4%.
SVB. Here's a look right now. Bitcoin 26,910. This is down 3.6%, so a big move to the downside. US dollar 102.65, been hovering around those lows. Gold 19.55 a troy ounce, pulling back, while oil gains a little bit here at 70.64 the barrel. For a look at some of the top moving stocks in today's market, I'm joined by Jenny Horn, markets correspondent here on the TD Ameritrade Network. As I said, First Citizens Bank scooping up parts of the assets for Silicon Valley Bank. There was a battle between a couple of banks, but this really has brought a sense of relief this morning. Tell us more about it.
Right, the latest development in this bank turmoil, Nicole, and it seems like this news is being received very well by the street, as we do see First Citizens shares up over 40% the last I looked, all over the place this morning, surging on the back of announcing buying a large chunk of Silicon Valley Bank, which sent also regional lenders pretty collectively higher on the news. As you can see there, shares up now almost 49% in reaction. Now the deal will see First Citizens Bank purchasing around $72 billion of Silicon Valley Bank assets at a discount of around $16.5 billion. And now a further $90 billion in securities and other assets will remain in receivership for deposition by the FDIC. And the FDIC did transfer all SVB deposits and assets into a new bridge bank earlier this month in an effort to then protect some of its depositors for the failed lender. Bloomberg did also report that U.S. authorities are now studying ways to enhance their emergency lending abilities for these banks that would help protect some of these drops we've seen in assets. Now, we're seeing First Republic is a name that's lost about 90% of its value over the last 2 weeks, but now First Citizens, I think, painting a much more positive picture. Shares are up over 14% this year, now down only 2% from their yearly highs and up about 18% month to date and 71% from their low. Even First Republic getting a nice bid today, up 14.5%, following Western Alliance, which is up almost 6%. And a lot of those massive moves we've seen now in reaction are racing some pretty brutal losses month to date. So financial sector definitely on a month to date basis looking a lot healthier given today's strong momentum to the upside.
Because banks are rallying.
Understood. All right. And
I think so. I think we're just seeing an inverse.
So we see
52-week highs.
Pinterest today also getting a nice lift here, Nicole. And Pinterest is a name that's also been a pretty consistent outperformer on the year, still adding to those gains today, as you can see in this session. Now, we got news earlier that UBS did upgrade shares of Pinterest to buy from neutral with a price target of $35 a share. That's up from $27 and also implies about 27% upside from its closing price on Friday. And the analysts use Pinterest now as an event-driven positive catalyst and an estimate revision opportunity.
You get so many people raises.
The company's moves in advertising technology can drive a step function improvement in its revenue growth. The firm also did say early advertiser feedback on the LiveRamp partnership alone is suggesting significant improvement in ad efficacy that should drive budgets, while further monetization partnerships could also unlock incremental demand for this name. Pinterest, I think, has gotten tugged into a lot of the social media volatility, but really has been a more solid performer. Difficult to compare them to Meta, obviously, this year, which has been such a strong outperformer. But Pinterest today only adding to its year-to-date outperformance, especially on the back of some further analyst upside, Nicole.
Yeah, understood.
Hard to tell in the
All right,
future.
we'll hear more from Pinterest too. Nice upgrade there from UBS. Thank you.
Yeah, it did. It broke the low in the futures also.
All right, let's get some insights in the news shaping markets. For that, we welcome in William Lee, Chief Economist at Milken Institute. Thank you for being with us. So, what did you think about the Fed's recent action? Tell us your thoughts.
Well, to be honest, I think the Fed has chickened out. I think the Fed was so concerned that we may be raising rates too high, that the economy may be slowing too much.
This one was high from
25 basis points.
Selling off inventory,
everyone was so concerned about the banking system. But let's be honest. If Silicon Valley Bank had been not in Silicon Valley, but in a black neighborhood,
yeah, software sales were down, what, 30% or something?
Would we have had this kind of reaction? I think the markets truly have.
Yeah, I mean they're moving out of
in its mind.
Software, I'd imagine.
The fear that we would have a credit crunch,
or at least hopefully out of stuff that's not performing well, and
I think
more into
that
what's
caught
working,
the
which is
Fed's attention,
collectibles
because I think they certainly realize that inflation is still very strong, and most reference rules, policy rules like Taylor rules would have told us.
Doesn't make they should have very much operating costs with that marketplace
to get the inflation under control. And yet the Fed only moved by a quarter point, and now we're hearing debates that maybe we may.
The DRS, they might mention that on the 10K.
I think those are that's the kind of talk that will let inflation get away from the Fed.
I see. So you really wanted more That's pretty amazing because there's not too many people who come on and say, I wanted more. And the Fed should just do it. There's a few who say just rip the Band-Aid off.
You can't really
but most are saying
BRS
they should
short
pause and
because
just forget
shorting
it
is
at this
borrowing
point.
stock.
That being said, I mean, when you talk about Silicon
But
Valley
the-
Bank, I mean, it was no small
Some are
story.
speculating
I
that
mean, it was the second largest
the
fallout
shorts were
after Washington
buying
Mutual.
shares,
I mean,
BRSing, so
whatever
they'd show up on the
neighborhood it's in. I
bot,
know it's tech and
or show up on their
Silicon Valley
numbers,
and all that, but
and then
I mean,
sold them off, of course,
it was
that
no small
last
story, right? And
that
the
last report that came in
contagion
lower.
was the concern.
The concern was about
It
contagion,
seems a
but
bit
let's
far-fetched,
remember
but
the source of the contagion.
I don't know. I think it's
Most of the uninsured
could've just been
deposits were
retail.
businesses and high-tech businesses. Some of them were foreign entities that deposited a lot of money with Silicon Valley Bank because they want to have startup base here in the United States.
No one wants to hear that, but
great story to it. It has a very West
why
Coast
wouldn't it be
story
just
that
retail?
a lot of our investors like
During
to
a recession,
hear, and it was
people are in hard
successful in
times, they
lulling the bank
sell
supervisors
stuff.
at the San Francisco Fed and the California regulators into forgiving Silicon Valley for a lot of sins that no other bank would have gotten away with. What bank could operate for almost a year without a chief risk officer? What bank would allow this kind of asset liability mismatch, which would have failed an undergraduate in Banking 101? So these are the sins that I think caught everyone's attention. And I think
at some point they're going to start having to pick back up their
made
inventory
mistakes
purchases.
in supervising Silicon Valley Bank and tried to make up for it by being more lenient with its monetary
If their
policy
supply
when it
chain's
should have
good,
been
then hopefully they
enforcing
don't have to
regulatory
house as much
policy.
inventory,
These
though,
are the
which I
kind of
think kind of what they were
mismatches
alluding
of
to on this last
policy
earnings.
that we should not.
But they're kind of just getting themselves
allow
to an
continue.
inventory level that
Now,
they're more
let's
comfortable
go
with.
back to why the
'Cause it's,
Fed
you
needs
don't
to raise
want to.
interest rates. Inflation is
You want to hold as little
incredibly
inventory as
sticky.
you can,
and right now the economy itself seems to be
without,
going along pretty
selling out.
nicely. If you go to
So-
Atlanta GDP Now or any of the
I don't know what that
of the
number is for them. I guess
real-time
right now they have about
forecasting, we
680
really have a
million
fairly strong
worth of
economy.
inventory. Maybe it's
The labor
around there,
market
maybe
is
it's lower.
extremely tight, as Chair Powell keeps telling us. So these are the conditions that really haven't changed. And the United States now, as far as the banking system
Crazy
is concerned,
high.
relies much more on capital markets for raising.
I don't know.
Money
I mean, maybe they
for
won't put it in at
investment
all, like you're
than it
saying.
does banks.
But
So
I think they
the
could
sector
put
that
it
would
on
be
the
hurt
10K.
most would be the small businesses that banks
We've only seen on
service,
10Qs.
and those show no sign
Because
of
a year ago, I
really
don't think they were
coming
even
back,
listing the
because the
DRS
demand for
numbers.
these business loans outside of the service sector are very
So-
low.
Yeah, understood. At the same time, I'm not sure that you're in the majority here with all that you're
No.
saying. I do agree that, we are in this
Bye,
sticky
new low, fill in this
inflationary
gap.
environment. But there
Ace,
are
did you
some
get yours on
concerns
DRS? Or are
about
you
the
now on a
lag
brokerage?
time for some of the rate hikes. I think that's something people have
Silver
talked
get
about.
consolidating
They
beautifully
haven't
so
taken
far
full
above
effect.
VWAP here.
And also
Up
just
30%.
that
I'm going
the
to do
economy
10 after
could be
11.
slowing down on the heels of what's happened with
So
these
we're,
banks.
the
Right
volume
now,
starting
today, you
to
had
decrease
Citizens
across the
Bank
market. Day
basically
traders are
stepping in for
starting to
SVB,
exit,
but
which
we had Credit
this whole
Suisse.
price
We've had
without
a few
that, that's
fallouts, and you had someone like Neil
good
Kashkari
strength
come in and say that
of
the
a
stress that
continuing
we've seen on
rally.
the banking system really could weigh on the U.S. economy and could bring it closer to a recession.
Like over some
And then
pictures.
how would the Fed look if they were
Nice.
raising emphatically?
Well, absolutely, and you're absolutely right to mention all these names. But
Donuts.
let's remember who Credit Suisse is. It's the cat and dog of all the systemic banks in the world. We've had Credit Suisse stories on your air for how many years, telling us that they've been mismanaged. Well, as the market started to get nervous about the banking system, they started probing for weaknesses, and Credit Suisse was prime target number one. And the Swiss did the right thing to essentially get them out of their misery. And are there other banks that are like that? You betcha. There are over 4,000 banks in the United States. And there have been over 500 bank failures since 2008. And none of them proved to be systemic. They were just mismanaged banks. Now we are in this environment where, because of Silicon Valley, our focus is on systemic risk associated with failed banks. None of the 400 and some odd 90 or 500 banks before caused that kind of concern. What was special about Silicon Valley? It was the home of a lot of Silicon Valley fat cats and fat cat depositors. So I think that's the perspective I think that we lost, and the market uproar caused the Fed and other policymakers to get very concerned about a bank failure. Yes, it was a large bank, but like I said, it was a very specialized large bank.
Yeah. Well, you know what? I love when you're on, and I enjoy your perspective. Let's see what happens, because we know
it's
that
controversial.
Inflation. Yeah, it's, you know what? It's good to get out there and come out with a different view, too. I mean, William Lee, it's great to see you. Come back soon. Chief Economist at Milken Institute. Thank you very much. Plenty more to come right here on Trading 360. Our 360 Spotlight takes a look at Micron ahead of its earnings. Disruptor is Palantir. And our 360 round looks at social media stocks on the heels of TikTok CEO testimony before Congress. But up next, it's the big three stocks, three charts, three trades. Ben Lichtenstein goes to the technicals. Kenny Volcari takes us through the trades for Western Alliance Bank, C3AI, and Bank America. Coming up.
Dude, the strength on Silvergate is legit. It was fast. Good to hear.
A lot of opportunity because I don't think Western Alliance nor Bank America, which is the other name in the kind of the banking group today, along with a bunch of others, but these two specifically, I don't think they're going to get dragged down. I think it was way overblown. I mean, look what they did to Western Alliance. They took it down basically from 70 on those 2 days or 3 days right after Silicon Valley, all the way down to below 20. I think it traded as low as $17, which I thought was completely ridiculous. Now I understand the chaos
just kept changing
at the time and all the rumors and all that stuff flying around.
But
when you sat back and you looked at Western Alliance, you looked at their product, you looked at their
kind of their space,
probably
might have a big
customer
flush.
base, I think you're going to see it bounce right back. And in fact, we've seen it bounce off that low that day, trading back at 35.04. Today's news certainly helps all the banking industry, the regionals as well as the money centers. I think even from, and Benoit, I'm sure will tear me apart here, but just looking at what happened over the last month to this stock and then where I think it's going, I think down here is a buy. I think it bounces right back up to at least a trend line, which is going to take us to about $63, which would represent, which would represent
that's a good orb.
a 50% move.
It's maybe
Wow,
not bad, but it just shows that they have confidence in BBY to remove the price threshold.
By any means.
I
don't
how I
think we're out
interpret
of
it.
woods yet, though. Either. Let's take a look at the chart because
I guess
Kenny was
bad for
talking
them,
about
but
that
it's not like
volatility, and he wasn't specific in
bad.
terms of those levels. It sold off, Kenny, from what was it, 76.90 down to 7.45, I think. There you can see the move. Actually, 7.46.
That was the catalyst last week. Someone buying their
high
tech,
conviction
but
trade that we saw to the downside, and then you can see just kind of this balancing pattern that's playing out.
You know, it
As
just
I
got
look at
picked
this
up by
chart,
momentum
I see
and
two areas of consolidation.
people
You've got
looking
the
for a
top
bottom
left
on it.
corner where prior to this
if it's
uncertainty
going
and the
bankrupt.
craziness that we've seen, we were consolidating up around this 76 level, right? You can see.
If it's not, it's at a great
conviction to the
value, just like
downside, and then I went
BBY.
ahead and
That's the
just
thing.
Drew this as the next big
Or
area of
relative value.
consolidation. But as we zone in and
The numbers
kind
on
of
it were
hone
never
in a little bit more
doesn't look that
and
good to
take
me,
a look at a
but
few of these
I don't
closer
look at,
areas of balance that formed, you're going to see that it
not
wasn't
familiar
just
with
those
banking
two.
financials
There's
if they
the
don't
76 I
usually look
mentioned,
that good,
kind of
'cause
all these stops along the way down.
doesn't.
71, 65, 40. This is a pattern that repeats itself over and over again. Very bearish type scenario. Here you can see again, currently balancing around 35. So high conviction to the downside, sideways consolidation. Doesn't appear as if we're out of the woods yet, but nice bounce off that 746 low to Kenny's point. Here's a look at the daily time
it comes
frame.
to a halt.
And
Like,
again, you can see, well, this is the move we just looked at.
from
And this is
traders,
part of the longer
that
term
doesn't mean you
trend
can't
that's been playing out to the
keep
downside.
climbing up from
Similar
investors,
pattern, look, 125
which
all the
is
way down to 746.
kind of what we're seeing.
And
The
as I
shorter
look
term
at this,
traders
price activity here,
are in it probably in the
noticing
morning,
here
but
again, you've
that's
got
why I keep
areas of
saying the fact that it
consolidation
holds
that
up these
form
levels throughout the
110,
day,
100, 81,
showing that it's people that are holding it, not just trading it.
values
Like,
moving
you
at
have traders
lower
in here, but
levels.
you
This
also
is
have
just
people
most
that are holding
recently
it.
around 35.
Whether they're swing
no
trading
rejection
or
as
just
of yet
trying
in
to
terms
buy
of
the
that
dip
trend lower,
and hold
migration
it
of value
for
lower.
long term.
That would come in the form of a breach of 66. We got a ways to go. We're trending 34.89 right now, up about 6% on the
chart,
day, as I mentioned, though. Not
it looks
out
like
of
a
the
nice
woods
bottom.
Yet. Longer-term trend to the downside.
You got a
Short-term
MACD that's
intermediate
bullish
trend
from
lower
yesterday.
as well.
Today we get this green candle. If that
you know,
closes,
these
it's green over
trends
the
are
9.
going lower, and you had Neil
Whoa,
Kashkari
flush
talking
there on
about
SPY.
the risk for
What was
U.S.
that?
recession and just the
Like
likelihood
Silvergate
of all
wants
these
to take
banks. It
off
was very
again, too. We
interesting
got
to
some
hear
volume,
William
and
Lee a moment ago talking about
It's
that the Fed should
strong
have
above
done more,
VWAP, man.
that they chickened out.
Oddly
That was
strong.
great, Ben. Thank you for that. Kenny, I mean, what are you thinking? I mean,
know
there's
what
some
that
people who are
candle was.
completely on the other side of this.
EU's going to
I
close
hear you,
in
and Ben, but let me ask you a question.
10
Had
minutes.
the Silicon Valley Bank not
BBBY,
happened,
low of the day.
this chart that you show, the breakdown from 66 down to 7, would never have happened, right?
Agreed.
Would never have happened because there was no
would
reason
agree.
for it to happen.
Yeah.
They created the hysteria via social media and LinkedIn and emails and, oh my God, the place is falling apart. They created it. And so
Thanks, Ace.
from 66 down to 7, I view as that's where the opportunity is, right? Because the hysteria created that move down. Now it's consolidating around 35. I think, listen.
I mean, I'd be
while
stoked
I think
for the
the
gap
Fed
fill
should be
here.
more aggressive, I don't think there's anything wrong with Western Alliance.
think
And
it could happen.
as an investment, I think it's a great opportunity. So, you know,
If
I'm
this
just
doesn't
on
go
the opposite
bankrupt,
side of
I
the
mean,
trade.
that
That's
gap's
fine.
not
That's
gonna
what
get
makes
filled.
it, right? I'm a buyer, you're a seller.
It's probably not going to get up to these crazy valuations up here anytime
that's
soon.
what
But
trading's all about, right, Kenny?
Right.
Let's get to another
He's
name
back
that's been
into
very
double digits.
popular lately. And you're looking at C3AI, ticker symbols AI. It's trading around 25. They've just been hearing this name a lot.
gap, I mean, that gap's still a
But
big
everything,
percent
now
up
you've been
from
hearing
here.
it in everything, right? Any company that
Got
talks about it, whether
400%.
it's in their earnings reports, whether it's in an ad on TV,
Talking
you
myself
hear
out
them
of
all
selling
talking about
covered calls.
AI. The latest one I heard, which I think is hysterical,
Moving up
it's a
here.
hair growth company. This guy, the CEO, gets on TV and says, we use the latest artificial intelligence to help you grow your hair back. I'm sitting there laughing, going, are you kidding me? But one way or the other, it's in its infant stages. We can see it with ChatGPT. We can see
Everyone
how this
says
stock is traded. Look,
ChatGPT.
this thing
It's
is
so hard for people to
a
say
dramatic move
ChatGPT.
lower, right? From the highs back in 2020, it's off
So hard
about
people to say
90%.
GPT.
But it's come way back down. It found a nice base here. This whole artificial intelligence now is starting to move
36%.
at a much
SI is
quicker
moving
pace.
back to its highs
And
on
I
the
think
day.
this stock just stands kind of at the nexus of being able to take advantage of. I mean, there's others names in there too. NVIDIA, you could pick IBM, you could pick certainly a bunch of other names. But I like this one because I think of the opportunity trade, almost kind of like a cat trade, right? The
I wonder if this thing gets up to like $5-10 this week.
93%, and it's looking to
kind
of move its way up. I think it's been trading in the 20-30
well
range now for 2 or 3 months.
Probably.
And it just feels safe to me. 30, it's tested there twice.
Sold it a few
I
weeks
think the
before it
next
rose
time
up.
it tests is 3 times the charm.
Yeah,
I think it's
no one
going
could have
right
known
up and
that
through.
that was coming out, all the hype on
All right,
AI.
and look, when we talk about, when I said it's been popular lately, I just double checked. I mean, it's no joke. It's up 125% in 3 months. I mean, NVIDIA's up 80% this year. So, I mean, some of these moves feel insane. Ben, tell us your thoughts.
Kenny mentioned the 20 to 30 range that we've been in for the last couple months. That was immediately what my eye was drawn to, and how we just recently kind of failed around 26. So if we roll over here and break out below 20, I don't think this is good for the bulls and feeding into what we've seen in terms of the longer term trend of the downside. But let's begin first and foremost with the hourly, because here you can see a trend up, right? High conviction trade throughout the beginning of January into those highs that we saw end of January, beginning of February. But since topping out around 31, you can see how we've been very much sideways and just holding, consolidating around this, well, $24, $25 level. So again, the left side of the chart here is where the conviction is. Higher highs, higher lows, initiative phase, you're breaking out to the upside, and then you kind of lose some of that momentum. You just start to consolidate here around 24. But much like the chart we just looked at in terms of the move up here, you can see this pattern repeating itself multiple times over and over again. Beginning of January, we were balancing around 11, 13, 15. We're talking high conviction, vertical phase, horizontal development, and value getting established at higher and higher levels on a more granular basis. But again, still similar pattern, trend up, and then here, look, sideways consolidation holding right around this 24 level. Let's take a step back, because 24, 25 is going to be somewhat pivotal, and the trend we're looking at here is very much counter trend to, well, here's the longer term trend. We're talking back in 2021, January, February. Look, the stock was trading up around 180. High conviction to the downside on the left side of your screen, and then this sideways consolidation that's been playing out here on the basically
BBBY with the green
this,
candle.
Trade here, the longer
So it might be
term.
starting to get a little
so again,
pop
a
up to
similar
go up.
pattern. You get the high conviction and then the sideways consolidation, zero rejection. But again, much like what we pointed out in terms of the move up, on the way down, this pattern in a granular fashion repeats itself multiple times. We're talking 146, 116, 87, 65, 50, 30, and most recently, again, as mentioned,
get close to
hanging out
half my
around
cost
25.
basis
So
back.
there is
Selling
potential
a
to see
strike
this thing
out of the money
spike
as a
up and
weekly.
through 30 would invalidate the working assumption that we're trending lower. But in this chart here, I think it's pretty clear which way value's been moving. And again, the working assumptions that that's going to continue rather than change. Ultimately, at some point, we will reject this lower level. But currently referencing the last area balance, the middle of it, as we develop this current area, and that's around
selling
30.
next week,
So got a little bit of room to the upside
close to
here
half.
until we kind of take out this longer term, again, bigger picture working assumption that we're trending lower.
Yeah, it's amazing because it was reminiscent of the tech boom and bust, but it's not, in that it was way higher prior. So, I mean, that's where we stand, and we both remember the tech boom and bust. Kenny, right? Doesn't it, it's sort of the way it's acting, it feels sort of crazy, but look how much higher it had been. It's not like the tech boom and bust that everything was so high and then you never saw those numbers again. It's completely
No, it feels
different.
like
This is the
it feels like
future.
all those. It feels like all those disruptive tech names that Kathy Woods owns, right? We saw them all get crushed last year, and now they are the best performing sector so far this year. That her disruptive tech fund is up better than 20% on the year. But Ben, one quick question: if you go back to that chart and just put it back to the year chart, and then draw the trend line from the lows of January right up to the lows of last week, you see that trend line points to about $21, which is above the 50-day moving average. I would use that as kind of a space that I'd be looking for it to hold and then bounce off there and then move higher.
Ben, you want to, any comments there?
I'm trying to get the trend line drawn in here, guys. From what I'm seeing in terms of that back in January, to Kenny's point, we were trading around this $10, $12 level, and we've seen this trend line hold for the most part, a couple tests along the move up here. So I see what you're talking about here. Kenny, again, I'm just kind of reverting back to that longer term trend of the downside.
Yeah,
and the
BY's
fact that we're
bullish on the
appearing
5.
to stall here
If this
around
green candle
26,
closes
25.
over the
This is a key
5-minute
area is what I
or
think
over the 9 moving
in terms
average.
of this larger balance you mentioned from 20 to 30.
SI.
Yeah, no, I agree. I just think I would use, as I'm looking at it, if it was going to back off, I think it's going to find support then at that new trend line you just drew, and then use it from there to move ahead. But
all right, we'll watch
listen,
2022 then.
Right, perfect.
Okay, Bank of America. Kenny, let's get to another name in the banking world, 28 bucks. Everybody's liking the big money center banks.
Yeah, so first of all, it's a big money center bank, right? So it's not a regional, number one. I should also say that I own it. So to put that on the table that I've owned it for a while. I like the stock. It is one of, JP Morgan is the other big money center bank I own. But this one as well got taken down, I think, much harder than the group when the whole Silicon Valley Bank thing happened in the crisis. And oh my God, people talking about another Lehman and Bear moment, which I think was completely unfounded. And I think, and you can see it today, it traded right down, broke through all the trend lines. It broke the lows of October, and it now kind of established a low going all the way back, I think, to September, December of 2020, where in September it was this level was resistance. It broke up and through, and then this level remained support, and now it's come right back to sit on that trend line. So I'm saying it's going to find support right here at this level, and then start to move higher, work its way higher as the banking crisis kind of subsides.
Yeah, and it's interesting to hear that JP Morgan is the other one that you own. Ben, your thoughts on Bank of America?
Bank of America has been coming under pressure. I mentioned I don't think the banks are out of the woods yet, and I think we're seeing a reflection of that in terms of price activity. Let's begin with the trend lower. First and foremost, it's been playing out over the last few weeks. You can see around 34.69 down to recent lows around 26.20. Now, if you direct your attention to the left side of the screen, you'll see that we formed a bit of a double top up there, right? And this is a stock that is no stranger to double tops, head and shoulder patterns, and again, a little bit of weakness as of recent. But let's begin here. First and foremost, 35. And what I did is I kind of kept it simple on this chart, right? I didn't want to get too complicated, but what I noticed was, look at these series of lower highs that continue to come into play here as we work our way down. Potentially, if we roll over here, that'd be the most recent up around this 28 level. But you can see, again, the resistance, the struggles that Bank of America has had in terms of regaining composure throughout the whole process, and a pretty much well-defined trend lower. We talk about a top left corner to bottom right corner. This is a good example thereof. Now, I wanted to take a look here and show you what I mentioned here in terms of no stranger to double tops, no strangers to head and shoulders patterns. You can see, first and foremost here, as we look at this, bit of a area that we struggled to get up above. The selling we just looked at coming into play recently, just a small fraction of the move lower from the January highs, which was the right shoulder. You've got the head here, which is the highs that we saw in the fall of last year, and the left shoulder being the August of last summer highs. So again, some of this weakness. The one thing I noticed, the conviction we're seeing through 30 takes out the October lows. So obviously you can see how banks here, a pretty good reflection of what we're seeing, struggling, right? You've got banks holding below the October lows, while we've got NASDAQ and tech just to the roof here relative to. It's been really strong. So reflection of investors' concerns at this point, and just some of the weakness. But you can see how this stock's rolled over. Again, the concern for me is recently the conviction we've seen below September lows, and how we've yet to reject this lower level as of yet.
All right, thany you for that. And that's the final from Ben. Kenny, you want to add a little
Liechtenstein.
something?
No. Listen, I think it creates, as in the trader mentality, I think these breakdowns and these names are overdone, and I think it creates opportunity. That's that's the way I'm sticking with it. I'm going to play it.
All right, good to see you both. Thank you very much.
Always a pleasure.
Senior market strategist at Slatestone Wealth, and our own Ben Liechtenstein, always on the charts there. Thank you both for the big three today. Coming up next, we're going to spotlight Micron ahead of its earnings. CFRA's Angelo Zeno will be with us and give us the very latest. More trading.
So the catalyst on Silvergate before moving up, about to test new highs. Silvergate before was buying their tech, and then the catalyst this morning was MicroStrategy settles Silvergate loan. Basically, they paid off some of Silvergate's. What was it here? MicroStrategy pays off Silvergate loan. Company borrowed $205 million from Silvergate Bank. Oh, I guess they were just paying off their loan. Oh, okay. That's kind of interesting. Paying off a loan on a bank that might be going bankrupt. Agreed to prepayment secured term loan. All right, retesting that high there on SI. Let's see, yeah, if it breaks here, I mean, keep on going up. I'm gonna sprinkle some covered calls on the way up. Little dash here, little dash there, little dash everywhere. What tech? I don't know. How to get bailouts. I don't know. Bed Bath not making it to BWAP and actually made a new low on that wick. Total fake out, man. He might keep rallying. I think there's a little bear trap here. I don't know. Got our momentum indicators signaling. Getty 6%. Baba coming down. We've got Yang up quite a bit. Yeah, Baba's down 1.5. Where you at now, Al? Just kidding. This trend still looks good. Kind of a little inverted head and shoulders. It's even building here too. Silvergate 40%. 2450 is the high. It's at 2420. Canceling this covered call. Too impatient to day trade. I mean, most people that kind of day trade just do it in the first hour, hour and a half. They're like kind of scalping, day trading when the market's very jumpy like this, so you don't have to be very patient because it's moving so fast on the 1 minute. Or you just use lots of, and you use lots of leverage. So it's very exciting, you know, 10, 15, 20 basis points with a ton of leverage. You're getting huge dollar amount moves just on a small move. You get a bailout. That's good tech, man. Overgate, let's see it. See it. Do it. See that? Now we're not getting an RSI divergence if we can get this RSI up. Yeah, 1130 didn't give us one either. That's perfect. It rallied just enough before the 1130 close to where this isn't a divergence yet. That is neat. Can't count the indicators until it's done. So we might get a little rejection here. Like yesterday, it kind of double topped. So very well could be doing that today. So I might actually, yeah, let me see. I'm gonna do some cover calls if it starts to reject here. Do 2 there, 35. Let's just start with a little bit of that. Okay, I sold 2 cover calls at 2.5 strike. Just kind of trade it like I do the futures on here, basically, with some cover calls, given that it's kind of rejecting so far this resistance. But if it breaks, then I'll be happy to do all of them. Yeah, the IV on those 2.5 strikes is 380%. Ah.
15% over the last 2 weeks, kind of ahead of the release here tomorrow night. So expectations are, listen, you've had a big move across the semi space. At some point, they've got to cool down to some respect, but nonetheless, we continue to believe in that kind of bottoming out process and the fact that you do want to get ahead of the improving fundamentals later this year. In terms of memory specifically, probably the hardest hit area of the semiconductor industry in this downturn, which is why you've seen the fundamentals penalize the most. It's also typically what typically happens across kind of the memory space. So we remain believers long-term on Micron and specifically kind of that content story on the memory side of things, specifically on data centers. And then again, this is all about inventories, and inventories do still remain fairly bloated, but typically they peak out around the Q1 period that we're seeing right now. Again, it kind of goes hand in hand with our kind of buy thesis and improving fundamentals later this year.
Right, understood. At this point now, would you buy ahead of the report, or would you rather wait until the report comes out? I know your old target was $56. You're up to $68 now. Would you recommend folks buy ahead of the report or after?
That is a great question. I mean, it's impossible to really tell. I'll tell you this. I mean, as far as kind of the quarter is concerned,
I don't need funds to sell cover calls
right now, I'll tell you this, is that expectations are extremely low. I mean, for the February quarter and May quarters, year-over-year declines north of 50% in terms of revenue. But our view is you're probably going to see another kind of sequential or guide towards a flat to slightly down sequential decline in terms of revenue for the May quarter versus the February quarter. I think the street is slightly up there. And when you actually kind of look at, in addition, they're probably going to throw some significant write-downs also for the February quarter, which might not be fully baked in as far as the estimates are concerned. So there could kind of be a disappointment, given some of the strength we've seen here over the last 2 weeks in terms of Micron stock price. So I don't know if I'd kind of fully get into the numbers here, but if you don't own any of it, maybe you kind of want to buy a little bit of it ahead of the numbers and then kind of buy a little bit more if you see weakness thereafter.
And then what are the other names, since you do have a buy on this one? Do you have buys on some of the others as well, and most of the group a buy?
I'd say probably the best area to be in right now as far as semiconductors are concerned, I'd say both near-term and long-term, is probably some of the accelerator names out there. So there's kind of a basket of names out there, and probably some of the hottest names out there we've seen this year, where those are probably going to be where the most upside to consensus estimates are going to be as we progress through this year, as well as we look forward over the next 3 to 5 years. So of course those names would include names like NVIDIA and AMD, but I'd also be looking at names like a Marvell and Broadcom, which also should kind of benefit from that kind of AI, ChatGPT, accelerator type of story here over the next couple of years.
Yeah, I'm glad you mentioned all of those names.
Can't afford the commissions or something.
Angelo, nice to see you. Thanks for being
on.
Thanks for having me.
Margin.
Thanks. Coming up next, we're going to talk about Palantir, and it continues to add government contracts. George Sillis has the very latest on this futuristic tech stock.
Because I have a stop loss on it. Let's see if I take that off. Oh, yeah. Yeah, I took my stop loss off and now it's saying I can sell them. Fidelity, they all take the same. They'll take 2 days. Nope, you gotta wait for Tuesday. This is why T+2 is a thing. You should just turn on margin. You'll be able to use that money right away, immediately. Got May half calls, bad idea. Only because you're putting a time limit on what might be a historical event. And the premium you're paying to be right on that time limit is significant. I'm assuming the monthlies. Yeah, at least you're in the money. 217 IB. Not as awful as higher out of the money. The stock's so cheap though, I just like to hold the equity. Yeah, I know. I had leaps for GME. I'm not convinced the 10K is gonna make the stock go up. But if you want exposure for that event, then sure, yeah. You should be fine by May, I would think. I think it's supposed to come out this month. Yeah. Okay. $35 target. Yeah. What are you expecting to be on the 10K that's going to cause the price to go up?
Where its growth avenues are.
Yeah, understood. I mean, and just the fact that they've gotten this U.S. State Department contracts, it's pretty exciting here when you think about the PLTR and how well it's been doing in the big picture. Thank you so much, George Sillis. Good to see you. Appreciate that report. Coming up next, our panel taking a look at social media stocks with congressional scrutiny of TikTok. Does that open up an opportunity for Meta, Snap, Pinterest, and more?
Or merger.
Trading 360.
NFT spinoff. So I could see an NFT dividend. I guess an NFT spinoff would have the same effect potentially of them having to close. Or a merger. I don't think a merger would cause a rally. I think it would maybe cause it to dump. Something with an NFT, potentially we might see, yeah, a move from that. Update DRS. I don't think it's going to spark anything. That would be under the notion that it would spark something from retail, and you'd also have to believe that retail buying causes price action. So, I don't believe that. Or we wouldn't be in this situation. Yeah, the only thing I could think of was some sort of NFT dividend, or yeah, I guess a spin-off, something with an NFT where yeah, maybe pulling GME off the exchange and just moving it to the blockchain. Maybe that what's been theorized all these years might finally be coming on that 10K. That would be crazy. Edging up here, maybe a little invert head and shoulders in the 5-minute. GME kind of at the low still, almost down 5%. BBBY, same deal, 3.5% at the lows. Let's look at our paper trading account. Following the scanner, so Ivana was profitable at some point. Actually crazy down because that's still out of the money. And of course the BBBY cash grid puts need a rally over $1 by April for these plays to work out. 19 grand in premium on that one and 12 on that one. With collateral required about 100,000. Yeah, I think the info on the 10K for GME, if it's anything other than some sort of, I don't know what else there could be, but the only thing I can think of that would be bullish would be an NFT dividend or spin-off, like you said, or something along those lines. Silvergate back down to VWAP here. VWAP's very high. Seems like we might get a move through VWAP. 2170 is the support from earlier today. At 2230. I did sell 2 covered calls up here. Couldn't get an order for more because I had to cancel my stop limit. Yeah, anyways. Yeah, it would be crazy if that was coming now after all this time, something with an NFT.
On what we heard, the guy didn't stand a chance, basically, right? I mean, what happened in there and what does it mean?
Yeah, I mean, Congress has put the various social media company CEOs on the hot seat, and it was definitely TikTok's turn.
We're getting chilled at home.
I think This is probably the most brutal reception of a tech CEO that I've seen in a long time, and
yeah, I mean,
in many cases,
I might put an order back for my
wasn't
leads.
given much of a chance to tell his side of the story. That's
still
not really the
bullish.
purpose of these hearings. In many cases,
And
sadly,
as long as that's the
they
case,
are much more opportunities to score political points than to try to dig in, which is a bit unfortunate because there are a lot of questions that Congress could have asked.
Can't believe I didn't close this cover call before.
That would have been very revealing about, I think, the company's plans to address some of the concerns that Congress was raising.
Yeah, and we could talk more about this, but I heard there was one question, though I didn't hear it with my own ears, but it was really about transforming some of the technology into a more private format and how they would actually do that, and he didn't really quite have the answers. He had the plans to do that, but didn't really have the detailed answers for someone who would understand those
candle through VWAP
a
here.
little better than I would. But it showed, while the intentions may be good, and he did note, trying to help teens and limit that and stuff, but it just felt like there was no love for TikTok. That being said, Ali, tell me a little bit
stop
about
limits,
what
2170.
happens here with TikTok. We know that some of the other social
Very
media
well could
companies,
break on
every
this
time they say
momentum
TikTok ban, those jump,
Pretty big
right?
red candles.
Yeah, they do. There are a few reasons. As long as there's uncertainty about whether TikTok can continue to operate here in the United States, I think it creates opportunities for the other ones, such as Snap, Facebook, or I should say Instagram, and also YouTube with YouTube Shorts. And I think it also creates more uncertainty on the creator side.
BBBY.
So the creators are probably, some of the creators are probably thinking, well,
70,
maybe
50.
I should focus a little bit less on TikTok and make sure that I can monetize my content more effectively on some of the other ones, such as YouTube Shorts and Instagram Reels and so forth. So it creates opportunities for the other platform to further monetize, or I should say more effectively monetize the content on what they have provided in terms of similarities to what TikTok has been doing for a few years.
Yeah. So as you talk about YouTube, we think Google. When you talk about Instagram, we're thinking Meta, right? So which ones are the buy ratings? Or I see you have Meta's note here, but are there buy ratings on some of these names? Or if, buy,
there's some shorting and some limit orders being triggered.
We haven't necessarily taken that potential benefit into account for these guys. But to answer your question, all of them are buy ratings. So, we have a buy rating on Snap and also Meta and Alphabet, the parent of Google. We think all of those companies right now, all those stocks are actually very attractive.
Double top just like yesterday, but
mainly from the standpoint of monetization of the additional ad inventories that they have. And from an economic or macro standpoint, we think there's probably going to be some recovery in the second half, later in the second half of this year and going into 2024. And of course, from an advertising standpoint, these guys are going to be one of the main beneficiaries when it comes to increase in digital ad spending.
Yeah. And, truthfully, Neil, we know that China's really not ready to sell off its part. When we talk about that they want to, possibly approve a sale and that we could move forward, but China's really not ready to play ball with that. And should we really be nervous? Let me ask you this, as somebody who's more on the inside.
Yeah, no,
putting
BBY hit a new low.
TikTok on our phones. It's not on mine.
I use TikTok. I think there are reasons for the concerns that were raised. Many of the concerns that we heard on Thursday were around national security, which TikTok is somewhat uniquely in that position. But a lot of the other concerns around child welfare or data security and privacy, those are all concerns that Congress has hit all the big tech companies about. For a long time at this point. And I think one of the
new low on the day.
Maybe unintended
thing is, though,
or unforeseen consequences of
all
a
the
ban
other,
that isn't
IMX and all those are
that's based on something other than just a pretty clear-cut national security risk.
GME
is that
this
could have downside effects on all of the tech companies. I mean,
get some big players under contract, so they're
government that's willing to step in and ban an entire
low on
app
SPY there just went red
based on something other than purely national security concerns. I think all the other platforms should be watching that and be quite concerned if that happens to take place.
Yes, I did.
Yeah, and it's my understanding that young folks will just use a different VPN and pretend that they're not in the U.S.
Got some stop losses triggered for sure.
Ali, have you heard that?
There's some real practical problems.
Gap fill on SPY, now it's back green.
Yes, we've heard that, and I just want to discuss the data from a data privacy standpoint or data security standpoint beyond, of course, homeland security. I think big techs, and more specifically the social platforms, are continuing to face scrutiny regarding how they utilize that data, how much data they're actually compiling, and we've already seen actions taking place in Europe for a few years. So we could see similar restrictions here in the United States. But when it comes to platforms such as a Meta's Facebook and Instagram, or Google,
what these guys are saying? They're talking about TikTok.
They already have access to a lot of data. They have a huge, large ecosystem. So I don't necessarily think that restrictions on data utilization is going to really impact them.
Down 5%.
And take into account that actually further regulations against data
flush
utilization,
through supports down 4,
on data security,
77
cents for their competitors.
Okay.
So that should be taken into account.
Ali Mogharabi, thank you, of Morningstar, and Neil Chilson, formerly of the Federal Trade Commission. Thank you both very much. Thanks for being with me, folks. I'm Nicole Petalides. Keep it right here. Fast Market is next.
Okay, I mean, our low, multi-decade low is 75 cents. That wasn't pre-market though, or was that back there? During the day, 76. Wicking down there. See if we hold these levels.
SPY and GME both look like they kind of double bottomed here. Expect them to move up.
Bank and Trust Company. Let's bring in Caroline Woods, senior markets correspondent here on the network, to help us break down this story, and then we'll maybe throw in some FRC on that one too, Caroline.
Hey there, Tom. Yes, this is definitely the big story of the day. As you said, giving a boost to both regional banks, and we're seeing some strength in some of the bigger banks as well. But yes, First Citizens Bank is buying essentially a big chunk of Silicon Valley Bank's assets about 2 weeks after its collapse. I don't know about you, but that seemed like a really long 2 weeks. But the deal includes the purchase of approximately $72 billion of SVB's assets at a discounted price of $16.5 billion. Based on the fact that the stock is rallying about 50% in response to this news, seems like investors think that's a pretty good deal at that discounted price. Around $90 billion in securities and other assets will remain in receivership by the FDIC. This, of course, comes after the FDIC transferred all of SVB's deposits to essentially a bridge bank earlier this month in an effort to really protect depositors' money. First Citizens Bank is based in Raleigh, North Carolina, so this will give it some West Coast exposure. In fact, all 17 of the former branches of SVB will open, or they opened as First Citizens Bank today. First Citizens Bank and the FDIC also entered into a loss share transaction, agreed to share in the potential losses and potential recoveries of assets. In terms of the price tag for the FDIC stepping in after the collapse of SVB, it's looking like that could cost basically about $20 billion, although that won't be, we have to wait for an actual final figure, but it's looking like it'll cost about $20 billion. In terms of share price, I said, First Citizens up by about 50% on this news. It was the 50th biggest bank in the U.S. It's supposed to bring up to about 25, or in the top 25 after this deal. Other regional banks, though, rallying in response. You mentioned First Republic. They're leading the way higher, up about 15%. There's also some discussions about ways the government can basically enhance emergency lending abilities. That's also giving it a boost. KeyCorp is up quite a bit today. It's up about 4%. Got an upgrade from Citi to buy, so that also could be giving shares.
Looks like a little bear flag on Silvergate.
1.5%. Fifth Third up about 3% today. Truist up about 1%. So already off earlier highs, but definitely seeing strength regardless. And as I said, also seeing some strength in the bigger names as well. Not quite, actually no, now that I'm looking, Citi up 3.6%, Goldman Sachs up 2%, Bank of America up 4%, so that their gains actually picking up some steam as opposed to earlier this morning.
Yeah, and Caroline, we keep on hearing, people from the Treasury and, Treasury Secretary Yellen continue to pound the table about how safe our banking system is. Is that also lending into some uncertainty in this particular sector? Is you shouldn't have to say that at all, and maybe you're doing more to harm the optimism or sentiment from investors than actually shoring up their bullish thoughts perhaps on this sector.
Well, sentiment seems like it's taking a bit of a turn. Could be because we haven't seen anything break aside from SVB and Signature. Obviously, there's still some uncertainty around, say, Deutsche Bank, if you will. But yes, we are hearing, whether it's from Powell or Yellen, that the banking system, we just heard from the Fed's bar that the banking system is sound and resilient, that some of those deposit outflows from the regional banks are stabilizing. Also seeing some reporting that the outflows from smaller banks to larger banks are starting to stabilize. So technically that should restore some confidence in the banking system. Maybe it is contributing to that uncertainty, but there's just a lot of assurances that they're going to do whatever it takes to make sure that the banking system is sound. That being said, the consensus really is that credit conditions are tightening, and I think that that's a concern because we need to see what that's actually going to look like as we see it play out. We saw Neil Kashkari over the weekend tell CBS that the banking turmoil brings us closer to a recession, that it's still unclear how much of this turmoil will lead to a credit crunch. So I think that there's still a lot of uncertainty around that element, but not so much necessarily today, at least, about other banks failing at this point.
Yeah, I kind of like that blackout period when the Fed presidents couldn't talk there for about a week and a half. That was probably a bonus for the overall markets as we were up last week. All right, Caroline, great stuff as always. That's Caroline Wood, Senior Markets Correspondent here, breaking down the banking story there with Silicon Valley Bank and FRC, and they are outperforming. The regional banks are, Alex, so that does lend a little bit of confidence to this market, but we're off of those highs. I think I wanted to talk about yields a little bit because that 10-year is getting back up to 3.5%. The 3-month 10-year yield curve is inverted 130 basis points. That's the biggest I've seen since the early 80s as far as an inversion. That's sometimes looked at historically as maybe a precursor to a potential recession coming. But we've seen the 2-10-year yield curve actually, come back from the lows of inversion. I think it's only about 40 basis points right now.
Yeah, and so this gets to be kind of a deep conversation, but to try to keep it somewhat high level in the sake of time, and also for those who are looking more into this, there's plenty of resources available through searches. But this is seen when it initially happens, when you see short-term rates go through long-term rates. That's a warning sign because it doesn't make sense. Why would I park my money for a shorter period of time, perceive less risk, and get more in interest in return than parking my money away for a longer period of time? Right. So it's inherently telling us something isn't acting right. There's this fear that something's going to change in the long term. It's going to drive interest rates down on a longer term.
Channel between 78 and 88.
The actual
fear,
we're though,
consolidating more or less down here.
In terms of the
better than
closer you
falling.
are to that event happening, there's this
the fact that we're over that
75% signals
mark
is actually when you see it
like
kind of re-steepen and normalize.
Like
because usually, particularly when you see the shorter terms come down, and kind of uninvert that way. The reason being is there's this quick repricing happening that's like suddenly we need to adjust the short-term rates to meet the reality of the situation.
Price action like Friday, but we need it to hold
closer to the event. And so we're starting to see signs of that happening. Long story short here, Tom, where you had about a full 100 basis point inversion in the 2s, 10s when you looked at those interest rates. And now it's down to about 40 points. And this is basically repriced in a matter of 2 or 3 days in the last couple weeks. And that's significant because almost every single recession, actually every single one of the recessions where you saw the 2-year, 10-year inversion,
2 out of 13.
That quick repricing of the 2-year right before that re-steepening as it's seen is actually basically the preempting moment of that impending recession. So we don't know if they're ultimately going to get it or not. History would say that there is some type of economic slowdown on the horizon. The reaction function of the banking turmoil, I think, leads to that conclusion as well. We talked about credit conditions tightening, lending conditions are going to tighten. This hoarding of dollars will naturally take place. This, going out and seeking to find collateral will take place. All of this has impact, Tom. So I think the most critical piece now is we're sort of working our way from a period where prices were accelerating to the upside, inflation, all the while we saw kind of growth decelerating. So you had this stagflationary period, and now we're moving towards a period where it's going to be a little bit potentially more recessionary. You might have growth decelerating. You also have that price aspect decelerating as well. So it could be described as deflation. Not going to say that yet, but that's your scary moment in a market cycle, as opposed to other ones that you see like reflation,
still pretty early. 12 o'clock,
and things that will
work
towards
the move
on the
down
other side.
from Friday's highs.
And the word stagflation coming into play a tad bit from
high to low, it's 12
some people. I've read some articles now where they think that might be one of the next steps. But if you look at the Fed funds rate and the CME Fed Watch tool in particular,
SVIB
the odds of a 25 basis point hike now are only about 40%
SVIB?
At the May 2nd and 3rd meeting. With,
SIVB,
if you go out a little bit further, they're expecting a few cuts by the end of the year.
Was because
June, it's about the same. That we have no cuts, that we remain where we are now between 4.75 and 5%. So the market's diverged from what the Fed is telling us, where they have their terminal rate just above 5.1%. Is that the market hoping this is what happens, or is it that the market's got
you're
this
actually
wrong.
talking about SVIB.
Well, I would say that I think the market is taking control of the wheel, if you will, and is basically laid out what is the likely, with all
there's a
the
little move up on
information we
GME
have
up to
now,
VWAP.
policy path.
Yeah.
The Fed
Manana.
can't just veer us to this path.
4K
It has
tomorrow.
to hold the market's hand and kind of meet the market where it
If
is.
BY gets to 7,
but we don't have
was
all the
that
information
$500,000
yet.
for you
There's
guys?
still time between now and the next meeting. There's still time. But we're also going to start hearing from the Fed more and more. And there's probably going
far as
to
the
be
value of the position,
a scenario,
not
and
profits.
the expectation should probably be this, that you're going to have the market start, or the Federal Reserve start walking towards the market.
Right.
And so Jerome Powell at his press conference essentially outsourced this to the market, really emphasized data dependence, even told us that, hey, expect this reaction function, expect tightening credit conditions from this fallout. Didn't wait for it to happen, just said, hey, historically this happens. We're going to act as if it's going to start happening. That's going to essentially do our job for us. A lot of times in the past, they waited for that to happen before they talked about it. So you can already see this proactive nature of kind of going towards that off-ramp. Things are subject to change, and I think this is the one thing that this Fed has done better than most is they've left themselves options and optionality. They're not going to pigeonhole themselves, but I think the market's probably closer to right than the dot plot at this point.
Ooh, I like that analysis there. But at the same time, Alex, we still have robust jobs out there. If you look at the weekly jobless claims number, the JOLTS report, 3.6% unemployment rate. That's still not where the Fed wants it. But then also, at the same time, we still have inflation. A lot of that stuff's backward looking. But we'll have to wait and see on that if inflation does, because many predict that inflation's really going to take a chop down in the next couple reports on that. We get PCE later this week. What else are you focused on this week? Because earnings have dried up. We got a few big names this week, but data might be the driver here.
Yeah, it very well could be. Obviously, on Friday, we're going to get the PCE price index and that core PCE. That's going to be important. Obviously, if there's some significant hot print there, it's really going to throw a wrench into these plans. It's going to make it more difficult for this to have this shift in expectations without there being warning signs flashing, if you will. The fact that we get to hear from Federal Reserve speakers, I think, really changes things a little bit. We're going to be able to
parting
watch
gift.
that ebbs and flow.
Thank you, Ace.
But the next major
you
thing
lurkers
to
out
really
there,
keep our
Ross
eyes on,
England,
this is, more in the medium term here,
free
Tom,
membership
is
there.
watch earnings, watch guidance
Gifted by yours truly,
expectations,
Papa
because
Ace.
there's an anticipation now with what's happened in credit and the anticipation of that. You're going to see things played closer to the vest. You're going to see companies that maybe were considering hiring, maybe hold off on that. Maybe they do have an optimistic viewpoint, but maybe they go with their conservative viewpoint for guidance going forward. There's going to be spillover effects from what happened. So it's not really that banks are failing, that's the problem. That's a symptom of the problem. And these new lending facilities, they're going to provide liquidity. They're going to shore up the symptoms of what's going on, but they don't necessarily solve the problem. So I would suggest that we're probably going to see calmer conditions, barring any major news headlines for the next few weeks. But that doesn't mean that the ship has sailed past the choppy waters. We just might be somewhat in the eye of the storm, if you will.
Yeah, I think we're going to be data dependent. Fed speak is going to ramp up. I'm
still doesn't have it.
Nobody's going to be on the same page as far as the Fed speak this week.
For sure.
That's
has
really
way more risk.
Important. You're
Their
going to
upside
have to
is
watch
more,
that
though.
for any particular moves.
Typically how the market
for
works.
equities and
risk,
yields
reward.
themselves. All right, Alex, let's take a quick break.
At $7 on BBY, though.
Look at Caterpillar. He's down about 10%
What values that
this
put
year
your
and
position
was
on?
downgraded this morning.
Quarter million, half a million?
Fast Market's coming right back.
We don't have those. Oh, that's right. That's right. That's right. So, sorry, I questioned. GME back to VWAP. SPY's moving up here. Double bottom is being confirmed. Bed Bath not getting any love yet. Silvergate still hanging out below VWAP, kind of in that little 5-minute bear flag. Up 25%. However, that bear flag is holding above this support level from yesterday, so maybe that'll hold. Nat gas, new low. I don't think I want to sell it today. Try and hold off till tomorrow, but this is burning my account. BBBY at 5. Every time I buy a stock goes down. What's 5 for you on it? Bungie, is that 250,000? $160. Well, dang, man, you need to up that position size. $32,000 shares. Probably only more than I wanted. Probably. Getty maybe making a new high here soon. It's up 7.25. Nine Energy has continued to climb today. Can I get a 5K? Can I get a 10K? Bye. Climbing to the WAP. BBY actually a little green candle in. If SI holds that support or flushes.
That then has spillover effects. It's going to have spillover effects not only into companies like Caterpillar that sells this type of machinery, but also companies like United Rentals that rents this type of machinery. And so you start looking at it as you have these holistic viewpoints, and then there's the micro aspects of them in terms of where you can actually express them. So I think this is Baird in particular telling you how they see essentially this idea that this soft landing is becoming increasingly less and less likely. So we already talked about threading a tight needle to begin with, Tom. We've been talking about that for months. Mm-hmm. Now it's becoming a reality where maybe that threading of the needle is no longer really in the cards. And the question now is more of, where do these slowdowns happen? How does it actually take place, and what areas are going to be most impacted? This is, of course, Baird's assessment of how this could impact kind of your general construction in the U.S., and then these are the byproducts of the companies that will suffer from that.
Yeah, backlog growth had already been softening a little bit, but they do have a backlog. I think that's a positive, but I think that the credit tightening discussion within this downgrade really important as, you're buying big, heavy machinery, and it might be corporations or medium to smaller industrial size type of companies that are trying to buy these products. But at the same time, if the credit cycle starts to tighten a little bit, that might create some headwinds. I think that's what this analyst was trying to get to. But you've got an example trade here for us, Alex. In this, the stock's just above its 200-day moving average. Mm-hmm. It might be getting a base there about 210, but at the same time, this thing's been breaking down.
Had an order down here at this double bottom trying to get filled, but never
you
did.
Talked about how it had been a pretty strong performer for some time, though. But I just wanted to look at this with the lens that Baird laid out. So assuming you're buying into this more bearish narrative and understanding, they're talking about 2024 within this note. They're talking about things that are anticipated but haven't actually happened yet. And so we know the market's forward-looking. We know that the market
you pretty much have to get the
attempts to price out things from the probabilities that they assess to it as the collective before they actually happen. But when you're looking at this, I wouldn't look at it as, say you are bearish in the stock, say you wanted to express that, but you also wanted to have duration for the to actually unfold. And so I looked at buying a put calendar, Tom, in Caterpillar, kind of your traditional old school put calendar or any calendar spread, using monthly expirations, because of course, back in the day, there was only monthly expirations, and this was your only way to do horizontal or time spreads, was to go month over month. And I think it gets the actual spirit of what these trades are seeking to do a little bit better too, being more of a volatility play as opposed to simply looking for a way to express a price outlook. And so, of course, this is bearish because I selected a strike that is lower than the current share price in the stock. And so right now, Caterpillar trades about 216. This is the 200 calendar, so it's about 8% lower than where we're currently trading. It's a reasonable expectation that a stock could sell off 8% in the better part of the next month and a half. So I don't think it's an unattainable price, especially if you believe that some of these things laid out by Baird could start to take fruition, or the feeling that they could starts to build. And of course, you can see by the risk profile, which I think does a good job of illustrating what you want to happen. You want this to get to 200. That's the apex of the profitability, but it doesn't need to be a perfect pin.
Right.
A move lower, an increase in implied volatility, which is oftentimes associated with moves lower in stock prices, is really the best case scenario for this one.
Yeah, let's break this example trade down. Buying the May monthly 200 strike put, selling the April monthly that expires on the 21st, the 200 strike put. So it's a 1 month wide, 4 week wide put calendar to the downside. You're paying a $3 debit. That's going to be your risk, $300 per spread. But as you noted, Alex, if the stock does fall and implied volatility expands a little bit, that'll expand the price of this calendar because it is a long vega or volatility trade, because you're buying that further duration May 200 strike put. But if you see here from the risk profile setting up, you've got break-evens near about 187.50 on the downside, and all the way up at 215 on the upside on this one. So you still have a range, and I like the flexibility aspect, Alex, of this trade, where based on your assumption over the next 53 days, which is May expiration, you have 53 days in that, you anticipate this stock to grind lower in this example. If you're more bullish, maybe you do a call calendar on the upside. If you're more neutral on this, maybe you do the 215 put calendar, something like that. So the flexibility of these calendars. Now, you do have some assignment risk going into April expiration on your short options on the 200 strike. But the idea is the market's open, liquidity is provided to potentially roll that short strike as you get closer to expiration, collecting credits, reducing your break-evens, or expanding your break-evens, increasing potential profitability on this type of strategy.
Nice weather, good hike.
Implied volatility is still in the lower
springtime hikes in the mountains, mud season
of what we've seen over the last 52 weeks. So that makes the calendar spread less expensive also. No, a quick note, though, you do have earnings on the 27th of April on this, so you do have some event risk going in. But a good look, taking what the Baird analyst said, if you think that is going to grind lower over the next couple months, this might be a strategy that works in that type of atmosphere. All right, Alex, we'll take another quick break here, but when we come back, we're going to be joined by Andy Swan from Likefolio for a discussion on Roku, which has rebounded at about 60% so far in 2023 and was upgraded ahead of the open today. Stick around. Coming right back.
Empanitas. South Tucson. Yeah, that's so warm mountains. Alright, at view up there on GME and SPY just below it. Silvergate up 16% still, but did give up view up. Right about $2 now. Kraken. Silvergate has discontinued the Silvergate Exchange Network. Uh-oh, maybe that was what caused that sell-off. No, that came in 11:05. Huh. Oh, discontinue the Silvergate Exchange Network.
The door is left open.
Swift, Fedwire, and ACH transfer services. Doesn't seem like a good sign. I was at 11.05 though. Bitcoin at 10-day low. CFTC alleges Binance offered unregistered futures and option contracts to U.S. traders. Ron Barron told Elon Musk to stop tweeting when angry. Get an ice cream cone, just don't use Twitter. Gamer. Short interest in Deutsche Bank stock rises to 3.28%, or 57 million shares of free float from 2.3. Still very low on that one. CFTC charges Binance and its co-founder, or its founder, Changpeng Zhao, with willful evasion of federal law and operating an illegal digital asset derivatives exchange. Trucks up there also. There's that little bow right there. That one little clip.
Oh, that goes. Oh, this goes like here.
Pharmacy benefit managers accused of price fixing by Ohio Attorney General. That was Cigna Humana Prime Therapeutics named in Ohio price fixing lawsuit. Federal Reserve Vice Chair for Supervision Michael Barr to tell Congress banking system is sound and resilient.
Has grown in terms of consumer demand, right up there with the Apple TV, and really dominating against Amazon's and Google's competitive devices. And one reason for that, we think, is, people are really looking for that integrated solution. I know this was very controversial when Roku decided they were going to start making and manufacturing TVs for sale instead of just the box that plugs in or just the software that plugs into existing manufacturers. And we actually think that this may turn out to be Roku's best move, because while the streaming industry is, somewhat capped right now, the shift from wanting a device that plugs in to a TV to a smart TV is really underway. We see smart TV usage mentions up 27% year over year and growing. And so for Roku, we think they're making a bet in the right direction with their entrance into the actual TV manufacturing business. They have the brand recognition to do it. They have great software that people trust, and everybody's kind of looking for that all-in-one integrated solution that Roku can finally bring to them.
Andy, I love that you bring this up, because whether or not ultimately in the end what happens with Roku, I think still remains pretty polarized, and for good reason, to be fair. But I don't think anybody can disagree with the sentiment that you're expressing here, which is that the leadership at Roku knows what they where they operate, where they stand, and what's potentially coming next. They have invested seemingly extremely intelligently in terms of where they're focusing their brand, and they've done so very effectively. The movement into TVs was a necessary transition as more and more of the existing televisions became smart TVs. You don't need that box anymore. So it seems now that the brand is essentially their user interface, their UI. They're familiar. You go stay at an Airbnb, if it's a Roku TV, you instantly know how to use it, as opposed to if it's some other brand that you don't have, you click around for a little bit. That is essentially their IP. That is essentially the brand at this point. I know that they've made some forays into content, but none of it's been extremely successful.
Using BWAP as resistance
Not to say that they are, home clear here, Andy, and that somebody like Apple can't come in and disrupt it. I think it's likely and maybe even possible that it's going to be a tough battle. But there has been companies, and Apple's really the representation of that. If you have a user interface people like, and you build on that, you can be there's limitless potential. I mean, the iOS is what Apple built off of. And so what can Roku do now that they're going head-to-head with iOS? Because essentially everywhere iOS has gone, it's won that battle.
Yeah, well, I think that's true. I think that, Apple ultimately is Roku's biggest competitor. But what Roku can do and what they are doing is what they have done, and that what they have done consistently, and that is stay ahead of the competition and stay ahead of the consumer. They're really a driver of how consumers use things. They are dictating a lot like Apple did with the iPhone and that iOS interface. It wasn't that consumers were demanding a touchscreen, multi-touchscreen interface and all of these different ways to interact with a device. Apple brought them to the future, and I feel like that's what Roku does pretty well. Not Apple-like, not iPhone-like, but they're getting there, and that's their big bet, and that's their best play. And so I think, our sentiment, I agree with you in general, and that is Roku's doing what it needs to do, what it can do, and it's doing it very, very well. The content side of the business aside, where they lose a lot of money, I think they could focus a little bit more, and they're probably doing that. But overall, this is a company that executes really well and takes leadership positions in a growing industry. That's something that we always like to see at Likefolio, and it's good to see Roku really hone in on this opportunity in smart TVs.
Yeah, they're starting to pick up a little bit of digital ad spend, but you got that mentions count up where it's kind of up 11% year over year, which is positive for Roku, maybe on the back of some of the gains that they've seen, because right now they've got over 70 million accounts at the end of 2022, Andy. Is this like a warning shot that, hey, if you're in the streaming business, you can't ignore Roku because so many people are on that platform, and that's why we're seeing maybe this tick up in mentions count at this point, because, I think it's hard for a lot of people just to kind of wrap their head around, hey, I subscribe to 5 streaming services. Right. I need an aggregator. Help me.
Yeah, you need an interface that makes everything work, just like it would be a nightmare to interface with all of the separate apps that you have on your iPhone
to that question
in a
last 20
separate
minutes.
internet world. Apple brings that all together. They're the gatekeeper, and then they make money on the transactions that happen through those processes. Roku's basically the same
sold and
line
bought
of
back in
business, and so if they can continue to make that user interface simple,
I closed out.
easy, intuitive,
I had like
and
70K worth
drive
before.
people towards the
closed
content
out for
and
like
partners
a $10,000 or $15,000 loss.
Share the most revenue with them, quite frankly. They're in a very good spot to continue to grow the revenue side of their business. And on the profit side, they've got to just start dumping some of the losing ideas, like
it's hard to know my cost base.
some of the big content stuff they went after. The content is extraordinarily crowded. Netflix, HBO, you've got unbelievable
I think a majority though
for
is
consumer eyeballs. There's only so much we can watch.
Under 2.5.
And I think Roku being the
I think all of it's under
middleman
2.5.
or
Majority is under.
the interface that we use is their best bet, and that's where they're going.
Yeah, 2 years ago they said we're not going to get into the content game, and then 2022 they come out and they said they're going to get in the content game, and we all know from the other streamers that's a losing money proposition at this point as they expand their footprint.
Remember the question and answer,
they don't
and
have
I
earnings
appreciate
until
that.
the 27th of April. Do you have an earnings score based on this data?
Yeah, right now we're neutral, and it's because of the recent run in the stock. Overall, we really like where the company's going. It's a good trajectory turn, but would like to see the stock pull back a little bit. If we get those opportunities, it could go bullish pretty easily.
All right, great stuff, great data. As always, Andy, appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of Likefolio, breaking down the data here on Roku. Makes a good point here, Alex. The stock has run up pretty significantly, but when the pandemic just started 3 years ago, Alex, this stock was trading in the 80s. It's still $62 at this point, so it hasn't even gotten back there. They've got 70 million accounts. They added 10 million in 2022.
It'd be
So
pretty
they're
good value
still
right now, though,
on that
but-
growth trajectory, and if the digital ad spend
I
business
don't like it.
rights itself, I mean, it's above its 50-day moving average. So I looked at a strategy here, Alex, and you can help me break it down, to take advantage of a grind higher, but a low-cost entry point on this, because the stock has moved higher. You want to maybe potentially stay risk-defined in this. So I looked at a call condor on this one, not an iron condor, a call condor. All 4 legs of the spread are in the call side. We're going to buy the 63 strike call out in the April monthly cycle, so 25 days till expiration. Sell the 67 strike call one time, sell the 71 strike call, and then wrap it all up by buying one of the 72 strike calls. So in essence, you're buying a $4 wide call vertical and selling a $1 wide call vertical to offset some of the costs. You're paying roughly a debit of $1.60 on that. There's your risk, $160. And that takes your break even to $64.60.
I'm pretty sure they
Alex,
make
on
up
this one.
option
That's less
plays
than $2
just to,
above the current share
just to
price
add more legs
over
so
the
they
next
get more
3.5
commission.
weeks. Your thoughts here on the call condor,
condor?
moving higher as maybe opposed to buying a vertical or buying a straight call?
Yeah, I think it comes down to the upside target that you have and the assessment of how likely that target is to be reached or exceeded. Because if you have a optimistic viewpoint of something, but there's a cap to where that could go, you could use just of course, a vertical spread. You could use a covered call, or you could use something like a call condor, which is really targeting the amount of money spent. And so everything you've done here, from selling the 67 call to selling the 71, 72 call vertical, is all in efforts to reduce the cost of the 63 call. All of that is to get that debit down to $1.60, which lowers the break even and increases the maximum possible profit on this spread. But there's always trade-offs. So the trade-offs is we can outrun it to the upside and start giving back some of that. But in the way that this is one that has been structured, theoretically, all these options were in the money. They went through assignment and exercise. They would offset for a price that is higher than 160, so that you don't have any theoretical upside risk. And I think that's the biggest key piece here is, if you want to be bullish, structure a trade that benefits from the stock going higher. If it can overrun to the upside and you give back that gain entirely or even more so, that makes you want to kick yourself because, hey, I was right in my assessment, but I made no money. That's the worst feeling.
Yeah, and the lower cost entry point kind of is one of those trade-offs, right, that you're talking about, where maybe you don't gather as much upside, but with the run that it's already had and you just expect it to run higher, this strategy might play into that. Now, you mentioned the probabilities that maybe this stock does move higher above 65. Well, there's over an 80% probability, according to the option pricing right now out there, that it'll touch 65 or higher at some point into expiration in the next 25 days. So have to start looking at that. Did pass up its 50-day moving average. So if you look at the technical side, maybe it does have room to break out. If that's your assumption where you think it's going to continue to grind higher, like this analyst did that upgraded the stock today and put a $75 price target on it. But a good look at a call condor strategy as an example here to take advantage of a move higher if that's your assumption. All right, Alex, we're going to take a quick break here, but when we come back, we're going to take a look at Salesforce, which is up over 40%
I don't know. I'm a little thrown off by GME.
With Elliott Management pulling back on director.
Just looking at it without the lens of what we've seen the last 2 years, and it maybe being a normal stock and not something that's fixed or not something that's broken. It looks like it's consolidating here, not necessarily making a move back. I wouldn't say the 15 range though, even if it did start coming down. Yeah, I guess a gap fill would be all I would assume. But just looking at it, I mean, it's got everything you want. It had good fundamentals, caused a rally, and now it's holding up those gains. So consolidate here for a bit and then probably start ripping again. That's without thinking of anything else going on. The 10K that might cause a rip or a drop. If it is still a broken stock and it has these cycles pinches, how that plays in. But I'm kind of assuming at this point that it's fixed, and it's just look at it for what it is and Yeah. And NFT dividend would definitely probably make the stock feel broken again. If there is a large short position still. Yeah, gap's at 1835 around there. Yes, it's like 1772. But I mean, that's a pretty big gap to fill. So that might not get filled until after a big run up, and then maybe during a market crash we'll fill that or something. That's maybe what we could see happen, actually. Which would be bullish. I mean, if GME, if the low is filling these gaps, you know, down here at the 17s, the low on some capitulation in the overall market, you know, if it's not breaking these lows, it get into tens or even single digits. So basically, we start a sell-off and a crash the market, and GME is up 30 or 35. Might be the case. Might be how it plays out. You had peer pressure not to buy at 15? I don't know anyone that was saying don't buy at 15. Especially when we double bottom there. It was, yeah, I started getting leaps like this day, this day, this day. But I wasn't expecting it to be a gap up on earnings. Thought the earnings would probably make a little more sell off and then you'd buy sub 20. Don't hire family. He's the one that's managing your money too. That's funny. I think even if we didn't get that big earnings gap up, still was thinking GME would rally up to. You guys remember? I think that's what I was saying. I thought it'd rally up to at least the bottom of this channel, like 1940. I thought maybe to hit that as resistance. It broke that, probably this 24 be the next level. Broke that. No, sorry, was this 22? No, never mind. After 1940, I was thinking 24 is the level, kind of the bottom of here. It basically did that. I just did it with a gap up on earnings. So with that, I guess, does it go higher or not? That's where I just bring in experience with other stocks and having positive earnings and having a good earnings continuation. But I think it is still heavily weighed and contingent on the market not crashing, because GME is very tied to SPY. So whereas BBY, I could see that going up regardless. James? Can help. Elon said that, that's true. Leave it alone. Might get an engulfing candle here on the 5-minute on Silvergate. That would be neat. Theo was telling people not to buy, basically.
Through 70 with conviction today. Here you can see currently trading just shy of 72 time at 71.71. And, you know, I think some of this you can chalk up to, well, just the rejection of the lower level that we saw, the fact that crude's been very comfortable around the $70 level. We saw the technical breakdown there. You can see about 4 or 5 bottoms into the spring of this year, which held 70, and then the disappointment thereof in terms of some of the banks, economic uncertainty in terms of what this means. But it does seem like crude here trying to rally back here today. I think some of this you can chalk up to a little bit of dollar weakness recently, back down to the 102 handle. But one thing I did notice is that volume's been up at the CME. So kind of think of this sort of like a pop bottle that's being shaken up here, Tom. S&Ps, Nasdaq, Dow, Russell, I mentioned very much range bound. Crude's got some energy to it, so a lot going on this week to keep an eye on.
Above
Yeah,
VWAP.
definitely, and going against the lower inflation expectations that we've been talking about recently. All right, thanks to Ben Lichtenstein, host of the Future Show, breaking down markets and crude oil. But now let's bring in George Tillis, senior markets correspondent here on the network, to help us break down and discuss Salesforce.com. George, I was looking through some of the results from their earnings. They're doing stock buybacks. They're extending guidance, raising and expanding guidance here moving forward. So it seems like they've righted the ship pretty quickly, because right before 2023 started, this stock was at multi-year lows.
It was. I think this is a great opportunity. I mean, the stock caught a bid in early January with the rest of the stocks and the markets. It's actually just been trending higher since then. We know that the market has pulled back since February overall. But when the company reported earnings 1st of March, pretty phenomenal report in terms of earnings per share. They generated $1.68, beating the estimates, and that was double the 84 cents they printed for the same quarter last year. And sales for the quarter were up 14.5%, beating the estimates. But really, if you look at the numbers overall, with the stock higher by close to 40% on a year-to-date basis, also having a gap to the upside on the March 1st earnings and pulled back to fill that gap in mid-March, and now it's in a continuation pattern. The company actually reported for the full year a pretty remarkable year, 18% revenue growth. They generated over 18% operating free cash flow growth. At the same time, $20 billion in share buybacks. That was about 12% of the free float of shares last year, and that's pretty remarkable as well. And if you actually look at the prospects on a forward basis, just looking at it from an objective viewpoint from the estimates, they're expecting 22% operating income growth. But the thing is last year, from a net income standpoint, they barely generated any net income profits. And I think this is perhaps why we're seeing Elliott Management actually cancel their proxy bid to add a board of directors, because they actually see pretty phenomenal growth for the company on a forward basis, considering their estimates for EBITDA growth in the year of 2023 for the full year is in the mid-teens. So it looks like they've righted the ship. I think last year was a pretty bad year from a net income standpoint, but nonetheless, for the full year, sales and operating cash were pretty remarkable. And I think that's one of the reasons why now we're seeing some patience from Elliott and Company, because of the fact that the company seems to have righted the ship. They're running a very efficient business right now, and they're growing across their multiple cloud platforms, not just their CRM or Salesforce-based customer relations management software. I mean, this is a full-fledged marketing cloud company, e-commerce cloud, data visualization, and data analytics company as well.
Yeah, all right, George, appreciate the rundown here of Salesforce, and that was a good report, and Mark Benhoff was definitely a little bit optimistic here heading into the end of this year and into 2024. Thanks to George Tillis here.
That's right.
Yep, thanks, George. Senior markets correspondent here on the network, helping us break down Salesforce. Alex, I'll go to you real quick here before we get into an example trade here. It's righted the ship a little bit. This stock was trading $126 just 4 months ago.
Yeah, I mean, this is still, the premier player in cloud software, particularly stuff that has to do with sort of the corporate world and the software is required to run businesses across the country and globally. But it was the exact kind of stock that was falling out of favor for much of last year as we watched valuations be suppressed tremendously. We watched the interest rate pressure on growth companies, and basically the fact that you just had alternatives to park money. You didn't have to just solely seek growth for some sort of yield in return, even though a company like Salesforce is still a pretty high quality growth company. All that being said, they did make the probably necessary shifts towards efficiency, Tom, which has really been the theme of the start of this year, which is looking for this high quality growth, but also a realization that even those companies, the Metas of the world, the Salesforce of the world, need to tighten that belt loop a little bit.
Yeah, definitely. He did mention efficiencies. They've had some turnover in the executive team also. That was causing some consternation there at the end of 2022.
But I looked at a trade here,
Alex. It's simple strategy, or more simple than maybe some others. Just a two-legged neutral to bullish put vertical that I sold in case this stock does pull back. I looked at the April monthly option series, so 25 days till expiration, just going out selling the out-of-the-money 185 puts, buying the 180 strike put, so creating a $5 wide short, neutral to bullish put vertical, collecting roughly about $1.40 credit on that. Might be a few pennies less than that right now as stock has continued to move higher. You're collecting 140. That takes your break even, Alex. 183.60 to the downside. That's about a 65% probability that short 185 is going to be out of the money at expiration. So it's a little bit more conservative, cautious on this type of trade.
Yeah, about a 5-to-2 risk-reward ratio. It's illustrating in another way sort of what you're alluding to in those probabilities. But also I think that this is kind of that prudent approach. The stock's had a nice run. Yeah. Even if you want to still be bullish, there can be a situation where a stock on its trajectory higher moves lower, faces some near-term pressure, and this type of strategy allows for that to happen, providing a little bit of cushion in a situation where also you don't need the stock to go higher. You just go sideways, you can still be profitable.
Yeah, 3 out of 4 scenarios you can be profitable on this. Stock goes higher, stock stays where it is, or goes lower but remains above 185 into expiration over the next 25 days. Now, you do have risk on this, $360 per spread if it goes below that 180 strike, but you've got that nice cushion to the downside before you get that break even, 183.60 to the downside. So good look at an example trade here in CRM. Don't be a hero type of strategy. I think about those, Alex, where it's a little bit more conservative, but you have better probabilities of success. All right, Alex, that's going to do it for you and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up with this guy.
Cheap again. Extra cheap. Silvergate with little green candle. Inflation is yet to peak in most G10 countries. We are waiting for a proper market reality check, says Bank of America. Crude oil futures extend gains up over $2 session high. Well, why doesn't that gas get any love? Tech layoffs in 2022 were the most since the dot-com bust. These 50 U.S. government staffers around the globe, it was spyware. U.S. government review finds spyware is a national security threat. Biden to sign new executive order intended to curb private hacking industry. America's banks are missing hundrds of billions of dollars, for the economist. Walt Disney CEO Bob Iger, in a letter to employees, says to begin notifying employees impacted by about 7,000 workforce cut announced in February this week. Money managers have stepped up their bearish bets against office landlords, wagering that the U.S. regional banking crisis will slash the availability of credit to property owners that were already suffering from the pandemic and rising interest rates. That's probably a good trade. Tesla offers 10,000 free supercharging miles to sell Model S and X by end of the quarter. That ain't bad. 10,000? Hungary voted to support Finland's accession to NATO, leaving the Nordic country one step away from joining the defense alliance. Accession or accession? Accession. It's not a word I use very often.
Accession.
Accession. The attainment or acquisition of a position of rank or power, typically that of a monarch or president. Accession. I guess it's the opposite of succession. Money pulled from Eurozone banks at record rate in February. Seems legit.
After we did see the 4 major indices close last week higher, we are seeing an attempt at a rally, but not able to catch any steam, at least not yet in today's session.
Yeah, it almost feels like an undoing of some of the recent risk-off sentiment. You're seeing interest rates sort of come off those kind of spike lows. You're seeing bonds, of course, selling off a little bit as those two are inverse. You're also seeing the NASDAQ become the underperforming index. And to me, this is important because so many of those big tech firms, which are the underperformers of today, have been almost like flight to safety assets. There's been this comfort in names like Apple, in names like Meta, in names like Amazon that just have tremendous stockpiles of cash and strong market positions. So seeing that flow out of those today is maybe indicative of some of those fears starting to dissipate.
Yeah, we do see those outflows, but they're all the major tech heavyweights are still pacing to at least close the month of March with some nice gains, especially names like Nvidia and Meta. But as always on the show, we will kick things off with our upvote and downvote segment. We will chart and trade those upvotes. And our FOMO discussion today is all things Roku, surging on the day, although giving back some of its initial gains after Susquehanna upgrade. And we'll discuss Carnival actually falling despite posting a top and bottom line beat in its first quarter this morning. Last but not least, our under 30 name today is Corning. That's ticker symbol GLW. After Deutsche Bank did upgrade shares, saying the company is now turning a corner, Alex.
Still get a selling opportunity.
A pretty fascinating company. Is
big engulfing candle here.
The maker behind a lot of the
CCL
glass
also.
that you see in the screens of devices that we're using on a daily basis. So the more you know, and I'll be happy to have that conversation with George when we get towards the end of the show. Obviously, cruise liners and Roku, both today, interesting as well, going in different directions by about the same margin though here today. But let's start with upvote, downvote, a lot of fun ones. Starting with a name that we used to talk about, it feels like a lot more often than we have lately, but making its triumphant return here to next gen is Pinterest. Not endorsements, not recommendations here, Jenny, but this is a nice note from UBS on the shopping / social media kind of hybrid.
And we've always said this is more of a resilient player in the social media space compared to some of the volatility we had seen at Meta or Twitter when it was obviously still publicly traded. But actually this year it's underperforming names like Meta, up about 15% year to date.
Saying it's Phil. I was talking about an order I had.
Did upgrade shares to buy from neutral with a price target of $35. That's up from 27 and does represent about 27% upside from its closing price on Friday.
I think you want to buy it back in.
Use Pinterest as an event-driven positive catalyst and an estimate revision opportunity, saying that their moves in advertising technology can drive a step function improvement for their overall revenue growth. The firm also did say that early advertiser feedback on the LiveRamp partnership alone suggests significant improvement in ad efficacy that should drive budgets, while also monetization partnerships that could unlock some incremental demand going forward here for Pinterest. Pinterest is now down about 7% from its yearly, or 4% actually from its yearly high, and about 73% off of its yearly low. So still rallying, not just to dwarf the substantial move to the upside we've seen in this name, just not seeing the same year-to-date performance compared to a Meta or even a Snap at this point.
I'm going to say upvote on this one. Excited to talk the chart technicals and get Rick's input on the next segment. But I think we made it clear, Jenny, you talked about us describe this one as resilient, but I would just describe it as a user monetization that makes sense. You're going on Pinterest because you want to get ideas for things to buy either now or into the future. Makes a lot more sense to advertise on that than it does on a messaging app, which you're sending pictures that disappear to your friends and social circles. So that's always been my point. But that doesn't necessarily mean that Pinterest can't fumble the ball through misexecution. Doesn't mean that other players can't come into this space and disrupt the role that they serve. And so just because they have a path to monetization that makes sense and can be accretive and win-win for both the consumer and for the company, doesn't always mean that the stock's going to go higher. So obviously from this note, it seems like the street likes the changes and things that they're executing on. And with that, it's accompanying with a buy rating now and a price target that's about $7 higher than where we're at now, a good 25%. It's pretty impressive, and so that's going to make the conversation with Rick just that much more interesting.
And our next name today is one that's been pretty consistently impressive, at least this year, and that is all things NVIDIA. Now, UBS did also lift NVIDIA's price target to $315 from $270 with a buy rating. And I actually found it really interesting. Of the 49 analysts that are currently covering NVIDIA, we do see 1 that does lean bearish, 10 are neutral, and 38 are in some capacity leaning bullish. But the average price target among those analysts is around $262, which actually implies downside from even where we're currently trading now, Alex, in spite of this move about 1% lower on the session. So this 315 price target from UBS is definitely to the upside of the average analyst price targets. We also did get a report today, I thought that was really interesting, out of Goldman Sachs Research, highlighting this widespread use of AI that will result in strong productivity gains as well as stronger long-term economic growth, saying that they actually see the AI adoption could create about $7 trillion in global economic growth over the next 10 years, comparable to a 7% increase in annual global GDP. So they do see then NVIDIA being one of the main beneficiaries of this push. This is not a new narrative. We've been talking about NVIDIA's push into AI for quite some time now, and I think that aids the fact that we're seeing shares up a whopping 14% this month, down only 9% now from their yearly high, and up over 140% off their yearly low.
Yeah, and it's also no surprise, too. I mean, this is the trendy kind of in vogue investment theme, which is now artificial intelligence. In recent years, it's been electric vehicles. Before that, it was alternative meats. Before that, it was cannabis and all the disruptions there. All of them, highlight something, which is there is a demand for this, there is investment into this, and there is potentially staying power in these markets. But all of them, maybe artificial intelligence or AI will be the one to buck that trend, got ahead of themselves. And there's been substantial repricings in that. And so the beauty of something like NVIDIA is they're essentially just supplying a resource or material or device or whatever you want to call it, component part to the arms race that is artificial intelligence. And it just helps a little bit, too, that the companies competing in this space just happen to be some of the world's biggest companies with the most cash. Close to GME. So maybe that investment will continue. And so it's no narrative, as you said. I think it's an important narrative, but just one more feather in the cap, if you will, for a company that's already done tremendous things. It did lose about 2/3 of its value last year. It's doing its best to kind of regain that, up about 160% off the lows. But we're still a good $80, or let's call it 30 or so percent off of the all-time high. So it's just gaining back value that at one point it already had prior to all of this chatter around AI being front and center. So going to say down vote though, just simply because we've explored and talked this one so much lately. I mean, but there's no doubt in my mind this one will continue to come up, and it will continue to be a huge story on the micro front as the year rolls on.
And that's what I find so interesting about the fact that the average price target does still imply actually weakness from here, because like you said, we're still well off of where we once were. So clearly the analysts
still holding a level.
Look,
it bounced off of yesterday, Friday's high.
Our next name today though is Wingstop, and Wingstop is lower after it was downgraded at Jefferies to underperform from hold with an unchanged price target of $160 per share. And this analyst did say that the valuation seems to reflect an overly optimistic view of near-term same-store sales momentum. They believe the street estimates are currently fair, but upside appears limited, including in the second half of 2023, where setup around decelerating
two-year Treasury yield rises
to
session high of 4% after
multiple. As a result, they mentioned that Wingstop's risk and reward is now more skewed to the downside. This name, though, another name that has had a pretty decent year thus far. It's up 33% this year, down about 6% from its yearly high, but also up 170%, nearly off its yearly low. I mean, an impressive chart, less impressive when you zoom out naturally, but still on a year-to-date basis, this name has been quietly an outperformer.
Yeah, and it's done really, really well. Obviously, this is almost more of a valuation call, just basically how I described it when we talked about this one in depth on Morning Trade Live. Jenny, is really just the current price levels, the current expectations just don't have a lot of room for positive surprise. And just solely off of that, this particular analyst is just setting up a scenario where, hey, there's a chance things don't go perfect. And if they don't go perfect and you fall short of these estimates, there's a lot of potential room below. And so I think that's really the genesis of this. That's the move to underperform. That's the 160 price target, which is just basically saying, a lot of optimism is priced in. A lot of things need to go perfect or right for this to maintain its value. And in the event that that doesn't happen, there's room for the downside. Going to say downvote, though. We looked at this one on a technical basis during Morning Trade Live. So, again, just to kind of keep things fresh and continue talking different names, let's talk this last one that I don't know how fresh it is, but the headlines are constantly being made, so there's something fresh about it, and that's Tesla.
I was going to say, I think it's fresh for the week, but definitely not fresh for the show, as we do frequently discuss Tesla, but for obviously good reason. They're actually still maintaining their nice gain today, up just shy of 1%. Barclays did note they expect a modest delivery beat for their first quarter, with production outpacing deliveries. Now, Tesla is expected to deliver its first quarter numbers out this weekend. This will be important because it's the first time that Tesla will report these delivery numbers since slashing its vehicle prices across the globe. So will be interesting to see how they were able to fare given the fact they've accommodated those lower costs for their vehicles. Now, this Barclays analyst did maintain an overweight rating and a $275 price target, which does imply a fair amount of upside from right now where we're currently trading just shy of 190.
I've never tried streaming financial on Twitch.
First quarter deliveries to come in around 425,000 units. That's modestly ahead of what consensus is calling for, around 420,000 units, and it's up significantly from the 405,000 units they did report a year ago. They noted concerns, though, that have built on the pace of deliveries amid some weakening demand signals. The commentary they said on the pace of production does likely imply some upside. They do believe a beat could be a catalyst for the stock, as expectations have really come down amid some of these signs of softening demand. Tesla was on a tear in the months of January and February. We've since seen it falter slightly, down about 7.5% for the month of March, but all in all, still up 55% this year, and still up 87% from its yearly low. So another name similar to NVIDIA, where you have to discount I think it's important not to discount the move, but we're still down about 50% from their yearly high, so just sort of clawing back its losses it saw at the end of 2022.
It does look like
and this has been a growing sentiment amongst the analysts that are covering Tesla that tend to look at it through a bullish lens, and that is that these price cuts we've seen in Tesla recently have been actually more competitive
practical car other than its price
efforts because they can and because they've been efficient.
Some
they
lifestyles
can
it doesn't really suit
tighter margins as opposed to a need need because demand is waning. And I think that these delivery numbers, when we get them, and this emphasis on this demand component is really going to be important, because if there is a debate in deliveries, if there is signs that demand is actually stronger than expected, it could give credence to this idea that these cuts were more from a competitive landscape as opposed to a trying to stave off these demands that had really fallen off the cliff. However, on the other side, if you do see major misses and signs that demand is falling, it's going to really throw cold water on this narrative. But fascinating. Obviously, we don't have the answers quite yet, but it's going to be the first major test in this growing sentiment that it's actually a good thing that Tesla's cutting prices. It's not that no one's buying them. I have no opinion one way or another. I'm just really excited to see the answer to that question when we get it. But I'm going to say I'll vote for Tesla because why not? It's Tesla.
I know, I agree. I think a lot of the sentiment we heard from some of these smaller companies last week that they were actually cutting prices but not able to handle that in terms of their margins. I'm excited to see how this does finally fare for Tesla, but we'll dive into our two charts, obviously in Pinterest as well as Tesla coming up next. We'll be looking at some example trades. Stick around to Next Gen Investing. We'll be right back.
GME is coming down with the SPY. Kind of hoping BBY would be a little more bullish today. See what end of day brings, but not holding much from Friday yet at all. Not holding anything. Silvergate I'm pleased with though. Yeah, Jimmy's pulling back a little bit of the SPY. Here's an interesting write-up on Reddit. So I'm trying to figure out what's in the 10K. To me, I can think of more bearish things that would be released on it, like cause it to go down if there's something new, than bullish. However, this was an interesting point. This is by user Pomegranate Remote 4377. Says I'm hoping for some bombastic information in the 10K, like a lot of people here, but being realistic about it, it's very likely that nothing major will be shared in the 10K. And this is not GameStop playing 69D chess. 10K is not late yet, as they have until the 29th to file it, and the reason why they didn't release it with the 8K could be because 10Ks are audited, 10Qs are not. So that could be a reason for it, which is interesting. So the 10Qs are quarterly, 10Ks are yearly. And this was the first profitable quarter in a while, plus the first audited 10K after the marketplace launch. So it's reasonable to think that it would take longer for them to release it. So very valid thoughts and logical ones. Considering that the 8K earnings beat the predictions by a lot, enough to cause some considerable price movement after hours, and that GameStop is now having revenue coming from crypto, it's not a reach to think they would be even more careful with the audit. Those are good points on why the delay. But that invalidates all of my crazy tinfoil. I didn't realize that they were audited in a way that the 10Qs weren't. Silvergate. HPCO is doing well up here, huh? Silvergate's almost not top on my list anymore. Yikes. And then, yeah, being a profitable quarter and beating by that much, and then the marketplace, they're all pretty valid reasons, really. I think the best thing would be that, I mean, for GME at least, would be that there isn't anything crazy in there. Because odds are it'd be worse for the stock than better stock price. In the short term, at least. You know, if there was a merger acquisition in there, I don't see it rallying on that. They're gonna buy BBY or whatever they're talking about buying. This other case with can't remember the ticker. What was it? What was that bank we looked at? That one bank that's acquiring Silicon Valley. That's kind of unusual for them to move up like that. They're up like 50% on that news. Recently viewed as broken. that bank in North Carolina. They're up 50% on the news that they're acquiring Silicon Valley. And I suppose it's because they like the price of Silicon Valley, and they're getting it for basically $500 million when it just had a market cap of like 20 billion or something. Not too distant past. But typically, the company announcing they're acquiring something is not bullish right away. It could in the long term, but I feel like initially it's usually a sell-off. Almost a new low there on BBY. That's true, there is no merger. Well, we don't know yet. I mean, they did say they wanted to buy used companies, so I don't think they were making that up. Oh, party on Happy's yacht. Not quite. I would need about another 50k in here to have that yacht. Let's see though. Let's play the most fun game on the computer, the calculator game. Whoa. Whoa, what did I do? No, don't do it. Sketchy. Finger motion's up 5%. Well done, Ace. Well done, sir.
Daddy, I'm that right now.
Net gas, new lows.
Daddy, look at this. Daddy, I cannot find.
No, that wouldn't be it would be what I lost in the stock market 2 years ago. For the last 2 years. The high on Silvergate was 239. Osm's up 4%. That's interesting.
All of this surrounding a $2 range in this stock, Jenny.
And now to shift gears here and look at a name that I would say could be a next-gen favorite. That is Tesla.
Well,
Tesla is up
triple
about
bottom here
0.5%.
in Cosm.
It was initially up almost 2% earlier in today's session. It's since seen some of those gains sort of lose steam. But Rick, this is a name that the chart does look quite different than it did at least a month ago when we were in a very clear uptrend. It seemed like Tesla shares were on a tear. They've since lost some of that steam, but still up about 50% from their, or about 87%, excuse me, from their yearly low.
Not deep enough away, like not enough time.
Pretty much been zigzagging around since we've gone up from these yearly lows right here. You can see we were in an upward channel for a while. We hit some
You'll probably be
resistance
covering
around
the 10K coming out
mark,
for GME.
Crossed above it,
So
bounced around for a bit, and that's this red dashed line, by the way.
The next date with BBY is what, April 3rd, I think?
Kind of, as I said, another kind of
that contract expires, but not sure if that has any relevance since they basically waived the price floor.
Did transition to that downtrend.
But there might still be some relevance with April 3rd.
Within the past
moving
week
up here
or
a little
so,
bit.
breaking above our yellow 21-day exponential moving average and our orange 63-day exponential moving average.
All that waiting from this trigger back
moving
here.
Averages are kind of trending sideways right now as well. So it speaks to the lack of any real clear conviction in a trend direction here right now. We're right around the volume profile point of control, that's this thick red line here that denotes the area of heaviest trading during the given time period. And that's often can be a source of support or resistance here. So we need to kind of move beyond this congestion area where we've seen such heavy trading to get more of a directional bias here. RSI, we are in the bullish side of the camp once again, and not really showing us too much here, mostly just following price action, but we are, tilted toward the bullish side of things. In terms of support and resistance, 188 to the downside would be our yellow 21-day exponential moving average right there. Just below that, we've got our orange 63-day EMA coming in around the 183 mark. To the upside, if we can break through 197, the 216 level right here. That's our purple 252-day EMA. That seems like that could be a likely source of resistance because it also roughly coincides with our old highs from right around there. So around that level could be worth watching.
So 216, 197 to the upside, which do feel a little bit more reasonable than the 275 price target we did get today out of Barclays. But I think this analyst said a lot that coincided with the chart here, that they're looking for this next catalyst to break out above where we've sort of been stuck. So I think a lot of the bulls are now hoping for that continued upside here, but we'll leave it there. Appreciate all the technical insight, as always, Rick Ducat, our chart master. And Alex, from trading this name, we're feeling optimistic today to kick off the week. Walk us through another example trade leaning more bullish in nature.
Yeah, for those who are buying into this narrative around some of the recent actions by Tesla and what that may mean going forward, and as this particular analyst sort of lays out some of the playbook for how it all can come to fruition, I wanted to speak and show a trade illustration that really does emphasize
it was just back in 2020 that it was below these levels.
Polar side of the bullish side of the equation here. So we know that there's arguments to be had on both sides. I wanted to illustrate one that would really benefit from a tremendous move higher in a relatively short period of time, of which Tesla can certainly do.
Historically, this is a cheap price, though, on that gas still.
So looking at buying a call calendar above the market, if you went back to the early parts of July and September of last year and you looked at the chart, there was some gap activity in the kind of 250 to 260 level, leaving sort of this pocket right around that level where it's sort of the upwards 10-year chart here on that gas, where there's really some trade activity.
Right here is 2020.
You can sort of see it on Rick's chart as well. There was a little bit of a volume area that was a little bit bigger around that around those price levels, and so looking for a retest of that over the next month and a half. And so I selected 255 for the call calendar here. This is the April-May, and so it's got about 50 calendar days or so until that expiration
date. This $2 is like
which, in the sense of
25-year support,
Tesla,
basically.
That honestly could
around this $2
like a very,
hit here back
time,
in 2001,
news headlines this stock tends
2012,
to make. All things considered, though, you can see the risk profile is the same for this type of a trade. The apex of the profitability graph is going to be at the short and long strikes, which are, of course, 255 in this scenario. On this one, $2 debit means $200 in risk, and so this one needs a big move. Is looking for an expansion of implied volatility as that happens. As that would, both of those situations would be beneficial for this type of a strategy. But the one key piece that I would emphasize here is this is so easy to customize. There's so many strikes available in Tesla. So
BBBY with the green candle.
Hear this outlook,
come on, rip to BBBY. Let's see it.
Look at this exact strategy ever. But if someone who's a little bit more on the bearish side may look to the put calendar, someone who's a little bit less bullish may look to a lower strike in the call calendar family. Different expirations could be used. The one thing's for sure, Tesla certainly gives you choices because they got like every line imaginable, it seems, in terms of strike selection.
Yeah, and I know that their first quarter deliveries coming out this weekend is almost like an earnings event for Tesla, but we also now have basically 4.5 trading sessions before then. So also important to point out that this name could move, as Tesla typically does move with conviction. But both of our example trades today do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment. Now, coming up next, it's time for FOMO. We are looking at Roku. Shares are up over 4.5% after Susquehanna upgraded the stock.
Susquehanna.
Also calling for a bottom in this name. We'll dive more into those news coming up next.
That's fun to say. Francisco. BBBY with a little bit of volume on the screen candle. Does look like it's double bottoming here. Silvergate trying to hold on to 10% double-digit gains on the day. Crazy, it's still not overbought on the hourly. Daily still oversold. There's no time frames where this is overbought even. And it's still oversold in the daily, even with the like 75% move it's made from the lows. Candle turning from green to red on SI. SPY breaking up above VWAP. GME holding up here above VWAP.
More confidence in a broader ecosystem when it comes to the financial system, and we are seeing the regional banks as well as some of the big money center banks also moving
still
to
up
the upside
10%
in today's session. So this is overall good news here, Alex.
Yeah, no doubt about it. And for those wondering, nothing's certain yet as to what it'll mean for Silicon Valley Bank shareholders and stuff. That's all still, you know, in the I guess the abyss, if you will, in terms of figuring out what's going to ultimately happen there. I mean, you can do the math. It's probably going to be a tough situation for those, but nothing official yet, so nothing to report on that front. But in terms of the other stuff we saw over the weekend in the banking side, deposit outflows of regional banks into larger institutions, yeah, they happened. But they didn't seem to be as large as feared.
The
you talked
financials
about
on
some of the
this
other things
bank
that
are
the Fed
awful.
and the Treasury and the other
capital.
regulators here in the U.S. are hoping to do to shore up
Just
confidence,
this last quarter, I
provide
guess.
liquidity, all of which is seeming to have that
quarter.
effect, bolster sentiment here and reduce some of those fears.
What? No, that must be from crypto.
Definitely, yes. We have seen a lot of action not only between the FDIC,
okay,
the Fed,
that makes
and
more
the
sense.
Treasury
It's just this last quarter. That's from crypto.
Mitigate these issues that we have seen in the banking
they were
system.
profitable before.
Also, just kind of keep in mind, we had Neil Kashkari actually had an interview over the weekend, and he is still mindful of the ramifications of this collapse here and what the implications could be in the overall credit market. So we're not out of the woods yet by any stretch.
Why'd you buy into
imaginations, but you are correct. When you looked at the amount of money that was taken out of small banks, small regional banks last week, it was actually not as bad as
service
people feared,
messages, service.
Also, those funds then went to larger financial institutions. It's not like that money is actually fully just left the system. So that's another item that obviously we're going to keep an eye on, and if we continue to see a slowing in these new lending windows, if you will, that the Fed has actually set up here, we do see a slowing in that can also provide bulls a little bit more confidence that this might be, for the most part, over. Obviously, we're going to see what the regulatory impact is going to be in the future, but for right now, once again, this is a significant hurdle trying to get this bank to people that can actually purchase it and find it a benefit here.
Yeah, and that reaction function is going to be the piece to watch. How does this influence spending? How does this influence loan activity going forward? And does it become a bit of a self-fulfilling prophecy that you do see the economy and growth decelerate tremendously? As people just played a little bit more close to the vest, and why not, given some of those recent developments. But Kev, we'll have more to report on, I'm sure, as the days and weeks unfold. Appreciate the latest here on the banking front. Kevin Green, Senior Markets Correspondent for the TD Ameritrade Network. And another big mover of the day has been Roku, Susquehanna. Some pretty glowing assessments of the company and the stock reacting accordingly here, Jenny.
The stock did get a nice lift, although they've since given back about half of that initial rally, but still up about 4%. I mean, a nice day for Roku shares, now adding to its near 54% jump year to date and down about 55% from its high, but still up over 60% from its low. So another name that's pretty much all over the place in terms of the last 12 months of trading, but still collectively, I'd say, well off those highs. But Susquehanna sees some upside from here, actually upgrading shares to positive from neutral with a $75 price target, saying that despite some near-term noise, the long-term connected TV opportunity does remain pretty intact, and Roku will be a prime beneficiary of the secular shifts of linear budgets. Now, they believe that the scatter market likely bottomed in late fourth quarter, with an improvement expected to build now in the first quarter. Beyond scatter, they said their checks indicate that the broader connected TV market is generally healthy, and they should see tailwinds from some of these upfronts. They actually cited that there could be overall catalysts for this space, and saying that commentary actually from the trade desk suggested that marketers could be allocating some more of their connected TV budgets to upfront advertising this year, and that the majority of U.S. advertisers expect to prioritize connected TV, or at least at this point, a combination of connected TV as well as linear TV. They now see Roku, though, with an attractive risk and reward at its current valuation, and also say that we're seeing a lot of their expectations for the first quarter now de-risked. So they not only see the current market as promising, they see improvement looking ahead, which I think is why we saw such a nice reaction to this analyst note, Alex. And Roku does still have an average rating of hold among analysts. Price targets are all over the place, ranging from $36 a share all the way to $90. So 75 that Susquehanna has definitely puts it at the higher end of that range, and also implies a good deal of upside from where we're currently trading today, just shy of like $63 a share. But some analysts do have a $90 price target. This is one of those names that it does feel like those that cover it are pretty split, because Roku, I do think there are those that are believers that say Roku could push into streaming, than those that say this is still a hardware company that has somehow just gotten really successful over the last several years.
Yeah, unfortunately, I think the company itself knows that it's neither of those. In fact, it's a user interface. It's something that people are familiar with and they like. It's a brand. It's an aggregator of this streaming content. And as a result of that, it's able to position itself as a digital advertising space and get its users, which is a growing number, a huge number, to help some of their streaming, I would say, partners in this space get more users subscribed. And so the big question is even if the company executes very strongly, there's still question marks. And I think this is where the real polarity is how do you beat some of its competitors? How do you beat the Amazons, the Alphabets, the Apples of the world if they come in and really try to take a stranglehold on this marketplace? Apple has proven that just having a really successful user interface like the iPhone's iOS has been, and you keep it consistent and people become familiar with it, you can step into a lot of different industries and quickly become a dominant player. What's to stop it from becoming that dominant player here? I know it hasn't yet, and Roku's arguably not even fighting at the same price point as something like an Apple TV is. But Roku seemingly has made all the right decisions, Jenny. The question to me is going to be, what is the next thing? What do you expand into? And also, is that even enough to stave off what's going to potentially be aggressive competition from some pretty big players?
Exactly, and I think we know historically from looking at names like, Disney, Netflix, that to keep your content up to par with the giants in this space takes a huge amount of cash and cash burn that Roku doesn't necessarily have. I do think you make a really good point that at this point their advertising does look attractive, but to what extent? I mean, to justify their valuation, I guess I cannot be the judge of that, but I do think the amount of cash it takes to really ramp up your content is a major concern when competing in this space. And I have tuned into the Roku channel before. Can't say we're quite there yet. It feels like maybe Netflix like 10 years ago, where it does feel like it's very entry-level content. It's not great, but it's mostly free. So sometimes I tune in, but I understand the market for advertising because I do have that Roku screen up, like playing various things very often as a Roku user myself. But when trading Roku, I think you have to consider that there is still, I mean, a lot of analysts that see this name with upside, $75 price target's not too bad. So taking maybe this analyst's mindset here and looking for some upside, while also being prepared to look at the risks, because we know that Roku moves, and it moves with conviction.
Yeah, and because of that, it has high implied volatility on the balance. And so I looked at a neutral to bullish approach just because the stock has obviously made a nice move just recently, and it's building on that here. So giving it a little bit of cushion to the downside, not a lot, but also not going out tremendously long in time here. Went out to April, so a couple weeks away here, the April monthly, selling the 60 put, buying the 57. If we're able to collect $1 on this trade, that would be a 2-to-1 risk-reward ratio in which we risk $200 to make $100. Neutral to bullish, break even would be 59. You simply subtract that $1 credit from the 60 short put. And you're left with 59. That's where you find the break even. The risk profile, of course, we start in that max profitability zone, so we don't need the stock to go higher. In fact, we just need it to hold on or just not go down through $60 in order to really keep that credit at expiration, assuming these options would expire worthless. But even if it does go lower, and maybe you do see a downturn in Roku, it's risk defined. There's a limit to how bad the loss can be here. If it goes through 57, that's the worst case scenario. But again, that worst case scenario takes place at 57 or 47 or 37. It's defined, and I think that's the beauty of what options can provide is they define the risk here when you're using these type of spreads, and that's what this one seeks to do on this particular trade strategy.
I think that's really well put, and even though we are now at about $3 off of the session high, we are seeing a slight uptick climbing back now, up almost 5% on the day, so still a really nice move here in Roku today, and so nice reaction to that Susquehanna note. But that does it for our FOMO segment. Now coming up next, we will look at a very different reaction today, and that is Carnival Cruise down over 4% in reaction to its first quarter report. We'll dive into those numbers with Caroline Woods coming up next.
Maybe. VWAP's on its mind. Eddie's had a nice climb up today. Natgas finally getting a bounce. Goodness. Nice gif here, Ace. 0.024 shares. Don't know if I have the strength to do it. GME kind of climbing up. Oh, Silvergate? Yep. Yes. Uncle Bruce, that's true. You're looking at that for Hellbiz? Green candles and volume? Alright. It works, doesn't matter what you use. Could be the bear flag. 78 might be. Kind of triple bottomed on there today. Genie crawling up. You actually are talking about Genie, aren't you? That's just a joke. Not just for the memes. Spy ripping up here a little bit. GME is moving with it also. 2% down on the day still. Yep, BY moved back to VWAP. Looks like it is kind of triple bottoming down here. Very good. Not going down further so far. Consolidating is better than falling. Just need to show reversal by breaking this 90-cent high and holding it. Confirm this is the bottom and we're rallying. Once you break this and start rallying though, you're gonna start getting a gamma squeeze going on, so might try and do it when there's less options. But they're pretty much stacked everywhere on BBBY. For the monthlies, dude, a gamma squeeze into April would be gorgeous. 35,000 at $1, 23,000 at $1.50, 24,000 at $2, 12,000 at $2.50, 22,000 at $3. This thing squeezes up to 5. In a hurry. Final ball trap. Going heavy spy puts again. Alright. I don't know. I'm thinking we keep going. Especially now I see that engulfing candle on the daily yesterday. This inverse head and shoulders. I think we're going to keep rallying. But every day you say that, you're closer to being right. So, works out either way, I guess. Fine, moving up here, climbing back up to open. Up almost 0.5% again. BBY and Bed Bath, or Blackberry. It was adding successfully. I don't like how people does this. It's confusing to look at. They did both have a move up there together. Blackberry's been holding it much better though. There's move to FWAP on Bed Bath. Buy. Climbing still. GME climbing. Retire from. You can keep making predictions. It's fine. You've been pretty accurate. When people just make predictions, though, I'm like, whatever. Like, I want to see the data and why you come to these conclusions. Otherwise, it doesn't mean much. Talk to Kevin. Talk to Kevin for A's, okay? I'm sure you could shoot those owls where you live, right, Ace? One day get rid of them. That's an intruder. Ah, the superstition. The superstition wins again. Alright, everything's moving up here. Even though Silvergate. Weird good feeling. Good to hear. Yeah, I'd like some pumpage on Bed Bath. And Nat Gas too, please. Have your weird good feelings. Push towards Nat Gas, that'd be great.
Its price target as well as upgrade the shares. So here to tell us more now on that analyst note, I'd like to welcome in George Tillis, senior markets correspondent for the network. So George, tell us your thoughts here. I hope that your iPhone's in better shape currently than mine is.
She breaking phones again?
Well, I mean, the glass is supposed to be scratch resistant. It's not supposed to be shatter resistant. So I'll give them credit in that regard. But look, I think if you look at Corning, when it comes down to LCD and LED based glasses, it's ubiquitous. This is a technology that is in your smartphones. It's in your glass panel televisions. The other thing is it's actually very large in the automotive space as well. Very strong, touchscreen displays that are in the automotive segments of our consumer end markets, and that's where essentially Corning's most market share is. It's in the consumer end markets, but they actually have an environmental science division as well, and they actually make air filtration systems that is utilized for environmental protection. So they do have an industrial application, but most, like I said, is their consumer applications. But if you look at there's an analyst call today, Deutsche Bank actually expects a bottom when it comes down to earnings and revenues for the quarter of Q1. They actually see it as a potential inflection point for the company's stock because of the fact that if you look at the elements of their gross margins, especially in the last year or so, you can actually see they're down relative to their 5-year average. And that's because the company really got caught up with a lot of inventory. So there was an inventory liquidation. The other thing is their net income margin is actually a little bit higher than it has been in the last 5 years. And I think it's one of the reasons why the stock has held up relatively well, considering the demand for consumer end products has been down over the last 6 months or so. But I think on the forward basis, according to Deutsche Bank, they actually see this as an inflection quarter here in Q1. And I think they're onto something because if you consider their price target first at $38 from $35, looking at the revenue growth for the company, they're expecting about 4% sales growth on a forward basis for the next 4 quarters. But their EBITDA growth is expected to increase by 7%. Now, that's a complete turnaround, considering that EBITDA actually contracted about 11% over the last year, and revenue in the last year was flat. So I think they're coming off a bad year from the standpoint of, like I said, having to liquidate inventory to, of course, wind down some of their inventory glut. But on a forward basis, things like they're short up in terms of the inventory and actually relinquishing more pricing power, which is actually more accretive to the bottom line.
George, this is a company that is not alone in that particular scenario. I described it as a bullwhip effect. Obviously, COVID, we shut down production. Yet we sent out money, so demand stayed high. Supply was low, demand was high, and then these companies raced to get inventory levels up to meet that demand, and then demand went away last year, and they were stuck with a bunch of supply. So now that supply is starting to normalize. We're seeing it in semiconductors. We're watching this even take place in places like Nike or a Lululemon on a more consumer-facing front.
Yeah, I think
what does it mean now on the other side? Maybe some of these one-time pressures of something like COVID and the public health interventions is simply that, just a one-time impact. Do we have to look back to times like 2019 to better compare what this stock could look like?
Well, I mean, if you go back even to 2020 or even 2021, you can see the stock is just drifting slower to the downside. Now, that's not all bad. The reason I say this is because the company's paying a dividend of about $1.12 per share on about $2.08 in earnings. So they're paying more than 50% of their earnings in dividends. So the entire time you're earning a dividend, I think what's happened in the last few years is that bullwhip effect, as you mentioned. There was a huge demand because of COVID lockdowns. Everyone, including myself, upgraded technologies, computers, phones, you name it, tablets. But at the same time, you have to think about inflation and some of the economic challenges that the consumer's facing. And I think that's one of the challenges that Corning has faced in terms of their earnings growth. Now, the company's still profitable. Their profit growth had actually just fallen in the last year. And that has to do with the fact, perhaps, that they got caught up with too much inventory that they had to push through. And I think that's, again, the case for why Deutsche Bank actually moved their price target as well as the rating to a buy, because they actually see it, the bottom line foundations for the company firming up on a forward basis. So again, it's not an exciting stock. I mean, it doesn't trade very aggressively, but it is a stable stock from the standpoint of long-term hold because of the fact that they do pay a dividend. And they do have quite a bit of market share, and I think the growth in the auto segment, as well as perhaps even if the consumer starts to fare better in the back half of the year, companies like Corning should perform well.
Yeah, George, I mean, this note is fairly positive today, saying that it's time to buy the stock. They said they actually got a few things wrong when looking at their forward-looking guidance, and they're revising to the upside from here. So perhaps some optimism. I do think the concern still is some of its exposure to China, as that is the concern for so many of these tech names. But really good conversation today about Corning, a name that is very important to so many of our lives. Maybe just we don't realize it. We'll leave it there. George Tillis, senior markets correspondent for the network. And that also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalides.
GME. Suppose I should open up some more dollar cash grid puts on BBBY, huh? Oh. Is there out of shares? I mean, our data is very limited. So what you get from here is just a little bit. No, it's still showing though. Still plenty of shares. Plenty to go around, even when that runs out. Infinite liquidity. That's all you need to think about. Infinite liquidity. Yeah, I'm actually break even a little bit up on these Bed Bath cash card puts. I almost want more Silvergate. I might do some Silvergate cash card puts. Now that I saw the financials and it was just from crypto this last quarter, that helps. What? It's either Silvergate or FRC. FRC though still has a way higher market cap. They didn't have the awful quarter though, like Silvergate. I think it's just from crypto. Do you guys know? What's weird is this was the reaction right here. There's nothing. And they lost $1 billion that quarter. And prior they were making 40 million. One quarter doth not make the company. Happy you, old risk taker, you. That's what I'm saying, not one quarter. That's not, especially just a kind of a black swan event like the crypto, what's going on? But I'm not sure what it's from. I gotta look. Because I don't know why it didn't have a reaction. SPY's coming down. So I never after heard of Divvy. It's like the most growth hype bank I've ever seen. I don't know why the stock didn't react to those awful earnings.
And it's been jumping.
Yeah, definitely. So we are seeing the shares of First Citizens Bank up 51% at this point in time here, Nicole. And it was a historic deal that was done over the weekend here. It looks like they're actually buying SVB. Around $72 billion worth of assets. And this is going to be their deposits as well as some of their loan book as well. And this is actually going to be at a discount of about $16.5 billion. So they're also working with the FDIC because there are still some risk parameters that are in place. There's some risk that could be potentially out there. So right now, they are giving the FDIC equity appreciation rights, which would allow them to be able to potentially make around $500 million in capital. This would be the FDIC. And then also there is a lost share transaction that's also occurring here. So FDIC will actually observe some of the large losses or partial losses in some of the assets that were actually purchased. So obviously it's been pretty difficult to try to comb through every single asset that is within Silicon Valley Bank. So there's still going to be the FDIC working with First Citizens Bank to ensure that those assets are going to be, if they're not liquid, then the FDIC is going to be able to help them out with that. So yes, we are seeing a broader push in the market as well for regional banks. The KRE is also up in today's session, as well as some of the money center banks as well. So overall, we are seeing a little bit of a bounce. Hopefully it holds, and hopefully there's a little bit of a light at the end of the tunnel, even though Neil Kashkari over the weekend stated that we have not even seen the full effects of just this collapse with SVB, and the Fed is still keeping that in the back of their mind when they're making policy decisions.
April 18th.
Right, and just basically saying that the U.S. could be closer to recession because of what's been going on. And to your point, I know First Citizens won out, but on Saturday we saw some reports saying that Valley National Bank and First Citizens Bank had been both vying to buy SVB, and then in the end, this morning got up and heard that news. You're also following a big development in the crypto market. So tell us a little bit about that.
Yeah, so this is actually an interesting development.
We're not going to see a lot of the
CFTC,
fruits of their layoffs and store closures in this earnings
actually
report.
Just sued Binance and
most of it happened before their quarter ended.
Their CEO.
And
they are alleging several different things within this lawsuit here. But they are alleging that the cryptocurrency exchange actually violated several different trading derivatives rules. And they are also alleging that Binance has been advising their customers to utilize VPNs in order to avoid or try to get around
a lot of the closures they had
was after that. Data issues that have to be obviously documented if you're trading certain products here in the United States. So they are alleging that Binance is actually advising their clients on trying to avoid some of those location issues, which, Nicole, out of all of the charges that are being made in this suit, that's probably actually going to be one of the biggest ones, because if there is any form of somebody that's a bad actor that is also utilizing those VPNs to trade these type of products, and that could lead to some serious criminal and other civil liabilities as well. Binance has not commented on this particular situation as yet, so we are going to be waiting for them to make a statement. We are seeing Bitcoin down about 3%. Coinbase is also down about 10%. They have their own issues that they're dealing with when it comes to the SEC. So a lot of crypto news in the last 2 or 3 trading sessions, to say the least.
HPCO, top of my list,
understood. Thank you for all of that. Good to see you, Kevin Green. Thanks so much. Now let's take a look at the bigger picture. Anthony Siccaro's with us, President, Providence Financial and Insurance Services. Good to see you. We were just talking about Neil Kashkari's comments, bank failures. I mean, we're sort of, muddling through, it feels like, after the Fed did raise rates. Where do you think we stand right now?
Well, I'm glad the Federal Reserve did raise rates, actually. They were in a pickle because the interest inflation's been coming down, which is nice. It hit 6% recently, but because of the bank failures, there were some economists that were saying, hey, maybe they should lay off, not do anything at all. And if they would have done that, I almost think they would have been admitting that there was a problem. But the solution is still not there. Inflation's not down anywhere near their target level at this point. They have to keep raising rates, but inflation is a lagging indicator. So, the rates that they've raised, all throughout 2022 and already 2023, that's going to catch up. I think the last couple of rate increases at 25 basis points, I think makes a lot of sense. They didn't overstimulate the market, but at the same time, they didn't sound a fire alarm either by not raising rates at all. So I think they walked that fine line very nicely.
Yeah, I thought William Lee was really interesting today. He thought that they chickened out and should have done more. I've only heard a few people say that. What do you think of that?
Yeah, again, I don't think they should have done more at this point because inflation is a lagging indicator. That means that it takes a while to catch up. When the Federal Reserve raises interest rates, it doesn't have an overnight effect. It can take up to 6 to 12 months for that to catch up. And so we're 12 months down the road. We had a pretty significant decline from 6.4% to 6% in the recent CPI reading. It's going in the right direction. We still have a long ways to go, but I think the Fed is nice. I think they did a great job in backing off a little bit. Let's see what happens, and then let inflation numbers catch up, especially in light of the fact that we had 3 bank failures as well. So I don't think that they should have done 50 points. I agree with the 25 bips going in.
Right, and there is concern. I mean, the FDIC chair has been out talking about, you know, further rate hikes could actually heighten the losses and the problems. And so I guess we're very much in a wait-and-see mode. That being said, as we see the bank failures, I mean, SVB is the second largest bank after Washington Mutual. Now you have First Citizens stepping in. But we've had other names, right? The First Republic was under the microscope.
Deflation would be going down.
Suisse, you know, you had the Swiss bank step in. Deutsche Bank came under the microscope. So at this point now, are we free of the bank problems, or is it still sort of an underlying issue here?
No, we're not free of the bank problems, as a matter of fact. The underlying issue is the rising of interest rates. What happened with Silicon Valley Bank, and I think what's going to happen with some of these other banks, is years ago, several years ago, when interest rates were at zero, they bought a ton of treasury bonds. And as interest rates rise, the value of the treasury bonds go down, and that's what's happened. And they wound up having to sell $22 billion of treasury bonds with like a $2.1 billion loss, or some numbers along those lines. And that's going to continue happening with other banks out there as well. So it feels a lot like 2007 again, where that's what started happening. Banks started failing, it started catching up, and then eventually it turned into a landslide. The one thing I think that's different this time is that the Biden administration came in and said, we're going to back you. We're going to back Silicon Valley Bank. No depositors are going to lose the money. That's why stocks turned around immediately the Monday following the bank failures, is because the government has their back.
Yeah, absolutely.
So at this point actually going under still.
You know, there was a 2-year auction actually for the first time, and probably of this year for sure, actually going off less than 4%. So, you know, what do we think about the inverted yield curve? What do you think about rates overall?
Yeah, so the inverted yield curve is a story that there's probably going to be a recession. And the more and more professionals you talk to, the more economists you talk to, really boils down to not whether we're going to have a recession, but how deep and how long is it going to be. And, you know, the fact is that the yield curve has become less inverted, which is good news. I think it was just a short while ago that there was 100 basis points difference between the 10-year and the 2-year. Now it's only 50 basis points difference, so that's phenomenal, but we're not out of the woodworks. Unemployment rate is still very low. That's got to go up in order for inflation to come down, and the Federal Reserve is not going to quit until inflation comes down. They pause a little bit, but they're not going to quit. So recession's still on the horizon for sure.
Interesting. Why people are paying off their loan on this
and as
thing.
we just await more and more data, I mean, which is
BBBY
exactly what the Fed is going to do now, right? They have until May at this point to make their decision what they will do next ultimately. But this week, right, you have consumer confidence, you have GDP, personal income, sentiment. Any of those going to make a difference?
Yeah, consumer confidence is a big one because that's, you know, right now confidence is very low. And there is so much. You just named, you know, 3 or 4 different reports that are going to come out this week, much less all the other reports. We get further down in the, you know, in April, we got the CPI again. There's so much that the Fed has to think about that it's really hard to figure out what they're going to do in May at this point. I think they got to raise some more, but is it going to be 25 bips or is it going to be 50 bips? I think that's probably the question.
Right, and for the GDP, fourth quarter GDP, it's expected to have grown seasonally adjusted 2.7%. That's unchanged from the estimates. Any final thoughts on that?
Yeah, absolutely, and I'm glad that the economy is doing well. I mean, that's what you want. You want the economy to do well, but there's a conflict. Yeah, it's not. But the reality is the Fed wants it to go negative, and they have this balancing. You want the economy to slow down. You want labor to be in less of a demand. You want unemployment to go up. But the fight is that you want it to slow down, but you don't want it to slow down so much as you go into a recession. So the economy is still strong, and that's part of why inflation is so high.
Anthony Sicaro, great to see you. President, Providence Financial and Insurance Services. Thank you, Anthony.
Yeah, size climbing back up a little bit.
All right, later this hour, we're diving into Carnival Cruise Lines, the earnings. Well, it was a double beat, but stock had been selling off a little while ago. I mean, let's look at that hospitality industry a little more closely.
Their assets.
And it wasn't just your bracket feeling the shockwaves from the NCAA tournament. What it meant for sports betting, some of the trends that we should be watching going forward, and the pharma company seeing the biggest gains since the opening weeks of the pandemic. We're going to talk about that. And we'll take the case for energy, commodity,
MicroStrategy paid off.
So much more here on the watch list. Stay with us.
Kind of interesting. I mean, if they get, I guess, acquired before bankruptcy, it'd be super bullish. Sort of similar to BBY, but BBY hasn't. Silvergate's in a lot worse position, I think. Yeah, BBY is kind of trading flat. It's flattened out, which is a good sign because its has just been falling, and it's now triple bottomed here around this price, this 78-80 cent price. 1, 2, 3. So like to see bounce on here, which we're kind of seeing already, and probably get a rally back up at least to 85 cents, maybe back up to these highs. And at some point, we'd like to see a break here. Show the momentum to the upside, breaking what, 88 cents or so, 90 cents. It'd quickly move back up to $1 after that, I think. Then we'd be back to our other barcode algo. Silvergate almost back to VWAP. $7. Why 7? That was the high here. We don't even start filling gaps till over 9. I'm curious on this 10K though. It could very well be what we mentioned earlier, just nothing to it, but could be something also. Especially since they said in the last earnings they wanted to buy a company. Or looking for a company to acquire. Maybe they'll buy Silvergate. It's actually kind of interesting. Crypto exposure. It's a bank. Kind of what GME's trying to become. Market cap's only 64 million now. They have a lot of debt also, though. Who controls my color? I mean, you can shoot him with a airsoft, paintball, BB. Bow and arrow. Shotgun.
that's still left in the system, especially given the fact that the biggest change right now since the Fed has come in and intervened so significantly is that the cost of capital has really changed the dynamics of our economy. And so if we think about that and the cost of capital, and we look at the lending requirements that are certainly getting tighter, if anyone's gone in and tried to look at getting new debt right now, we have over $1 trillion of debt that needs to be remetabolized, renegotiated here in 2023 through corporations. And so this is a significant concern to me, given the fact that we had so many IPOs and so much venture capital money that was going into SPACs and different things that take more capital to run than they actually produce. And so if we find ourselves in a place where the cost of capital is so much higher, at minimum, if they get these deals done, margin compression is going to be in there. And ultimately, I think that we could be heading towards an earnings recession here over the next couple of months, which ultimately leads me to this idea that I think that we're going to see more bankruptcies in the coming months, or at least Chapter 11s, where companies are going to be looking at their debt and saying, you know what, we've got more debt than we can ultimately handle here. We need to renegotiate some of this stuff. If that's the case, investors need to be very, very, very cautious, especially if they're holding bonds and they're holding those stocks, because they will be downgraded and there will be significant losses in those specific investments.
Yeah, and the cost of capital, as it's been on the rise, people have had to go out and basically raise more funding, and it's just not easy, particularly in an uncertain environment. So I guess you're more apt to go to certain sectors over others, or even within a sector, one area may be better than the others. One area that's showing a little strength today, and that is oil. Tell me about oil and gas and what you like there.
Sure. So if we look today at the just overall market and an understanding of what's important, what's not as important, I mean, oil and gas is not necessarily as popular right now in the United States, given, Biden's fossil-free agenda here, at least as it relates at home. But ultimately, they've got some of the best free cash flow that's out there right now. So if you're looking at places that should likely maintain strength, I think that that's important. I mean, also, looking at things like Saudi Arabia and Iran on the 21st here just entered into a deal. They were sworn enemies, and now, those are two major oil producers that are now also even aligned with Russia. So, we're seeing, some changes here taking place. So I think that, we see even one spill, one challenge, the price of oil is going to go up significantly, even if we have a declining economy. So we need diesel to run things, to produce things, et cetera. And so it's very important that we're paying attention to this sector. And so I think that as the year continues to go forward, it's going to be seen as an area of strength and perseverance.
I understand. And then when we turn our attention to something like gold, where gold crossed 2,000, but now past 2 days, right, it's been down. Your thoughts there? We have gold and silver on here.
Yeah. So I've been saying this for a while now. I think that gold and silver
this is a real background. That's really his office.
Asset classes that are not necessarily as looked at right now. And the reason for that is because it's trade in U.S. dollars. Control. Now, if we look at gold and silver relative to other currencies that have lost value over this last couple of years, then I think that we see a different story as it relates to gold and silver. As we're looking at things right now, central banks are buying gold and silver faster than ever before. But one thing to also consider are the miners. Typically, the price of the gold and silver, which we've just seen, rise very significantly here in 2023, the miners have not risen accordingly. And so I think that they're undervalued right now, and I think that there's going to be an opportunity to see some real lift in that specific sector.
Breaking out there a bit.
Understood. Okay.
I had a day,
and then when it comes to real estate, and this is what I meant about even within a sector, you might see differences. For example, office buildings, they're having to go out and raise more capital, right? Versus other parts of real estate, maybe you have medical or senior citizens or storage, right? Those seem to be doing better in the real estate world.
Absolutely. The big concern here is that people are working from home right now. And a lot of the commercial real estate that has typically been in downtown areas like New York. I heard a new statistic that 22% of New York is now empty. I think that there's a lot of employers that are waiting to right size or downsize their specific footprints because they got more people that are out and about. And so those deals are tough to make happen. They don't have 30-year mortgages like everyone else. They've got like 10-year. And so I'm bearish right now on commercial real estate, specifically office spaces. But just like you said, I'm bullish on multifamily, senior housing, student housing, data centers, distribution centers, warehouses, especially in places where Amazon might want to be. But there's a number of things that we could be paying attention to, at least as rents maintain their strength.
Yeah, understood. And don't forget, New York is a very expensive city. Your dollar doesn't go very far. I mean, what's a dollar? $0 here.
There's some more covered calls on double top. Called that
right?
perfectly.
I mean, if I have $1, I might as well not leave my house. Talk about defense contractors, bond alternatives, just quickly, the rest of the ideas here.
Sure. So I think defense contractors are an important one. Obviously, this is a theme that makes a lot of sense if we see a Cold War in Russia-Ukraine become more of a hot war. Obviously, we just saw China show up in Russia last week. Now they're the diplomats of the world. And they've said that they're going to be, working with one another very closely going forward. Ultimately, United States makes better weapons than anybody. We are very low or depleted because of all the outsourcing we've been doing to the Ukraine here. And so I think that we're going to see some appreciation in some of those areas because we have to prepare. God forbid World War III ever happens. Lord, we pray that doesn't occur. But as far as bonds go, I just want to caution people that as we see this credit crisis developing and continuing to go forward, we're just in the first month of this, really. It took a year before Lehman and Bear Stearns and Fannie and Freddie and Washington Mutual ultimately came apart. If you own the bonds of some of these organizations, even if they're A-rated, and they get downgraded, or we see interest rates rise, or we see these organizations default or file Chapter 11, we're going to have massive losses to the quote-unquote safe place that people are hoping and depending upon as they're nearing or entering retirement, or specifically to hold their portfolios. So the specific idea that I have right here is just based on math and science. But there's an asset class that not a lot of people are paying attention to, and that's called a fixed indexed annuity that has the ability to make some of the gain of like the S&P 500, but more importantly, none of the pain if everything falls apart. Right. And so these are, giving double-digit return potential right now.
Fixed index annuity?
Even the fixed rates inside of them can be higher than 4%. And so, that can make some sense. They've got some liquidity, and I think that might look like a safer alternative today to specifically bonds that, all 5 of these ways that they could lose. I think we've got some challenges, and they're all on the table.
All right, good to see you, David Trzewski. Thank you, CEO of Sound Planning Group. Thanks, David. Coming up next, we'll turn our attention straight over to the gaming space. And how much did you bet on the NCAA tournament? All right, we're down to the Final Four.
UBTL's held up nice, 6.5%. Yeah, I'm gonna try and remember to do some more cover calls on Silvergate tomorrow at open if it is anything like today. Grab that morning IV, sell it. Maybe breaking this little high here from like 45 minutes ago. GME has just been climbing up, down 1.5, but didn't really get as much of a sell-off like the SPY. Pretty strong relative strength, I must say, on GameStop. Hell versus A's. These lower two? These are just indicators. So this is MACD and RSI. Lots of videos and web pages you can delve into to familiarize yourself. MACD stands for Moving Average Convergence Divergence. So basically just that. RSI stands for Relative Strength Index. High inverse owl.
And third would be Macau. So as we kind of think about that, DraftKings, we have a $27 price target. You know, we still think they're well positioned. It's up 56% year to date. It obviously didn't have a good 2022. We still think there's some good room to run for that one. As we turn to Vegas, Vegas is going to have record volumes in terms of visitation, attendance. You have a few key conventions and sporting events, including F1, Formula One racing in November. So companies like Caesars and MGM, those that are highly exposed there, are talking a very positive situation. And then, as you mentioned, Las Vegas Sands, the company that doesn't have Las Vegas operations, you know, I think they're seeing some improvements in Macau. The China recovery story is improving, but probably not as much of kind of a slingshot or a coil spring as we would have expected in March. So yeah, at this point, you know, I would kind of lean more towards the DraftKings, the MGM, and the Caesars as three of our top picks.
1.5% now.
Yeah, even though you know, when you talk about DraftKings, you said some of the most popular names are out. Right, number one, Purdue was out, and a lot of the, you know, top ones are out, and then you have names that came out of, you know, not like FAU is now in the Final Four. Didn't expect that. You have the Aztecs, San Diego State, first time in the school history they are in the Final Four. So, and UConn and Miami, University of Miami. You know, as we think about, is this still good enough? I mean, at this point now, for people who are betting, for DraftKings, FanDuel, etc.
Sure. I'd say, you know, the playbook is working. One of the things that we really like about DraftKings is the state of Ohio, which recently opened up right around the 1st of January. DraftKings has acquired 6% of the adult population, and that's the highest result they've had since a state has legalized. And in the United States, 36 of the 50 states have now legalized. So it's nice to see that their customer acquisition has improved. I think that's a tip to the brand, a tip to the product. And then on the retention side, this is what we really like about DraftKings. They've just done a great job showing people the right options, the right menus, and kind of retaining that customer. So, you know, losses have come down. They're going to be weighted a little bit more towards the first half of the year. As we get into the back half of the year, where most of these companies make their profits, we think we'll be in a good position. But yes, you know, this could have gone a little bit better for March Madness, but I do think engaging with males, with females, with different age cohorts was a positive.
Yeah, you said when you talk about the different areas and jurisdictions, you said Caesars keeping an eye on new domestic jurisdictions, including Texas and New York. So as we, and you know, SL Green has the partnership possibly for a Times Square casino here in New York. That's a really big deal, right?
There's a lot going on in gaming. Clearly, if there was an asset to be constructed in New York City, that would be very meaningful to somebody's profits, and it would also affect some you know, it would cannibalize some regions in the Mid-Atlantic or the Northeast area. New York clearly needs revenues. They've looked at land-based gaming. They've actually considered iGaming. as a potential way to kind of bring in some tax revenues. That's been punted, so to speak, in 2023. We think that could come back in 2024. That's another thing to think about. As the economy potentially weakens, you could see some legislators say, how can we bring back some tax revenues for education, for senior citizens? And gaming has always been a way to kind of plug those holes. And we think iGaming, which is only legal in 10% of U.S. states, could be something that legislators look towards in late 23 or into 24.
Yeah, I do want you to just sort of tell us about lodging, if there's any sort of hotels that maybe don't have casinos or anything else that you wanted to add of the names you cover. But just to follow up on that Caesars possible deal with SL Green in Times Square, what's interesting is that here, I mean, you think it's more likely than not that they win that license, but not this year?
Just kind of thinking about the Caesars SL Green option, I do think it's one of a few really interesting options. I think the city and the legislators need to decide what's going to be best for the communities, what's going to be best for tourism, best for tax revenues. There's a few different types of bids, a few different types of regions, whether it's in the Bronx, in Queens, or in Manhattan. So I'll leave it to those to kind of figure out where the best option will be. It's, I think, going to come down to the wire probably at the end of this year to decide, which site gets that license. Obviously, very highly sought after. This has been something we've been talking about for years, to get something a little closer in New York. So yeah, that's kind of how we think about that opportunity. In terms of lodging, hotel rates, as you know, are up anywhere between 30 and 50%, particularly in major resort towns. The spring break time that we're kind of going through now through the next few weeks we're going to see record hotel prices in places like Florida, California, Texas, the Caribbean. We're seeing hotel rates, as I mentioned, up about 50%. Occupancy levels are high. I think that bodes well for Hyatt, which skews more towards the high end, kind of the luxury upper upscale, and also Playa Resorts, PLYA, which is in the Caribbean and Mexico. So I think leisure trends will remain strong. Business travel is recovering, but I still like that high-end leisure customer that hasn't been hit as hard by some of the, negative inflationary things that are hitting us in our wallet right now.
All right. Thank you for all of that. I see you wrote about the Fontainebleau. I love Fontainebleau. What a fun place that is in Miami. All right. Thank you, Chad Baden. Wonderful to see you. Appreciate your insight. It sounds like everybody's still out there spending, as Chad said. Some of the hotel prices up 50% in some of the hot areas. And he mentioned Hyatt and Playa Resorts there.
That's where
okay, let's move on here. Continuing to talk about the second half of our show. We'll turn our attention straight over to the energy market. Oil, in fact, is back above $70 the barrel. We'll discuss the outlook for the sector and some stocks to watch. As we head to break, take a look at winners and losers in the S&P 500.
Israeli labor union calling off nationwide strike after Prime Minister Netanyahu announces delay to judicial overhaul. Elon Musk says the state of the commercial real estate debt market is by far the most serious looming issue. Getting back up to this level we have from this morning, 397.89. Again, this long entry right here was the right play. It just took a long time to play out. So that's what I like about futures over options with something like this. BBBY still hasn't broken above VWAP. If we get a move report today, it's 2:30. 30 missed the power hour. Yeah, I think we're due for a crash. Which is kind of what you're suggesting. Owl. 4% gap down would be crash-like. That gas actually broke through VWAP. Oh boy. Blame it on retail. Getty holding up its levels. Awesome. Also on a little breakout there. Red to green today, nat gas. You can do it. You can do it.
Points off the March lows, but Nicole, you probably know where I'm headed next, around 39.75, 39.95, just below 4,000 here. We're still kind of adrift in a range that we've been in, closer to 4,000, as you pointed in, out closing in on 4,000, but for the most part in the middle of the range that we've been in since May of last year, right? 4,300 to 3,500. Obviously a lot of focus on regional banks as we begin the week, and some of the data due out this week as well, but it's going to be later on in the week before things really heat up with the GDP, jobless claims. We'll be talking personal income and spending, as well as some consumer data throughout the week. But multiple focal points, and again, it seems like most of the attention on regional banks as we kick things off this Monday.
I mean, these candles with long wicks.
Yeah, without a doubt. I mean, we have mostly every sector higher. You had communication services and tech, only with the downside. And I know you're talking about energy, because that's been a leader, energy and materials. Tell me about the spike that we saw in oil prices.
Yeah, absolutely. Crude oil definitely attracting some attention this morning and throughout the day here today. It's on the highs near as we speak, up around $73. A big move off the lows that we saw recently, around 65. Now, some of this I think you can chalk up to a weaker dollar, hang out in the middle of the 102 handle, breaking down below 103 again recently. Some of it I think you can just chalk up to the strength we were just mentioning and the optimism, the risk-on tone we're seeing this Monday to begin the week in indices. But I also noticed there was an international arbitration court which ruled against this long-running dispute. Turkey and Iraq had this dispute going on, and basically it's regarding crude oil exports from Kurdistan. So ultimately, Iraqi local media reported Turkey's halted the pumping of Iraqi crude. That Saturday morning, Iraq had been pumping 370,000 barrels of KRG crude and 75,000 barrels of federal crude through this pipeline. Now, Reuters reporting here again that it's been halted, so I think that's giving a little bit of a lift here, in addition to also technical rebound. Nicole, we had this breach of the $70 level, but follow-through is somewhat limited. So, you know, again, if you reject the lower level, ultimately you 5%. See this sharp bungee jump kind of reaction, and ultimately I think that's part of and
that's helping the markets.
Energy Summit earlier this month. What was the takeaway?
Hi, good afternoon, and thanks for having me. I think the biggest takeaway from our standpoint is, in addition to higher oil and gas prices, what we're really seeing is the industry has gone through a big change. What used to be a very capital-intensive industry that wasn't able to return capital to shareholders is actually leading the market in terms of dividends and buybacks. And that optimism remains, even though commodity prices have come down a little bit from last year, as your prior guest was saying. Oil prices are on the upward trajectory, and these companies are focusing not on growth, but on making sure that they can return that capital to shareholders, which is differentiated against the market, in our opinion.
Mm-hmm. And you've had conversations with a lot of these companies like Occidental Petroleum and Chevron, and what are the companies telling you?
Well, there's certainly a sense of they're watching what's going on in the financial markets and making sure that there's nothing going on and there's no kind of contagion from that. But overall, they're seeing very tight physical markets for both oil, gas, and also refined products. They're focusing on their cash margins, making sure that their costs are coming down. They continue to improve their efficiencies. And then finally, I think with China reopening, some positive signs from Europe as well, they're looking at the future optimistically.
Tell me a little bit about nat gas, oil, the differences. Are they talking about that as well?
Sure. So, on the oil side, what we've seen is there has been a rationalization of shale production over the last couple of years. So shale companies haven't been spending in excess of their cash flow from operations. And with OPEC also, keeping their production in line, what we've seen is that demand has started to maybe outstrip supply. Gas has been a little bit more challenging. Gas prices have come down from somewhere in the mid-5s to roughly $2
there's a flush on BBY.
That has been a bit of an oversupplied situation here in the U.S. and a weaker demand. You had warm weather here in the U.S. We had one of the mildest winters on record. And we also had a big LNG facility at Freeport down for most of last year.
Nice.
Those things are changing. I think we're going to see a supply response.
Looks like it's grinding back to
in the
open,
second half of 2023 from the shale producers. So they're going to lower their supply of gas.
The second most abundant fluid on the
Freeport
planet.
LNG should be starting up soon.
Saltwater.
We get back to some normal demand levels across both the U.S. and internationally. I think gas prices could recover. We don't expect them to go, back to the 4, 5, 6 level, but we could see them in the $3 to $4 range.
Let's check it out. Up 1%.
So I see you have 5 buys here, including CRC and Chevron, which seem to be 2 of the names. Actually, Chevron, you have a neutral, but I see 5 buys: Dino, MUR, Oxy, OBV, and CRC. Chevron, it looks like there's a neutral rating currently. Tell me which names you like the best. You have 1 or 2 that are definitely that you're most upbeat about.
Potentially it is double bottoming on this one back here.
Amongst the list that you mentioned, I think Occidental, we certainly like a lot. The company has very successfully managed a debt profile over the last 3 years from their acquisition of Anadarko Petroleum.
You're either going to consolidate down here.
They're pivoting, and they've pivoted quite a bit towards cash returns and cash generation. One name I'd like to mention is CRC.
More or less consolidating.
This is a company that produces oil and gas in California, but they're also at the forefront of a technology called carbon capture. And in our view, they should be hopefully close to getting the first Class 6 permit on their first project. Carbon capture is the technology that allows them to sequester carbon dioxide from their own power plant. It's one of the most effective ways, in our opinion, where oil and gas companies can actually play a role in environmental goals.
You mentioned Oxy. Let's go back to that one. This says Berkshire this past month in March upped their stake again. So I'm not sure anybody wants to go against Warren Buffett at this point now. Berkshire Hathaway has about 23% of this company. Is everybody just jumping on board because the stock already has been a winner, right? Outperforming a lot of the group, though it's been faltering of late.
It's fine, breaking up to the high here.
Well, I think it's faltered a little bit just in response to the sector, but I mean, I certainly don't want to bet against Mr. Buffett, but I think also you have to look at the balance sheet. Nobody would, but I will also say that it's more than just Mr. Buffett's stake. I think Mr. Buffett is looking at a pivot towards a better balance sheet. Occidental also actually has a low carbon business, and they're pursuing something called direct air capture. It's part of the carbon capture technologies that are out there. So I think there's a bigger story there in terms of a company that has a lot of acreage and in shale, has good assets, has been executing on those assets. That's on the oil and gas side, but has upside potential from a technology that's differentiated and could be the next kind of re-rate for that stock. So I think Mr. Buffett's stake is certainly an indication of what's ahead for this company in our view.
GME following suit.
As we talked about the margins that we've been seeing, you said refining margins are staying strong. You mentioned dividends and buybacks. So it sounds like the group is still has a very good footing. That being said, it costs a lot to switch over to things that are more environmentally friendly. And it seems that some of these companies have already been doing this, right? I've heard about Exxon and Chevron and how they're sort of making the transition. How much is this going to cost? Are you worried about certain names more than others in this transition, which seems to still be very important and very front and center?
Sure. Yeah. Look, I think energy companies in general have a part to play in terms of energy transition. Some of the, biggest technologies that we have today that can help reduce carbon footprints are going to be housed in energy companies. So one instance is biofuels. Sustainable aviation fuel and things like that. I mentioned carbon capture, hydrogen, etc. I think the returns are certainly lower in these emerging technologies today. A lot of that is subsidized by government support and through the IRA or other factors. So we have to get to scale. The test case has to be proved. So that's why I think some of these companies are not going to jump right into big investments. They're going to test the market. They're going to allocate capital. So, for instance, Chevron is spending about $10 billion over, I think, a period of 8 or 9 years to really just test the market, make sure that they get it right. And then when the economics get proved out, so it will be a little bit of a transition period. Which is fine in our view. Now the returns are going to be lower, at least right now. But as these technologies pick up, returns in shale or in oil and gas weren't the best when they started out. It takes time.
All right, Nitin Kumar, thank you very much of Mizuho Americas. Great to see you. Coming up next, we're going to turn our attention over to Carnival Cruise Lines after its quarterly report. Did have a double B. Let's find out what some of the trends are when we watch cruise lines and hospitality. Coming up.
Why not wanting to break that? I think I'm going to go on a cruise within maybe this year. I'm going to do it. X-Spy is making an engulfing candle. If that plays out. I've not seen a GameStop Plus before. You guys seen that? It's in Ireland. Not like a real GameStop, they're just copying it, I think. Maybe it's a real one. Actually, they're closing down all their Europe stores though. Alright, SPY might be ready to make the move here. All the way back to open. HPCO. Making the top spot on my list. Silvergate. Those cover calls from this morning, they were up 60%. What's fun about weekly cover calls? I only did 2 though, could have done 13. Well, try and do more tomorrow.
Outlays on the line earlier than maybe in the past gives us confidence that people feel good about spending money on this particular outlay and that they are willing to commit with some duration in advance of that trip. What the cruise lines have historically articulated is that, you know, as people book earlier, it gives them more time to replenish their wallet and then at least allow them to spend more once they are on board again.
Yeah. Dan, you know, to run these ships, you noted how the company's operating and losing money at a loss. And, you know, to operate these ships costs a lot. First of all, the upkeep on these ships, to buy new ships, labor, food, inflation, oil, et cetera, et cetera. Do you see any sort of relief happening there? Because earlier we were talking about some of the hotels, which you sound like you like better. You said hotel and resorts seem to be the better play for shareholders right now. Why is that?
Yeah, it's an interesting point. We're obviously in a inflationary period, but travel demand has been very strong. A strong point that I make is that the cruise lines could have additional headwinds. Some of the things you pointed out, like fuel costs. In the past year, these cruise lines offered a lot of incentives, a lot of discounts to get people back on those ships. But again, it's been strong. There's been very strong demand.
Losing money at a loss.
The hotels don't have some of those same headwinds. They got the strong demand. They have the ability to raise prices with strong demand. And that's why I look to the hotel and resort sector much more than the airlines. And I've avoided these cruise lines.
Yeah. Dan, do you have a winner just quickly that you keep going to as a buy?
Jeez, human. No.
In our fund, advisor shares,
briefly. I never held
beds.
Prague or
we've had some very nice profits in Target Hospitality.
I watched
One of
it a
our
bit.
Top holdings right now is Blue Green.
I think I maybe traded it once.
Holdings. We also like Green Tree. Now we do like the major hotel brands: Hyatt,
I'm
Marriott,
not in that
IHG.
stuff though.
But we try to pick some unknown winners too.
Jamie, what names are winners to you? I know we may be facing a recession, but
people compare GME or BBY to, I think, right?
Yeah, I think we've been pretty favorable in the past on Norwegian, and you know, all of these cruise lines are trading undervalued. But I think from a certainty perspective and understanding maybe who these lines are catering to, because Norwegian has much more exposure to Region 7 Seas and Oceania high-income consumers, that would be our play there. We also have other names in this space like Sabre, which have really suffered in recent months, and you know, I think as business travel sort of recovers over time, a business like that would really stand to benefit.
Understood. Thank you both so much. Good to see you both. Dan Aarons, Jamie Katz, appreciate it. And thank you, friends, for being with me here on the watch list today and every single day here on the TD Ameritrade Network, 11 a.m. and 2 p.m. Eastern Time. All right, we're right around session highs. The Dow's up 300 points. Keep it right here. Oliver Rennick, Market on Close, is next.
Prague, yeah. Kava? No, I don't know about Kava. I don't think I've ever seen this one. Jeez. Kathleen wine mixer guy. Yeah, I think that's just a stock photo. What's this one all about? Oh, biotech. It's got quite a sustained rally after that good news. Jeez. The howl species. There's a little wick on GME. Let's get a power hour rally here, Silvergate. Make some new highs. Do it, do it. GME SPY's moving up more, maybe. Biora. I can't even see that on Weeble. This is the same thing. This one rallied after the reverse split. Some before, some during, some after. Lots of one calls for April 21st. It's not a whole lot of time now. You've got 3 weeks. 4 weeks, I guess, technically. Thing is, the IV on those calls is still super high. SPY moving up here, getting to the highs of the day, I bet. This is just a big down and back up to come right back where we started. Whee! Short wise? Oh, short WISA? Wow. Yeah, you were long on this one. Guess this was a hard one to time though. I don't know, what's the catalyst on here? Here's another one that rallied before the split. Before the reverse split. Yeah, we were talking, it was brought up on here last week a little bit. Preclinical trials on a building ways it gets large and test release medication. Yeah, biotech is kind of a roll of dice, but it works out. Works out well. Bullish on bug capsules. Oh well. Sold in the reverse split rally, nice, well done. I kind of rejecting that breakout actually now. get any pump on BY today, just that little VWAP move. That's not nice.
Shoot a drop, that it looks like the market's trying to move past this, and that we should more likely view this as a panic than a crisis. Now, we're still waiting to see how certain pieces of the puzzle fit together and how this plays out, but generally speaking, there is good evidence to think that this could be an isolated event from which we move forward with some degree of grace, perhaps. If we've learned our lessons on which financial institutions here are being a little bit reckless about their holdings and the concentration of their client base, ultimately we've seen money flow to the more stable institutions, and if that is a reflection of some confidence in the bigger banks, then ultimately we can perhaps put this into a bit of a silo without it becoming a major financial crisis a la 2008. Just nothing really close to that yet, especially when you consider that the stock market has been generally firm. Credit spreads have been fairly muted as well. You saw obviously a little bit of panic in some of the credit default swaps
like
for some of the larger financial institutions, but so far,
see if it comes back
right
down
now,
to VWAP
this
here.
is, I think, can be pretty much quarantined off to the companies that were really at the epicenter and the beginning of this panic that clearly had some fundamental issues. Look at bonds down today. That's a pretty big sell-off in treasuries. The 10-year is still sitting at 3.5%. Really hugging this line. Kind of looked like we were going to break down and below last week, but instead the 10-year holds firm here. Pretty good fight being put up by bond bears, and that is what you should be rooting for if you are rooting for America, if you're rooting for stability. That said, it may not be what you want to see if you're a tech bull, if you have been trapped in the bullish fever dream of a Fed pivot that the bond market technically is priced in, but the Fed has told us is not coming. And stocks have benefited from, with tech companies rallying, growth stocks having a great 10 days, a great year to date, in which most of that narrative has been linked to a Fed pause or pivot. The consensus has never been stronger that there will be a pivot after this financial event. So if things do smooth over without any further eruptions, probably puts the 10-year on a path back to go higher, finds support at this 3.5%. And based on what we're seeing today, even with the dollar still down on the session, the market for growth companies, crypto, and tech seems very sensitive here. You got Bitcoin down. Now there's Bitcoin-specific things going on with Binance now under the
you can change defaults,
firing line of the U.S. government.
You can manually change it also.
But generally speaking,
Secret.
The lack of performance in the high beta names
and
the lagging nature of tech, comm services, and growth themes on a day like today,
where
there's positive, encouraging news for the banks,
close out of one,
is a sign for bulls that
you
if
have
you
2
were
days,
betting
basically,
on a
you can
Fed
change the
pivot
tax
based
lot
on this
on
financial contagion risk,
I've had
that
to
bet
do that
looks
when
like
I've
it just got priced down over the last 48 hours quite significantly. Let's go to Caroline Woods at the New York Stock Exchange for some updates on some of the stories we talked about this morning. Not a whole lot has changed throughout the session here, Caroline.
You never have to really worry about getting assigned.
We did see the fade from Citizens Group throughout the day. Let's go back to the beginning of the session here. Tell us where we stand on that story.
Hey there, Oliver. I don't know. First Citizens still up about 56% on this news that it's buying a large portion of SVB, Silicon Valley Bank's assets. I'd say that's still a pretty impressive gain, seeing as it is spending $16.5 billion to acquire those assets. You said a fire sale price. Obviously, Wall Street looking at this as a good deal for the bank.
I don't want to. I screwed up the ticker,
I don't want to buy it back because then it reset my capital gains.
Okay.
Make it
Too many citizens in the banking world.
Right. Okay. Yeah.
So
Citizens Bank different than First Citizens.
Same amount of shares got called away, and then just change the tax lot IDs
is doing pretty well today.
to the new shares that I bought to get called away.
Really quickly. It includes about $72 billion of Silicon Valley Bank's assets. As I said, it was a discounted price of $16.5 billion. Around $90 billion in securities and other assets will still remain in the FDIC's receivership.
MBC,
so
that's right.
This helps get some of the assets off the FDIC's hands. It isn't a bank that's known for tech banking like SVB, obviously has a big VC community, but it does give First Citizens Bank a West Coast presence. The 17 former branches of SVB Bank opened as First Citizens Bank today. Also, First Citizens and the FDIC also entered in a loss share transaction. They agreed to share in the potential losses and potential recoveries of assets. The FDIC is expected to lose about $20 billion on this collapse. First Citizens Bank, as we said, shares up sharply today. Investors clearly looking at it as a good deal. It's also really a bank that's been growing rapidly. If you take a look after this deal, it's expected to have almost $220 billion in assets. It had about $40 billion just a few years ago, so it's really been rapidly expanding. It was around the 30th biggest U.S. bank at the end of last year and is expected to be in the top 25 now, so definitely helps grow. And investors clearly like this idea, as we talked about this morning. It's not really every day that you see a company spend a lot of money for an acquisition and its shares rise on the news, but a little bit of a different case here.
Okay, market showing some confidence here in the situation. I think that makes us feel pretty solid. Russell still up about 1.5%. Pretty good day, generally speaking. And banks overall staying pretty strong with the FRC and PACW up too. Those have been the weak links. So I think that we're seeing quite a bit of relief trade here underway.
Yeah, and there's a little bit of other news. There's a Bloomberg report that basically there's discussions among the government to really see if they can enhance emergency lending abilities, and that could also be giving some of these regional banks a boost as well, in addition to just the fact that nothing broke, aside from the news about this acquisition, nothing else broke literally over the weekend. I think that sentiment has definitely turned positive, but if you take a look, shares of First Republic up about 12% today. That is one that has faded off of the highs, still up significantly. PacWest Bank up about 6%. KeyCorp up about 6.5%. That did get an upgrade, as we talked about earlier, from Citi, as looking at that as a buy. So that could also be boosting shares. But this Bloomberg report basically says that U.S. authorities are considering expanding an emergency lending facility for banks, specifically could help give FRC, First Republic, time to kind of shore up its balance sheet. They said officials haven't yet decided on what support they could provide First Republic, if any. One of the several options being weighed is really expanding the Fed's offering. But they said even short of that step, they see First Republic as stable enough to operate.
Yeah, she's kind of saying what I was saying about how mergers, acquisitions usually
sentiment definitely seems to have shifted today, but when you take a look at First Republic, despite the fact that it's up 12%, it's still trading below $14 a share. This is a company that was trading as high as $145 a share just a couple months ago.
I expect the same thing with GME
still
at 10K
down very sharply on this news, but it seems like you kind of made reference to this earlier.
Long
it's
term,
not necessarily
it might add a bunch of value, but
crisis
initial
yet.
reaction,
I think that just the big concern at this point is a continued contraction in credit. If we do see this turn into a credit crunch, what it could, what the implications could mean. But we've had Yellen, we've had Powell, we've had the Fed's Vice Chair Barr all say that the banking system is sound and resilient. The Fed is,
Why is this rally
ensuring that all
sustaining?
deposits are safe, and I think
it's gotta
that's really
be,
kind of
they think it's going to
the
get bought.
key takeaway at this point.
Okay. Definitely seems like we are giving, to some degree, the benefit of the doubt of how other banks are responding to it. But at the end of the day, you put your money where your mouth is, and that's what the banks have done here. So, what choice do we have unless we want to
just added a bunch of bullish sentiment?
Hey, there's conspiracy theory out there. There's a little bit of chaos. There's normal speculation mixed in, but then there's also a little bit of madness throughout all
free
this.
money
so
for
I
all.
think that, yeah.
From all the people that paid taxes.
Yeah, we have Neil Kashkari saying that we're one step closer to a recession, that we still don't know how much of a credit crunch this could result in. So we're not out of the woods yet. But it just seems like sentiment has shifted, and that could just be because nothing else collapsed over the weekend.
Well, it's also like if you believe what the yield curve has been saying for a year, we've been one step closer to recession like every day. So,
it's been signaling that for quite a while.
Right. Okay. Thanks, Caroline, for the update here. I appreciate it. Let's continue the conversation with Jonathan Hertel, Executive Chairman of Hertel Callahan. Jonathan, welcome to the show. Looking at your notes, really like some of the stuff you're writing about here. Tell us what you guys are doing at Hertel Callahan and the nature of the way you view markets.
Well, the first thing I would say is we draw a bright line between investing and trading. And most of what you've been talking and most of what most people are talking about these days is trading.
BBY.
So, and they're not the same.
Ever be in your favor.
And what we're going through right now is a rationalization of 10 years of an extraordinary bull market. We had 22 times earnings, and you also had 0 interest rates. So to rationalize that is obviously it's a project, and there's going to be some damage along the way. We didn't have just rising rates; we had an interest rate shock, where they tripled or more, and that is a big deal. And so banks, because of the nature of their business, are exposed to that. If they haven't seen a credit cycle, and all they've had is 10 years of good times, and then that credit cycle starts to turn, there's going to be dislocation.
It's close to GME.
So this is not unusual. This is not, it's just, for those who've only been in the business about 10 years, it seems unusual because they saw nothing but up markets for 10 years. But this is a cycle. The Fed and the Treasury Department are well suited to deal with bank crises. This isn't 2008, where we had a bunch of opaque securities held in financial institutions all over the world, and nobody had ever run into that before. We've seen this before. So this is not a crisis. It is a normal rationalization of excess markets for 10 years, and we have a bear market, and we might even have a recession. It's hard to predict, but that happens.
What about the nature of the role bonds played in this? Now, it's kind of a chicken or the egg here for some of these banks. They had a lot of concentration risk in the case of SVB and some of the Silicon Valley-centric, San Francisco in the case of First Republic, where there was a lot of cash burn at the assets held by the folks who had their deposits at the bank. But then the fact that Treasuries got fried in the process as well by the Fed has people a little nervous that the stuff that's supposed to be secure and stable, Treasury bonds, led to a bit of a blow up. Is that any reason for concern here?
Treasury is secure, but if you own long-dated bonds and interest rates spike, you have losses.
What does that mean?
That's the way it works. So, and the thing is, with a Silicon Valley Bank concentration, anytime you're concentrated in an industry that has a huge run-up and then a pullback, this could be energy. If you had a bank that was focused on energy and the stocks had gone way up for 10 years and then all of a sudden dropped, you might have the same situation. It really is how the quality of the bank and how can they manage through the cycle. One of the things that is a techie kind of a thing these days is that it used to be when you had a run on the bank, people actually had to show up at the bank and say, give me my money. Today you can do it on your cell phone. And so that can happen pretty quickly at any bank, and it certainly happened at SVB.
Now, thinking about the long-term perspective that you apply, how visible is the future for the banks that are left standing after this, if there are going to be new regulatory measures imposed, maybe a few other deals or some combos along the way?
Better returns on short term.
Is now time then to try and buy the dip for long term on some of these financial firms, or is there going to be too much uncertainty and incoming regulatory measures?
So the incoming regulatory measures and the impact on the economy are all things that yet to be seen. Certainly, it makes sense that more regulation would mean tighter lending, and a lot of people have speculated already that this is another signal towards a slower economy. But we're chief investment officers, so we manage $20 billion. global assets. We're in almost every asset class, and we're managing money
Square's
for wealthy
pretty good
families
today,
and
7%
for
up.
institutions across the country.
Nice steady grind up.
And so the way we look at this is we have, for example,
fill that
plenty of
gap up
index
there.
fund exposure. And in those index, we're going to own banks like we own everything else. But what we're emphasizing today are really dominant growth companies, and they're really dominant businesses. And things that are benefiting from structural growth trends. So all the companies you know, like Microsoft and Google and SAP, and not just those kind of new era companies, but the railroad companies, for example, Union Pacific and Canadian National, and even overseas Airbus. So we're looking for things with moats, who are indispensable companies that no matter what's going on in the economy, if the economy is weaker, they're likely to gain market share, strong free cash flow. So rather than betting on the banks, we want to emphasize on the margin these high quality companies that are dominant in their industry.
I like that. What right now is a clear sign that a company is dominant? Is it stable cash flow? Is it ability to pay out a dividend yield? What's the checklist you go through?
Well, we look for growth. We look for a moat, so barriers to entry. So we look at the railroads. You can't build another railroad in North America because of environmental rules and so forth. So it's an oligopoly. So we look for things like that: operating moat, strong balance sheets, strong cash flow, great businesses. And we think buying those quality companies when the market is weaker sets us up for the long term. And so we are emphasizing that on the margin. We're also emphasizing U.S. on the margin. So U.S. is a growthier economy than the rest of the world. We have more of the companies like I just mentioned than other people do. We also are still shorter on duration. And if on one of the things that we think is sort of a clear signal is for tax exempt investors, the Treasury inflation protection securities are promising us about a 1.6% real return over the next 10 years. And so that implies that inflation, because the 10 years is about 3.5, inflation's running about, according to the market, about 2%. Now, other indications are today it's 5%. So long-term inflation 2, current 5. If the Fed can't manage that, you could have a bad experience. So the easy way to guarantee that 1.5% return is to buy TIPS. So we like that. So short duration, TIPS, emphasize U.S., emphasize quality stocks that dominate their markets.
All right, great stuff. Love the cross-asset analysis, Jonathan. Helpful for us, and looking forward to staying in touch. Appreciate you being here.
My pleasure. Thank you.
Thank you. Jonathan Hurtle's Executive Chairman of Hurtle Callahan. Coming up, let's talk some more bank dip buying. Our next guest is taking a look at Bank of America in particular. Chris Versace joins us for a catch-up on the situation as well. Stocks holding strong here. S&P about 0.5%, but the highlight.
All right, I'm going to do a recap video today, guys.
Small caps.
Got enough time. Got the means. Pretty slow day. But I'll recap a little bit of TA, some plays we made. And yeah, what the rest of the week maybe looks like. And that's what I got. Thank you guys so much for joining me. Thanks Ace for the memberships you've gifted. Thank Papa Ace if you're a new member. You can also jump on our Discord and I'll give you the Happy Crew roll. Link for that is pinned. Love up, like up, comment down. Happy Money sticks around. Here's our Twitter at Happy Money YT. Follow us on there, and then Discord server is pinned. You just buy one. Save you 29 years, 11 months. Thanks again, guys. Cut it off. I'll see you on Discord. See you on the premiere for the recap video. Should be out in about 25 minutes. Yeah, have a good day. Happy money. It's Happy Money Monday. Didn't even remember that. How could I forget? Thanks Human Shop. Thanks Blue Owl. Thanks Ace. Thanks Dennis. Happy Money Monday. What in the world was I thinking when I did my intro? What was I thinking? Thanks Cash. Alright, we'll see you guys soon. Thanks Bungie, thanks Dennis. Happy Money Monday. Did it.